Hello and a warm welcome on BTTV, ladies and gentlemen. It's a fine Thursday morning that's shaping up. Lots of positive developments, lots of no positive hopes that are coming in. Let's look at each one of them in detail. One, let's look at the markets, ladies and gentlemen. Wall Street has shown signs of profit booking. Dow Jones, Nasdaq indices have slipped a bit because the US Federal Reserve has held interest rates. People were hoping for a massive cut, but that hasn't happened, and that's the reason why you see a 1.5% downtick on S&P 500, profit booking on Dow Jones as well as the Nasdaq. And what's really interesting, ladies and gentlemen, is the next set of documents that we are going to show you. Look at the index comparison when you look at the Asian markets. A massive profit booking sell-off happening as far as the Kospi is concerned. On a weekly basis, the Kospi is down 18%. This is the daily change that you are seeing. The Nikkei is down 6.5%, and you have a fairly strong selling pressure profit booking happening on Taiwanese and Chinese markets as well. All this is very positive for India, and we have the net FII number at 2,931 crore rupees for yesterday. That's a very big plus. Now, after 4 days of sustained gains on the Indian market, you will see a bout of profit booking just as the Nifty tries to negotiate the 200-day moving average, which has been over the last 3 months a major hassle for bulls. What we also see are very strong crossovers happening in the healthcare space, in the India manufacturing space, as also the mid and small 400 index. So broadly, the underlying sentiment in market is really strong. The Nifty is likely to consolidate. Today you might see support coming in at 24,150, 24,100. If you get an opportunity to see the Nifty around 24,050, that's an opportunity to buy the dip and get back. Within strength, you see a lot of hectic activity in the healthcare space. I'll request the PCR to kindly show us the chart of the healthcare index. Strong stocks include Divi's Lab, PPL Pharma, and Laurus Labs, which are in top shape. The other space that is in top form is the manufacturing setup. Look at Bajaj Auto, look at APL Apollo, look at Ashok Leyland, Alchem Laboratories, and of course Aurobindo Pharma. So what we will see is a mild bout of profit booking on the Nifty, but the broader markets continue to look good. Abha in the studio. Good morning.
Morning. Thanks for that summary, Share. Lots of interesting, pockets that you highlighted. Let's see if our guest is with us as well, and we can get going on getting some perspective on some of those stocks too. Interesting to see how we'll move ahead from here, and particularly given, as you mentioned, that we do seem to be in some kind of consolidation zone. It gives us some scope to start to kind of look ahead from these levels. Nifty 50 for a week now up about 1.5%, encouraging that we're at 24,200 and above at this point of time. We've also got some of the heavyweights that are still likely to react on earnings and otherwise. We've seen the services sector see some good gains at this point, and Dabur numbers, profits have been a beat on estimates, but volume growth has missed the street estimates. So let's wait and see how that reacts to earnings this morning. And other than that, we've got iShares, Bajaj Housing, some of these specific names on the back of earnings or other news that will be in a focus as well. Let's take a look at Dabur, because we also got news, across FMCG, and I know it's not your favorite part of the market, Shell, but if we had to kind of just look at it for a moment, HUL seeing some sort of strong recovery under new leadership. It is starting to come together. Nestle numbers were pretty much, in line or reassuring to the market, because we have seen a little bit of a tick up coming in there. Dabur also, they seem to have, secured at least a top line, even if, altogether the volume growth isn't as encouraging.
Abha, the problem is, when you look at these old world FMCG giants, the ones that we grew up with, none of our new generation, Gen Z, is buying their products. I'll give you a very simple example. My daughter's 22. Look at her space where her makeup kit is. Zero presence of any brand that I grew up with. So these listed companies that you talk about are not showing volume growth as they should have, yet their valuations remain sky high. Look at Dabur, 667. I don't think so the stock has done anything at all for the last 5 years or so. August 18, the price was 488. We are now at 433. I'm talking about August 2018. So 6 years. And it's not as if children are not using products. They're just buying brands which are on the internet. So that's what is happening. If you look at a larger picture on Dabur, a 5-year chart, you'll see they have underperformed even the Nifty. And that's the problem, that they have been unable to see. 5-year, it's a 27% fall each year. And that's the pain. And that's true for Lever. That's true for many, many other FMCG companies who somehow are unable to attract themselves to Gen Z. And Gen Z is a very big spender.
Okay. Interesting perspective there, Shell. Let's move on to one that is your favorite, and that's Aisha.
Yeah.
Let's talk about that, because we've seen a 21.4% increase in consolidated net profit. Earnings have surpassed estimates, and it's, as usual, looking really good.
Yes. We'll shortly be joined by Rajesh Palvia. But you are absolutely right, Abha, and this is a multi-bagger as far as long-term wealth creation is concerned. A mobile phone and a bike is something that you can't keep away from a 21-year-old in India. And we have, over a period of time, gone up the value chain as far as bikes are concerned. Remember, the entry level for Aisha is a 350cc bike. So the market has moved up from 125cc, 150cc, 175cc. So the discerning audience is into the segment that Aisha is. Very good margins, and a similar kind of rally we are also seeing in Bajaj Auto.
Okay. Rajesh Palvia with us. Rajesh, good morning. Before we get into the Nifty setup, maybe we can complete this discussion on Auto and Aisha and Bajaj and, how good they're looking.
Yeah, hi. Good morning. So, as a whole, automobile space is looking attractive, and most of the stocks are attracting buying interest whenever there is a minor dip which is coming in the market, be it four-wheeler space or two-wheeler space. So, I think there is still room for further upside from the current level also. And if you look at the monthly data also, there is no as such, dip
Good morning. A very warm welcome.
consumption. So I think continuity of uptrend is there in most of the automobile space, and we believe that stock like Maruti, Eicher Motor, TVS Motor, Hero Motor, all these stocks are looking promising on the near term, short term chart. So if I go with the two-wheeler space, I think Bajaj Auto is placed very well on a technical setup. And I think the kind of buying interest which we have observed in last couple of months, I think Bajaj Auto one can keep on their buying list. And I think another leg of rally towards 11,800 to 12,000 we may see for Bajaj Auto. Again, from the lower level, Hero Motor is also showing strength. So risk to reward is in favor of Hero Motor, as correction is already took place and there is a fresh breakout on the weekly chart. So those who wants to enter at the lower level and recovery is taking place. So I think Hero Motor is also looking attractive, and possible upside towards 5,400 to 5,500 we may see for Hero Motor also. So here also one can deploy some long trade with stop loss of 5,000.
Right. Namaste Rajesh, a very warm welcome. Nifty now navigating the 200-day moving average. 4 days of very strong rally and a net FII number of 2,950 crores. Abha, monthly net sales are just 9,000 crores this month for FIIs, and we have 2 days more, which is today and tomorrow. Let's see what that number is. Rajesh ji, a broad understanding of the Nifty structure. What looks good, what looks bad?
So I think the kind of recovery which we have observed from the lower level, we have almost tested 23,600, which is almost 61% retracement of the entire rally of the June to July, and Nifty has recovered sharply from those level. And if you look at the bullish gap area, which was there on the 15th June, which was also filled by the market, and I think so technically, yes, there is a rebound and Nifty able to surpass the major call concentration area of 24,200. So I think in the near term structure, 24,200 is important level to watch for. If we continues to trade above these level for next couple of days, I think another 150, 200 point rally cannot be ruled out, as broader market has shown a sign of strength. Even in the derivative data also, broader market has shown a strong rollover compared to the previous month. So I think short covering is already played out on the very first day of August series. So looking at the recovery in the previous day, we do hold our bullish view. Keep your stop loss around 24,100. Possible target 24,400. If at all we crosses these level 24,400, then I think we may head further higher in the coming week. For Bank Nifty also, it's attempting to cross immediate resistance area of 57,300, 400 zone, which is immediate resistance for Bank Nifty. If at all Bank Nifty crosses those level, we may see some buying interest to emerge in the large cap private as well as PSU banking basket also, as still most of the private and PSU banking basket is still holding the ground on the medium term chart. So strength is there, but some follow-up buying is missing in the banking space. But looking at the other sector where we hold bullish view are pharma, automobile, real estate. These space are looking quite attractive on the near-term structure, and I think traders can find opportunity in these space for near-term trades.
All right, so those are a few of the levels that Rajesh is pointing out. Now, on Bajaj Housing Finance, the firm has reported a 22.6% year-on-year increase in net profit for the June quarter. So that's looking good. No surprises there, of course. And then there are, of course, some smaller stocks in the broader markets as well that have reported earnings or that will be in the news right now. But keep an eye today on Dabur. Keep an eye on some of these earnings reactions, like, for example, like an Aisha. Also talking about financials, and I think we should spend a little bit of time on that because, we've still been waiting for them to really pull their might when it comes to getting the index to higher levels. SBI in the news once again, further fundraising, this time almost 5,000 crores via additional tier 1 bonds is in the news for that reason. We were earlier eyeing some of the PSU names, but I think overall momentum has been missing across. Yes, some strength in the NBFCs, but otherwise still quiet on the banking pack. What do you say, Rajesh?
Yeah, definitely. So banking space is at this juncture it's consolidating, but yes, some of the NBFC stocks have done well, and I think momentum is there in the NBFC space. So those who wants to play BFSI, I think NBFC is a space where we could see good traction. Even the capital market theme is also holding up. I think a stock like AB Capital 361, BSC, all these stocks are holding the strength on the near-term, short-term setup. So on a financial, yes, NBFC, one can look at stock like L&T Finance is also trading about to 300 mark. So I think if it's continue above 300, I think here also we may see some traction on the higher side. Again, REC Limited is also showing sign of reversal on a daily weekly time frame. So there is a breakout on the near term chart. So if it continues to trade above 368, 365 kind of level, I think here also we may see some traction on the upward side. 385 to 390 would be the target. So yes, as you pointed out, yes, NBFC is one space where one can focus on. But on the banking space, those who looking for little positional perspective, or they want to buy for little short to medium term perspective, there are opportunity in the PSU banking basket, like SBI is continuously holding about 1,000 level, and I think if it's able to defend this level for next couple of days, I think SBI may also attract some buying action. Any breakout above 1040 can take this stock further higher to 1100 to 1150 also. So banking as well as NBFC, but for trader, NBFC is a space where one can focus on. Even on the gold finance company, Mannapuram is also looking attractive.
Right. Abha, we'll have to focus on Bajaj Housing for two reasons. The stock, which was issued at 70 rupees, went all the way up to 160 or so, and now is down at 87. So it's very close to its IPO price, and the numbers are fantastic. So for those who are looking to make a long-term portfolio of quality stocks, Bajaj Housing Finance listed in September of 2024 at 188 rupees was the intraday high, and now we have it at 87.
Okay.
So the best time to buy an IPO in India is after 2 years of its listing. And very strong earnings, net profit 23% higher, 715 crores, sales 17% higher, 3063 crores, and the stock is rock bottom. Let's see what Rajesh ji's view on Bajaj Housing is at this moment.
So it was an underperforming stock since last couple of month. Stock was in corrective phase. Yes, there is a sign of reversal from the lower level. Gradually, stock is attracting some buying interest at a lower level. If I analyze on the monthly chart since last 4-5 months, stock is able to defend its a major support area of 78 to 80 range, which is very important for the stock for near term to short term perspective. And as you rightly pointed out, stock is available at a very attractive price point from the near term to short term perspective, as risk to reward is in favor. So 82 is important level to watch for as a stop loss. And on the higher side, as stock has already moved up from the lower level, able to cross 20-50 day moving average, there is a sign of reversal on daily chart. So if it crosses above 92 level, I think some more buying interest will attract in this counter, and then possible up move towards 98 to 105 we may see for Bajaj Housing Finance. So 82 needs to keep as a positional stop loss target. We can focus around 105.
Okay, Rajesh, give us your top picks in the markets right now.
So I think, as I mentioned, pharma is a space where we are focusing, and I think Glenmark Pharma is looking attractive. In the previous trading session, there is a strong buying action took place, and looking at the recovery from the important support area of 2200, I think here there is a room for further more upside. Possible target towards 2350, 2360. We could see for Glenmark Pharma, so one can buy and accumulate with stop loss of 20 to 20. Another stock where we are focusing is on the automobile space, and I think the clear winner from that space is TVS Motor. Stock is holding strength across all time frame, almost hovering around all time high trajectory. The way stock is making higher top, higher bottom formation on daily, weekly time frame, we believe that continuity of uptrend would be there for TVS Motor. Possible upside towards 4250, 4300 we may see. So one can look to buy this stock also with stop loss of 4000.
Right. 8:51. We are, ladies and gentlemen, 10 minutes, 9 minutes away from the pre-open trade. Let's see how it goes. Gift Nifty is pointing to a 100-point downtick, which is fine. Last 4 sessions, we've added 500 points on the Nifty. Abha, South Korean markets have corrected 17% this month, this week actually, and it's the unwinding of the AI trade. It's like saying, take money from me and buy my chips. So it's a circular business that's going, and then the stock price goes up for an inexplicable reason. So that rally has now paused, and many of these stocks have corrected 30-40% from the peak. If the index is down 18%, you can well imagine what individual stocks have done. Ditto for Taiwan, weekly loss. Ditto for Nikkei, weekly loss. Ditto for China, weekly loss. And we still have today and tomorrow, so let's see how it shapes up. That is having a very good impact on India. Look at the Nifty IT index. It's up 17% in the month of July itself. And it's added a lot of strength to the Nifty. Rajeshji, your favorite IT stock, if at all?
So definitely, Shelji, the unwinding trade is taking place on the AI narrative, which was there in the market since last couple of months, and the most ignored sector in Indian market was IT, and the kind of recovery which we have seen in the last couple of days for most of the IT stocks from the lower level. It's really shows that again the value pickers are buying these IT stocks at lower level. From large cap space, my idea where I hold a bullish view based on the near term, short term structure, that is, take Mahindra. And I think here one can look at the kind of rally which we have observed. Possible target towards 1750, 1800, we may see for take Mahindra if it continues to trade above uh, 1580 mark. From mid-cap IT space, my pick the is Coforge, the clear winner. And despite of lot of volatility, this stock has shown resilience and the kind of strength which stock has delivered post earnings. I think here there is a potential to extend gain. 1850 to 1900 would be target if it's hold 1660 on the lower level.
Okay, so that's the view coming in. We now have 6 minutes of pre-open trades to discuss. Let's get a view in from PPL Pharma. Rajeshji, you were talking about strength that was coming into the pharma space, Glenmark in particular. What are the charts of PPL Pharma telling you, sir?
So clearly there is a sign of reversal on a daily, weekly, monthly time frame, and monthly charts are now negotiating with its falling trend line. And the way stock is holding on the near term, short term chart, I think there is a possibility of a breakout on the monthly chart also. Any move beyond 197 may trigger a breakout on the monthly chart also, and then possible up move towards 210 to 220 we could see for PPL Pharma. So after a long correction, now stock is in recovery mode. Strength is there on the near-term chart. One can look to buy with stop loss of 189. Upward target is 210 to 220.
We'll look at Asian Paints, ladies and gentlemen. The management will be joining us later in the day for a nice chat on how earnings have behaved. But two companies, which is CLSA as also another brokerage, has given an underperform rating on Asian Paints. We have HSBC talking about a price target of 2650 on as Q1 profitability hasn't worked pretty well. Let's excuse me. Rajesh, for you, Asian Paints.
So in the previous trading session, stock has shown, strong up move, but on the higher side, it has attracted again, profit taking. Looking at the near-term, short-term structure, still stock is holding strength as stock is comfortably holding about to 20-day, 50-day moving average. Stock has already broken out falling trend line supply zone on the daily chart. So I think any dip towards 2700 or 2680 would be again, a buying level to buy this counter. As after a long consolidation, stock has moved up.
30 July. So, I'll just give you an idea on what JP Morgan is saying on Asian Paint. It maintains an overweight with a price target of 2970 on strong Q1 profitability. But Nomura says it maintains a buy with a price target of 3750. CLSA on Asian Paints maintains an underperform with a price target of 1860. And HSBC on Asian Paints maintain hold with a price target of 2650. So basically किसी को कुछ नहीं पता.
Everybody is confused.
Everybody is confused. And you, ladies and gentlemen, have to only listen to Rajesh ji. for clarity.
Yeah. So as I mentioned, there is a strength on the near-term chart as such. Though stock was underperformer, but the kind of recovery post consolidation which we are observing on the near-term chart, I think if it's able to sustain about 2660, 2680 kind of zone for any kind of dip, I think again buying interest will come around those level as comfortably holding about to 20-50 day moving average and kind of accumulation which we have observed in Asian Paint at lower level. So monthly charts are showing sign of bottoming out on the long term chart also. So maybe we could see some more time to give a larger breakout on the monthly chart, but overall I think 2680, 2660 are the level where again one should review it, and it would be again attractive level to buy the counter for near term to short term perspective.
Okay, HSBC on Bajaj Housing Finance maintains reduce with a target price of 76 and a Q1 PAT beat, despite a Q1 PAT beating estimates on lower credit costs. The stock continues to have expensive valuation, and that remains concerning. Remember, it might be at 87 rupees, which is well below its all-time high of 188, but yet the market capitalization of Bajaj Housing Finance is 76,000 crore rupees versus a top line of 12,000 crore rupees. So, according to HSBC, it's still pretty expensive. A minute left, ladies and gentlemen, on the market. Bajaj Housing Finance, JP Morgan coming out with a neutral stance, target of 85 as Q1 PAT beat estimates on lower credit costs. Chaliye, jo hai so hai. That's the price move that has happened over the last 1 year or so. Thank you, PCR, for showing that. Nomura on Adani Ports maintains price target, maintains buy with a target of 2080. Okay, that's how it is. KPIT, the management will be joining us. Goldman Sachs says KPIT Technologies is neutral, price target of 637. HSBC on KPIT maintains hold with a price target of 735 as Q1 was in line. Okay, ladies and gentlemen, we'll now wait for the market to start. Mostly, well, I was expecting a downtick, but I will take it any day, 300 points higher. I will send a price, an air ticket to Rajesh ji. He will come back to Delhi and we will party.
Yeah. Yeah.
But
So
that's
if it
not
settle around 24,500, so I think yes, definitely we will have party.
that's not going to happen. This is going to stabilize a bit lower. But like I was saying, this is a very, 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 very welcome change. 24,387. This is super good. Let's just hope it adds 100 points and quietens down. Bharti Airtel 3% higher, Asian Paints 3.5% higher, Adani Ports 3% higher. This is looking good. HDFC Bank in the green. What are the top gainers? I've just marked them. Let me just look at the F&O space. I was marking Nifty. Okay. Top gainers in the F&O space are, ladies and gentlemen, Adani Ports 2.8% higher. Futures of Blue Star. I was telling you about the Consumer Durables Index doing well. Futures of Blue Star up 2.6%. PNB Housing 1.7% higher. Eicher Motors post earnings 1.5% higher, 7,900. A very, very quick look at NSE 500, and then we will again come back to Rajesh. Reddington 7.5% higher. Go Digit trading at multi-month lows, 6.5% higher, 270. HFCL order win 5% higher, 203. Niva Bupa up 1%, so it's going to be an insurance day. Let's see. Sirma earnings again 3% higher, 1382. You have ICICI Bank 0.2% higher, 1440. So it's looking good, ladies and gentlemen. Rajesh ji, your luck is rubbing on the market. You should come every day.
Yeah, I think the kind of opening which we are getting on an indicative tick is quite comfortable, and I think if we open around these level, we may see continuity of uptrend for today's session also. So I'll keep eye on 24,200 level. If it's hold, I think we may see another 100 point rally to unfold in next one or two trading session. And I think the sectors where we were focusing is also, showing uptick in the opening trades. So I think one can focus on stocks from automobile, pharma. This space may continue further, and as you pointed out, Bharti Airtel is also on a poised of giving breakout. So here also one can focus on Bharti Airtel can also extend gain.
Okay, fair point. Let's look at the Nifty now, 46 points higher. This is what I was telling you about. Mostly it should slip, but a quick break is what the plan is, ladies and gentlemen, and we'll be back shortly. Rajesh ji, as always, thank you.
Thank you, sir.
आराम से हाँ। सामान देना भैया।
अब आगे क्या करना है? वो पिट्टू की पर्ची में देखो ना।
पर्ची?
देखो कहाँ गई पर्ची?
नमस्ते
जी।
हाँ? मुझे पता है वो पर्ची में क्या लिखा होता है। आप चलिए मेरे साथ। व्हीलचेयर। पर्ची में ये तो लिखा ही होगा कि सीधे फ्लाइट में नहीं चढ़ना है, थोड़ा घूम के जाना है। अब पर्ची में शॉपिंग की बात तो जरूर लिखी होती है। थोड़ी पेट पूजा की बात कोई पर्ची में ना लिखे, ऐसा हो सकता है?
टिफिन लाए।
थैंक यू।
अरे पर्ची मिल गई।
पर्ची में तो ये सब लिखा ही नहीं था।
हम है ना आपकी पर्ची।
भीड़ में जो थाम ले।
सिर्फ वर्ल्ड क्लास एयरपोर्ट्स नहीं चलाते हैं, आपके सफर में हम सफर बन जाते हैं। अदानी, हम करके दिखाते हैं।
India today is a 346 lakh crore rupee economy, the fourth largest in the world, the fastest growing major economy. 10 years ago, 125. By 2028, the third largest, 12.2 lakh crore rupees of public capital expenditure this year, 6 times what we spent a decade ago. Highways at 34 kilometers a day, 1,46,000 kilometers and counting. Airports doubled. Port capacity doubled, and a 111 lakh crore rupee national infrastructure pipeline. But here is the truth every builder knows. Infrastructure and law are not two industries. They are one system. A port is a concession agreement before it is a berth. A highway is a land title before it is tarmac. A power plant is a purchase agreement before it is a megawatt. Nearly 70% of the national pipeline, energy, roads, rail, urban, sits in the most contract-intensive sectors of the economy. Investors do not simply fund projects, they fund enforceable contracts. In the road sector alone, 88,000 crore rupees of claims in 5 years. How fast the law resolves them decides how cheap the next kilometer is built. This is the work we do at White and Brief every day. Before a project breaks ground, land acquisition, title diligence, right of way. We de-risk the ground itself. Through construction, concession agreements, EPC contracts, power purchase agreements, financing. And when disputes come, tender challenges, bank guarantees, delay claims, arbitration, enforcement, and full service beyond litigation, corporate, finance, real estate, tax, regulatory. One firm, the entire life of a project. Practical, timely, aligned to your business. And the opportunity is only widening.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight emptying your pockets before you can fight. Well said, well said, well said. SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Let's take a look at the headlines this morning. The US Fed keeps policy rates unchanged, with 3 of the 12 members seeking higher rates. Inflation and global uncertainties flagging major concerns. But bond markets are doing their bit, with long-term yields significantly higher. US Fed dissent makes Wall Street nervous. Dow falls more than 1,000 points. Nasdaq down 11% from June highs. Investors again unload AI stocks, with Meta and Nvidia leading the fall. Despite weak global cues, good news for investors as FIIs stayed net buyers for a second straight session, infusing nearly 3,737 crore rupees in 2 days. It's also a big earnings day, with Bajaj Finance, Tata Steel, Mahindra & Mahindra set to report Q1 numbers today. Finance Ministry warns sustained rise in crude oil prices could unsettle fiscal deficit estimates. July Economic Review says growth and inflation numbers could also take a hit if tensions in West Asia continue. The government says Boeing found no abnormality in a Dreamliner fuel control switch after pilots of a Bengaluru-London flight flagged issues in February. Examination of the complete thrust control module still underway. And the currency this morning at 95.59 to the dollar versus 95.65, just a marginal appreciation. At least it's come off that 96 mark and trending at about 95.5. Gold is flat, silver under pressure. MCX gold is flat right now at 1.42 lakhs per 10 grams, and MCX silver is down 1,200 rupees, a further 1,200 rupees to 2.16 lakhs per kilo. We'll bring out the precious metals for you in a moment, but right now clearly no strength there. The US Fed Reserve has kept interest rates unchanged, but the decision has sent a strong message across global markets. 3 policymakers backed an immediate hike, while the Fed avoided giving clear guidance on what comes next. With long-term bond yields rising and Wall Street under pressure, investors are now questioning whether inflation risks are returning. Gaurang Shah joining us this morning. Gaurang, inflation playing spoilsport once again. We've been waiting for this, really. It has seemed inevitable, but now given the Fed commentary, it seems to have come right to the forefront.
Thank you so much, Abha, for having me on your show. Good morning to you and to all your viewers. Small disclosure, as regulation requires, all recommendations that I'll be sharing with you this morning on your show, Abha, they're part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So it's quite an irony, Abha. President Trump has been shouting from the White House for a rate cut. And here you have 3 members of the Fed voting for a rate hike. And the Fed chair has decided to keep status quo. I think there is a lot more than meets the eye, Abha, when it comes to the US economy. And along with that, there have been tantrums with respect to tariffs at various stages on various countries. And the fact that the markets in US have reacted to this, and there is an imminent fear of inflation taking up. So in this kind of a scenario, I think there is very little that the Fed chair can do. Of course, the US president can expect a lot more, but wisdom should prevail upon wishful thinking, Abha. And I think you should face the reality, get up and smell the coffee. Having said that, I think you let US do what they have to do, Abha. Honestly speaking, this is my personal opinion. I'm not really worried about what the Fed does, what the FI does. I'm more concerned with what the RBI does and what the domestic institutions are doing. So they have their own set of problems, and the fact that you mentioned AI-related sell-off. Abhay, this is a fact. It is not only in US, but it is across the globe. Whether it is South Korea, whether it is Japan, whether it is China, whether it is US, AI-related stocks or certain chip semiconductor-related stocks have reached extremely rich valuation. And this kind of verbatim and a fear in the market has to lead to a huge sell-off. And these sell-offs, Abha, investors hardly get any chance for an exit route. So I think we are in a very stable kind of a situation. Last week, Abha, we were at 23,600. Yesterday, we closed at 24,200 plus. Rupee, also you were mentioning about rupee. Rupee had touched 96.50. And from those levels, we've come to 95.50. So I'm quite optimistic about our market. Our earnings for this first quarter are relatively good, barring a couple of companies which have reported below expected numbers. And of course, the monsoon is also doing the catch-up. So today, of course, being Friday and last day of the week, you may see a little bit of selling pressure. The fact that in the last 1 week, we've come quite a long way. But overall, remain optimistic about Indian equity markets.
All right, fantastic. Shail is also joining us. And Shail, talking about the underlying strength in the market, even though on pre-open we're looking flat, but I think you said it's all about consolidation today, and we are at a healthy 24,200 and above.
Hello, Abha, and a very warm welcome to my very dear friend Gaurang. As always, he's looking spiffy on air. Eicher Motors earnings today, so maybe he can give a view. But yes, Abha, consolidation on the Nifty. And that's what we are hoping for after a 4-5 day rally. We've added 500 points. So the market will be defensive today. We'll look at healthcare stocks. We'll look at manufacturing stocks. And we'll pay attention to some frontline counters in the auto space, in particular, Bajaj Auto, TVS Motors, Eicher, of course, and Tech Mahindra and Glenmark. These are on my wish list, Abha.
All right. Well, we're just counting down to opening, and I just want to mention one of the reasons we're looking at auto is also earnings. Eicher has reported once again, as Stella said. Eicher is one that Gaurang and Shail can never get tired talking about, and today we might just give them reason to do it. But we'll just look at those opening ticks on that one, and also what's happening on some of the other two-wheeler names as well. We're almost at the first of the month as well, so soon we'll have those sales figures kicking in shortly. Nifty, as we mentioned, just about flat. Pharma, certain newsmakers. IT is steady. We're not following the global trend this morning. So those are some cues. And of course, other earnings like Dabur, for example, will also be in focus as we head into trade. All right, opening bell for you on your screen. There we have it. Just flat on the index. Touch of red. Nothing to be concerned about right now. Let's pull up some of the gainers and losers, give you a sense of the overall market breadth and what it's looking like this morning. Banks still trending weak, and unfortunately, we've just not seen them contribute. IT is bucking the trend and up about 0.8%. We'll take a look at what exactly is moving the IT index. Auto is quiet this morning, but we'll pull up Eicher for you in a moment. And Pharma is also looking good at this point of time. Real estate taking a little bit of a knock right now. Not too much strength coming in there this morning, and the broader markets are also relatively quiet. Let's pull up some of the individual gainers and losers for you. Let's take a look at the index movers. And there you have it. So Infy is the one that's driving the tech index. ONGC, HCL looking strong. Crude oil also has been cooling off just a touch. We've got Hindalco, Eicher reacting well on earnings. HCL is also actually contributing. So HCL and Infy from the IT pack. And Tata Steel, Cipla, Hero Moto pulling up the gainers list. So two-wheelers, we've got Cipla from the pharma pack that's also seeing a healthy uptick this morning. And on the downside, let's take a look at where some of the pressure is coming from. I'm pretty sure we're going to see a whole host of financials on that side. Asian Paints also down about 2.5% this morning. Adani Ports, Ultratech at this point, perhaps inflationary concerns. One of the elements here, Ultratech, Bajaj Fin, ICICI Bank, so banking and financials there. Advanced decline is pretty much even at this point of time. We're not seeing any clear move either way, but I would say banking and financials definitely lagging. And on the upside, some amount of traction in IT and pharma this morning. Shail, what are you picking up?
Abha, I can't peel my eyes away from Reddington. This is the distributor for the Apple phones in India. Consolidated net profit at 486 crores versus 275 crores a year ago. Revenue has shot up dramatically. EBITDA is at 710 crores versus 400 crores, and the margin is at 2.03% versus 1.54%. So margin expansion, profit growth, sales growth, and the stocks off to a flyer, 15% higher. Broadly, it's a stock-specific market today. Advanced decline ratios fairly okay. 1,000 shares in the green versus 1,600 in the red. Broadly profit booking as we have been expecting, but a stock-specific market all the way as far as prices are concerned. Apart from Reddington, you have Balakrishna Industries from the tire space, 9% higher. Sirma post-earnings, 2.8% higher. Force Motors, 2.2% higher post-earnings. And PPL Pharma taking it away, 2% higher. Abha.
All right, we are seeing a move on Balakrishna Industries on the back of earnings. Dabur, I want to bring up, that's actually taking a bit of a hit on earnings. Volume growth was a miss, and that's why the markets are not too happy about that one. Again, IFL Finance is in the green, 3-4%, but then we've got some of the other stocks on earnings that aren't doing so well. We've got Thangamayil Jewelry that's down 8-9% this morning. So it's a mixed bag from broader markets. But let's pull up Dabur for you, and let's pull up Balakrishna Industries. SML Mahindra is also up about 14-15%. So we've got these individual stocks in the broader markets that are standing out right now. Gaurang, you know, from a whole bunch of things that we've discussed, what's standing out to you? Which of these themes would you like to pick up?
I think, Abha, if this question is with respect to the earnings so far, whatever we've seen, Abha, then I think first of all the third sector banks reported numbers, entire BFSI segment actually, certain select public sector banks, certain select private sector bank. NBFCs, Abha, have done phenomenally well. Names like M&M Financials, L&T Financials, relatively well. Then autos have reported decent set of numbers. As my good friend, hi Shell, morning to you as well. Two-wheelers reported fantastic set of numbers, be it Bajaj Auto, TVS Motors. And I hope my good friend Shell would have now, I remember him having a 350 cc bike. I don't know if he's graduated to 650. I hope he has, so that when I come to Delhi, he has to give me a nice long ride on the expressway if it is feasible enough. Of course, I would be longing for that. But I think two-wheelers Royal Enfield should do relatively well. The kind of product offering that they have at the mid and the high segment. And of course, you know, export market happens to be extremely robust, not only for Royal Enfield two-wheeler business, but also for other two-wheeler manufacturing companies like Bajaj Auto, TVS, Hero MotoCorp. And my sense, Abha, is that maybe FMCG you were referring to Dabur. So there is a little bit of overhang of, this delayed monsoon. And as we all know, Abha, so semi-urban and rural India happens to be a huge market for FMCG companies. So maybe in the second quarter, you'll have a better picture from the effect. But not that most of the Tata Consumer did well, Nestle did well. HUL and Colgate yesterday, relatively better numbers than what the estimates.
Exactly. Absolutely. All right. So the government... Okay. The government has clarified on B787 fuel switches. They've said in the Rajya Sabha that there's no abnormality that's been observed in the fuel switch study carried out by Boeing Air India 171 on the crash mystery. The mystery, in fact, now deepening as apparently there has been no reported fault with that fuel switch. But the government has clarified that there's been no delay in the crash probe. That is definitely ongoing, but as of now, the fuel switch has shown no abnormality. Let's go across to Richa Sharma on this. Richa, if not with the fuel switch, then there are going to be several more questions raised on really what led to that crash.
Yeah, good morning, Abha. So as you mentioned, so the statement was given in the parliament yesterday. And yes, it raises questions because entire probe for the Air India crash that killed 260 people last year in June is around the fuel switch, because the initial probe did mention that fuel was moved from run to cut off, cutting off the supply. While the investigations are still on, and we know that final report is due in the first week of October, that's what the government has told the Supreme Court. But this incident, where the clarification has come, specifically deals with another Boeing 787, the same kind of aircraft, which flew from London to Bangalore, and the pilots on landing reported that they faced similar kind of issue where it was, did not stay at the run position. And this engine was sent to Seattle, where the DGCA team also went, and they found that there were no issues with the fuel switch. So, of course, it does raise a question mark because there being questions around B787 and the fuel switch malfunction. So, it does raise a question, but as we said, that we'll have to wait because all eyes are on it. It was the biggest, aviation accident that we saw in an aircraft, which was said to be, a good aircraft with a good record. So we'll have to wait and see what exactly the final investigation report says. But yes, there'll be certain questions, and it does give a support to Boeing, which has been saying that there'll be no issues with their Dreamliner aircrafts. So we'll have to wait and watch how ultimately the final particular 787 AI-171 inquiry leads us to.
Okay. Any indication, Richa, on how long this probe is meant to take?
So what the government has told the Supreme Court, because of the issue that has been delayed, they were supposed to release, as per the norms, international norms in 1 year, but they said that the investigation is still on. Now they have said that October is what they're expecting the draft report, final draft report to come out. And when it will be made public, because then it will have to be circulated to different agencies. So that's what is the timeline they've given to the Supreme Court. So let's see if we get the final report by October, which will in fact unveil the entire episode, what went behind before this tragic crash happened.
All right, Richa, thanks so much for bringing us all of that information. It's a very serious investigation and one of high priority with both the Supreme Court and the government involved. Rajya Sabha announcement coming in there, but yet no complete clarity on what the fault was. Hopefully some indication will emerge by October, as Richa has indicated. All right, as we've been speaking, we've moved just a touch into the green, and Shell, it's first 10 minutes of opening. Has the world changed?
Nifty's in the green. That's a big positive for me. Lotus Labs fresh record high. Divi's scorching it at 7,813. From the pharma space, from the FMCG space, Abba, surprise, Marico, a fresh record high, 884. Nestle doing a Kit Kat very well, 1521 fresh record high. And TVS Motors, Reddington are the ones that are making the cut on this list. So by and large, it's a good day, and advanced decline negative, favoring bears. Let's see how it lasts. I think 24,300 is a difficult nut to crack, but we will get past that as well.
All right, and I just want to point out that don't give up on FMCG just yet. Nestle is looking good, and I think Cheryl's point is valid that there may be better picks in the market at the moment, but they are fighting to stay relevant right now. So Dabur today a bit of a disappointment, but Nestle, for instance, has seen some pretty good numbers this time around. Gaurang, pharma definitely seems to be one that is far more interesting and on a tear, as Cheryl also pointed out. Anything from the pharma pack that you're liking right now?
So first, on the lighter note, just a couple of days back, the intelligent president of America announced a 100% tariff from 2028, and in 2029, 200% tariff. My question is whether he'll still be the president of the United States of America on a lighter note in 2028, or maybe even in 2027 as a matter of fact.
I'm glad you said on a lighter note, Gaurang, because there is nothing to do but to smile at news like that. And, there is just nothing else to be done now.
Honestly, and you have midterms coming in November, right, this year. So let's wait and see what happens. So, and the fact of Abha is that India is, then India will remain pharmacy to the world. There is absolutely, as of now, in the next maybe 5 to 10 years, Abha, there is not a single country that can come and compete with us in terms of our capability, capacity, R&D, and products, shoulder to shoulder. So we are in that position, and I think these kind of tantrums on and off will be heard and discounted by the market, especially I personally discount it. So we have choice across small cap, mid cap, large cap. And I've always mentioned one thing, Abha, that if you look at pharma, just don't look at manufacturing companies. You should also look at healthcare, that is hospitals, and along with that, you should keep an eye on diagnostic companies also, because all these three verticals create a huge universe called pharma.
All right, fantastic. Thanks so much, Gaurang, Shell, for joining us as always, and for that interesting discussion this morning. We'll leave it there. Back with you at 3 p.m. for market closing.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
आराम से आराम से। हाँ। सामान देना भैया।
अब आगे क्या करना है? वो पिट्टू की पर्ची में देखो ना।
पर्ची?
देखो कहाँ गई पर्ची?
मैंने।
नमस्ते
जी
हाँ, मुझे पता है वो पर्ची में क्या लिखा होता है। आप चलिए मेरे साथ। व्हील चेयर। पर्ची में ये तो लिखा ही होगा कि सीधे फ्लाइट में नहीं चढ़ना है, थोड़ा घूम के जाना है। अब पर्ची में शॉपिंग की बात तो जरूर लिखी होती है। थोड़ी पेट पूजा की बात कोई पर्ची में ना लिखे, ऐसा हो सकता है? टिफिन लाए।
थैंक यू।
अरे पर्ची मिल गई।
पर्ची में तो ये सब लिखा ही नहीं था।
हम है ना आपकी पर्ची।
भीड़ में जो थाम ले।
सिर्फ वर्ल्ड क्लास एयरपोर्ट्स नहीं चलाते हैं, आपके सफर में हम सफर बन जाते हैं। अदानी, हम करके दिखाते हैं।
The next chapter of India's growth begins with infrastructure. Adani presents the Business Today Infrastructure Summit 2026, where India's leaders and policymakers will discuss the India of tomorrow. Infra India 2047, building India's next growth cycle. Friday 31st July, New Delhi. Book your seat now.
Hello and a warm welcome, ladies and gentlemen, on Business Today Television. It's shaping up to be a nice Thursday. The Nifty in the green, and that's a very welcome change. Remember, a massive profit booking across Wall Street and a near panic selling pressure in Asian markets, in particular Kospi, in particular Taiwan, as also the Chinese markets and the Japanese markets. But in top shape, Nifty up fifth day, negotiating the 200-day moving average, 23 points higher. Let's look at the most active counters in terms of gains. Redington, stunning set of numbers, 15% higher. This is a stock which has delivered supernormal profits. This is also a record high. Already 566 crores worth of Redington has been traded, and both profit, top line, margin have expanded. And that's the reason, ladies and gentlemen, why you have such a strong move coming in. What else is trading in the green? Let's look at stocks apart from Redington. Dabur. Post earnings down 3.5%, and volume has missed estimate, volume growth. And that's the reason why the stock is languishing 3.5% lower. Star Health is up 0.5%. It says from its con call update that it sees 15 to 16% insurance revenue growth for FY27. The rupee has appreciated by about 11 paisa. That's a very, very big plus. And ladies and gentlemen, Sirma SGS, post earnings 5% higher, and the counter itself is doing pretty well in the markets, fresh record high. Fresh record high also on Radico Khaitan. CLSA says it maintains an outperform with a target of 4,830 as robust premium portfolio growth, margin beat and higher FY27 premium volume guidance on EPS upgrade. So these are the things that are happening in the market. We will be shortly joined by Mr. Rupak De to discuss what the markets are telling him as far as technicals are concerned. He's working with LKP Securities. Namaste Rupak ji, a very warm welcome. A pleasant surprise on the Nifty today, given the carnage that you're seeing in Wall Street, as also the build-up of very heavy profit booking and selling pressure in Asian markets. Your view on the market?
Namaste, Salinaji. My view is that Nifty started a bit with a positive note, striking off the global weakness. And I think Nifty is likely to remain positive till the time it is holding about 24,200 overall.
Okay. Your favorite stocks, Rupak ji, what are the charts telling you?
So I find that charts of Sirma Technology is looking great. I think there was a downward consolidation, then there was a significant upward movement. Positivity is likely to remain around the stock, and it's a buy around the current market price for a target of 1,500. On the lower end, 1,370 would be a stop loss.
Okay. Rupak ji, a view on Dabur. The stock is sort of in pain and 3.5% lower post earnings. What are the charts telling you?
So the stock has fallen below its recent consolidation. I think the negativity might surround the stock over the short term. I think selling would be a good idea at the current level with a stop loss of 430. And on the lower end, I think the stock might reach towards 400.
Okay, fair point. That's the view that is coming in on Dabur. As I was saying, very, very strong miss on volume growth and the market punishing it. Let's look at Syngene, 7.5% lower. The stock is now in pain, and that's again post earnings. Company says it will double down on CDMO business in FY27, but this is a disappointing stock over the long run. I'll request the PCR to show us the long-term charts of Syngene, 382 for you, and again this counter has disappointed long-term investors. The stock was at 918 rupees in December of 2022, and from then on it's fallen to 381. 381 actually is a low of June 2020. Rupak ji.
So the long-term chart is a bit discouraging. Overall sentiment remains weak for the shorter as well as longer term. And I think there's a support at 370. Below 370, the weakness might increase. So somebody who is holding the stock might hold the stock with a stop loss of 370.
Okay. So what we will do is show you the long-term chart of Syngene, and the rally that started somewhere in March of 2020 has seen the stock retrace. 1 second, please. Yes. So the stock has retraced 78% of that rally. We started at 241 rupees in April of 2021, went all the way up to 958 in December of 2024, and from then on it's been a uniform slide down, down, down and down, and now at 381, 384. So that's the structure of the market, ladies and gentlemen. Disappointment in earnings, disappointment across the board, and the market making it very, very apparent that it's very unhappy with the way things are progressing at Syngene. Let's look at other stocks. Sirma SGS says that the company will invest 25 crores with partner Kaga to expand electronic manufacturing and strengthen strategic collaborations as far as the company is concerned. What else is saying? Fertilizer maker seeks higher Kharif subsidy as rising West Asia linked input costs threaten domestic nitrogen, phosphorus and NPK production. That's the view that is coming in from the markets. Rupak ji, what are you observing at this point of time? Would you want to comment on Radico Khaitan, 1.4% higher, fresh record high?
The stock is witnessing a spectacular rally for the last so many months, and I think sentiment might remain positive till the time it is holding above 4,400. So one should hold the stock with a stop loss of 4,400. Below that, one might consider booking profit.
A detour into the markets, 9:30. Let's check what the volume structure is as far as prices go. Let me just take you to the volume buzzer section. Okay. Balkrishna Industries, a scorcher, 8% higher, 2253. Rupak ji.
So the particular stock is looking good on chart. However, on the higher end, we have a resistance for the stock at 2,300. The stock needs to clear the resistance of 2,300 to witness a directional up move.
Okay, fair point. What else is buzzing? TBO Tech. This is an internet space company in the business of tourism and online booking. Strong earnings yesterday, but the stock is down 1%, 1507. Star Health post earnings is up 0.5%, 602. You have Bajaj Housing Finance, a scorcher of an earnings because of lower credit costs, but the expensive nature of the stock has put a lot of brokerages cautious at current levels. The stock is down 2% at 85. Force Motors 0.5% higher, 17,440. And of course PPL Pharma. Let's take Rupak's view on PPL Pharma. This was amongst the strongest pharma stocks that I have seen. 57 lakh shares have been traded. Already 70% of 5-day average is done in terms of volume. Rupak ji, PPL Pharma.
So it has given an absolute breakout of its previous swing high, though. So the momentum is looking very strong, and I think 220 might be the level which might reach in the near to short term. So somebody who is holding the stock might continue holding the stock with a stop loss of 192.
Okay, fair point. 9:39. Let's look at. Are there any circuits today? Okay, okay, we will not talk about these graphs. Maybe Kesoram Industries, but not really. They've already sold their cement business. Not really, ladies and gentlemen, nothing much in terms of top gainers. My apologies, circuit limits, but all-time highs, Redington, TVS Motors, Nestle, Sun Pharma. Pharma is very well represented. Divi's Lab, Laurus Labs and Sun Pharma. These are fresh record highs. Sun Pharma changes a digit, now more than 2,000 rupees. Rupak ji, charts of Sun Pharma.
So chart is looking very strong. It has given a swing high breakout on the monthly chart. So the magnitude of breakout is very good, and I think the significant upside from here can looks possible. 2150, 2200 can be seen over the short to medium term. Whereas on the lower end, one should place a stop loss at 1950.
Okay. How about Marico? This has been one of the very few outperforming stocks from the world of FMCG.
The chart of Marico is looking good. What I found on chart is that the stock is trading in the blue sky zone, and sentiment is very strong on the monthly as well as on the weekly chart. I think one should place a stop loss at 870, then hold the stock for a target of 920, 950.
Okay. A final word on the structure of the market, Rupak ji, before we call it time.
So the market, the put writers are having good position at 24,000 or at 200. So 24,200 would be a very good support. Till the time it is remaining above that, I think sentiment might remain positive. Below that, some volatility might come in the market.
Okay, fair point. We'll call it time, ladies and gentlemen, 9:40, 9:42. The Nifty's done a good deed. 24,250 for today in the green, modestly. Nifty Bank showing signs of profit booking, but there's nothing at all that's stopping the Nifty IT index. Let's see the pullers and draggers in the market. Infosys contributing 15 points to the Nifty, up 2%. Reliance, 4 rupees 70 paisa higher, contributing 7 points. TCS, 30 rupees higher, 2475. M&M in the green, ONGC in the green, and so is Bharti Airtel. These are the top performing Nifty stocks. What's pulling the Nifty lower? It's the banks. ICICI, Axis, HDFC Bank showing signs of profit booking. Adani Ports, Eternal, and Asian Paints are also slipping lower. So we'll call it time, ladies and gentlemen, and wait for the market to come up with the performance, more performance during the day, and we'll be joining you shortly. Thank you for being with us. Thank you, Rupak ji.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
आराम से सामान देना भैया।
अब आगे क्या करना है? वो पिट्टू की पर्ची में देखो ना।
पर्ची?
देखो कहाँ गई पर्ची?
नमस्ते
जी।
हाँ, मुझे पता है वो पर्ची में क्या लिखा होता है। आप चलिए मेरे साथ। व्हील चेयर। पर्ची में ये तो लिखा ही होगा कि सीधे फ्लाइट में नहीं चढ़ना है, थोड़ा घूम के जाना है। अब पर्ची में शॉपिंग की बात तो जरूर लिखी होती है। थोड़ी पेट पूजा की बात कोई पर्ची में ना लिखे, ऐसा हो सकता है? टिफिन लाए।
थैंक यू।
अरे पर्ची मिल गई।
पर्ची में तो ये सब लिखा ही नहीं था।
हम है ना आपकी पर्ची।
भीड़ में जो थाम ले।
सिर्फ वर्ल्ड क्लास एयरपोर्ट्स नहीं चलाते हैं, आपके सफर में हम सफर बन जाते हैं। अदानी, हम करके दिखाते हैं।
India is a land of dreams. A land that gives you hope and wings to turn your dreams into reality. Our dreams define us, what we are, and what we want to be. They make us phenomenal. We are KPT Piping Systems, and we dream with a vision. A vision to make our people more healthy and prosperous. Our vision gives us a purpose, a direction, and passion to operate to outer limits of our potential. We don't make just pipes. We make 100% food grade certified PPR pipes. Our diversified range of products are making this world a better and healthier place to live. Our pipes transfer water and fluids safely at all extreme temperatures to your hospitals, schools, and all other important businesses. And we love doing this every day, every minute, every second. This is what makes KPT an exceptional. We are builders of a new future. A future that is bright and promising for everyone. We are proud members of prestigious organizations like FIIs, CII, and EEPC India. We have bagged some of the eminent business awards and We are the ones that inspire ourselves. Our partnership is focused to improve the future of real estate, energy, railways, aviation, and healthcare. Our research teams are creating the products that no one saw coming. Our meticulously designed plumbing solutions are changing the world. Our products have cut down the maintenance costs of our clients by millions. Today, we have a long list of corporate giants who have joined hands with us and are using our products. We have delivered more than 6,000 projects worldwide.
I call my grandfather Bauji, and he is a role model to me. He is always advised that if you're making the life of people healthy and convenient, then you are successful. We as a company and as a family believe in the same value system. The products that we make reflect our values. Humanity is our priority.
We are working with Indian government to achieve their vision and mission. We are executing massive projects like Jal Jeevan Mission, Assam, Rajasthan, and Karnataka. Our products are building a better and stronger Indian railways. And we are proudly associated with Indian Military Engineering Services, a business that is focused on welfare of humanity. Our motive is to uplift the quality of life for people, communities, and planet. We simplify. We perfect. We are KPT Piping Systems, a new generation pipes. Smart pipes for a smart future.
The next chapter of India's growth begins with infrastructure. Adani presents the Business Today Infrastructure Summit 2026, where India's leaders and policymakers will discuss the India of tomorrow. Infra India 2047, building India's next growth cycle. Friday 31st July, New Delhi. Book your seat now.
आराम से सामान देना भैया।
अब आगे क्या करना है? वो पिट्टू की पर्ची में देखो ना।
पर्ची?
देखो कहाँ गई पर्ची?
नमस्ते
जी।
हाँ, मुझे पता है वो पर्ची में क्या लिखा होता है। आप चलिए मेरे साथ। व्हील चेयर। पर्ची में ये तो लिखा ही होगा कि सीधे फ्लाइट में नहीं चढ़ना है, थोड़ा घूम के जाना है। अब पर्ची में शॉपिंग की बात तो जरूर लिखी होती है। थोड़ी पेट पूजा की बात कोई पर्ची में ना लिखे, ऐसा हो सकता है? टिफिन लाए।
थैंक यू।
अरे पर्ची मिल गई।
पर्ची में तो ये सब लिखा ही नहीं था।
हम है ना आपकी पर्ची।
भीड़ में जो थाम ले।
सिर्फ वर्ल्ड क्लास एयरपोर्ट्स नहीं चलाते हैं, आपके सफर में हम सफर बन जाते हैं। अदानी, हम करके दिखाते हैं।
The next chapter of India's growth begins with infrastructure. Adani presents the Business Today Infrastructure Summit 2026, where India's leaders and policymakers will discuss the India of tomorrow. Infra India 2047, building India's next growth cycle. Friday 31st July, New Delhi. Book your seat now.
मैं प्रस्ताव करता हूं कि विधेयक को पारित किया जाए। प्रश्न ये कि विधेयक को पारित किया जाए। जो सदस्य इसके पक्ष में हाँ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्ष में प्रस्ताव स्वीकृत हुआ और विधेयक पारित हुआ।
The anti-paper leak bill is passed after nearly 2 days of heated debate in the Lok Sabha. But the final day wasn't about the bill. It became a bitter political showdown over the student protest and the July 20 police crackdown. Day 2 began with Leader of Opposition Rahul Gandhi taking the floor. But instead of dissecting the bill, Rahul turned the spotlight on the July 20 crackdown. After his comments on Home Minister Shah was expunged, Rahul repeated his charge that it was Home Minister Amit Shah who authorized the use of pellet guns against protesting students and demanded an explanation.
Mr. Amit Shah was responsible for the brutality that was carried out. There are two possibilities. Possibility number one is he gave the order to shoot people with pellet guns, to beat people with lathis with nails, to use electric batons on people, or he didn't know it was happening. If he didn't know it was happening, he's incompetent. And if he ordered it, he's culpable.
The allegation triggered a storm inside the House. Treasury benches erupted in protest. Ministers were on their feet.
सर, ये आप सोचिए आप कितना गलत बात बोल रहे हैं। आप कल्पना कर सकते हैं, आप बिना सोच समझ करके जो इस्तेमाल कर रहे हैं, और किसने फायरिंग का ऑर्डर दिया? What is going on? कैसे बोल सकते हैं आप? कितना गलत बात करते हैं, ऐसा मत बोलिए। राहुल गांधी जी, आप नेता प्रतिपक्ष हैं, गंभीरता से बात बोलना चाहिए। आप बिना तंग करके यहाँ ऐसा बात करते हैं, ये ठीक नहीं है सर। अभी तुरंत आप किस बेसिस पे ये बयान दिया है?
As the chair struggled to restore order.
How can he say that somebody ordered firing? You can make statement outside in the house. You cannot make that statement. It is a serious allegation. It is a breach of his own position and privilege. This is not proper. ऐसा नहीं हो सकता है। आप कैसे बोल सकते हैं?
माननीय प्रतिपक्ष के नेता, मेरा आपसे आग्रह है, एक मिनट, आप विधेयक के बोलो और आप कोई भी तथ्य, कोई भी बात कहें तो आप खुद इंक्वायरी कर खुद निर्णय की स्थिति में नहीं बने। ये आप विषय कह सकते हैं कि इस लाठीचार्ज की इंक्वायरी होना चाहिए, लेकिन आप किसी व्यक्ति विशेष, अखिलेश ने भी कहा, आप इंक्वायरी की बात कर सकते हैं, लेकिन आप कहें कि नाम लेकर किसी का कहें, ये उचित नहीं है।
Union Minister Jitendra Singh rejected the allegations, saying the Home Minister neither orders police action nor firing.
सबसे पहली बात तो ये कि जब वो कहते हैं कि गृह मंत्री जी ने गोली चलाने का आदेश दिया और उसे ऑथेंटिकेट करने में नाकाम है, तो सबसे पहली बुनियादी बात कि कहीं भी गोली चलाने का आदेश कोई मंत्री नहीं देता, वो मैजिस्ट्रेट देता है, एसडीएम देता है, डीएम देता है। हम सब विधायक रहे हैं, सांसद रहे हैं, हमारे अनुभव में है। इसका अर्थ ये हुआ कि उन्हें सार्वजनिक जीवन का भी अनुभव में अभाव है। दूसरी बात, ये बार बार स्पष्ट किया गया कि गोली चली ही नहीं, अश्रु गैस, टीयर गैस का इस्तेमाल हुआ, लेकिन जब गोली चली ही नहीं तो आदेश देने का सवाल ही नहीं पैदा होता, और आदेश देने का अधिकार मैजिस्ट्रेट के पास रहता है, मंत्री के पास नहीं।
The confrontation then turned personal. During the heated exchange, Rahul Gandhi used an expression described in unparliamentary by the Treasury benches. The chair ordered the remark to be expunged from the House records, giving the Treasury benches another opportunity to target the opposition. But beyond the political theatre, the pellet gun controversy refuses to go away. India Today had earlier reported that at least 4 student protesters suffered pellet injuries during the July 20 crackdown. Hospital records accessed by India Today documented pellet wounds. With the opposition staging a walkout, the Treasury benches passed the anti-paper leak bill.
प्रश्न है कि खंड 2 से 5 विधेयकांग बने, जो सदस्य के पक्ष में हाँ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्ष हुआ। खंड 2 से 5 विधेयकांग बना। प्रश्न ये कि खंड 1 अधिनियम सूत्र और विधेयक का पूरा नाम विधेयकांग बने, जो सदस्य के पक्ष में हाँ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्ष हुआ। खंड 1 अधिनियम सूत्र और विधेयक का पूरा नाम विधेयकांग बने। मंत्री जी अब प्रस्ताव करें कि विधेयक को पारित किया जाए। मैं प्रस्ताव करता हूं कि विधेयक को पारित किया जाए। प्रश्न ये कि विधेयक को पारित किया जाए, जो सदस्य इसके पक्ष में हाँ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्ष में प्रस्ताव स्वीकृत हुआ और विधेयक पारित हुआ.
The bill has been passed, but Parliament's fiercest battle wasn't over exam reforms. It was over the crackdown that followed the protest. The legislation may promise tougher action against paper leaks, but the questions over the July 20 police action, the alleged use of pellet guns, and who must answer for it are far from settled.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
The next chapter of India's growth begins with infrastructure. Adani presents the Business Today Infrastructure Summit 2026, where India's leaders and policymakers will discuss the India of tomorrow. Infra India 2047, building India's next growth cycle. Friday 31st July, New Delhi. Book your seat now.
आराम से हाँ। सामान देना भैया.
अब आगे क्या करना है? वो पिट्टू की पर्ची में देखो ना.
पर्ची?
देखो कहाँ गई पर्ची?
नमस्ते
जी.
हाँ, मुझे पता है वो पर्ची में क्या लिखा होता है. आप चलिए मेरे साथ. व्हील चेयर. पर्ची में ये तो लिखा ही होगा कि सीधे फ्लाइट में नहीं चढ़ना है, थोड़ा घूम के जाना है. अब पर्ची में शॉपिंग की बात तो जरूर लिखी होती है. थोड़ी पेट पूजा की बात कोई पर्ची में ना लिखे, ऐसा हो सकता है? टिफिन लाए.
थैंक यू.
अरे पर्ची मिल गई.
पर्ची में तो ये सब लिखा ही नहीं था.
हम है ना आपकी पर्ची.
भीड़ में जो थाम ले.
सिर्फ वर्ल्ड क्लास एयरपोर्ट्स नहीं चलाते हैं, आपके सफर में हम सफर बन जाते हैं. अदानी, हम करके दिखाते हैं.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is where we focus on our earnings special edition. Chalet Hotels is where we put the spotlight on. The company's reported its numbers. The net profit has slipped by 57.6% this time to 86 crores. We've also seen the revenue come down by 42.7% at 512 odd crores. We've also seen the company's operational profits also slip down by 34.5% to 234%, although the margins have come in higher at 45.7% as well. Let's actually decode the earnings with the top management of the company to help us understand what to really focus on and what's the outlook for the rest of financial year 2027 as well. Let's welcome Shwetang Singh. He's the MD and CEO of Chalet Hotels joining in. Warm welcome to you, Mr. Singh, and thank you so much for taking the time out. Now, at the first glance, the quarter looks weak with a lot of parameters that I read out, revenues, profits, EBITDA also coming down. But you've highlighted that the comparison is skewed by the residential business. Could you help our viewers understand the underlying performance of the core hospitality and annuity business and why the headline numbers do not tell the full story?
Sure. Good morning, Sakshi. Thank you for having me on your show. No, absolutely. You know, when you look at our numbers at first glance, it might appear as you read it out. But the truth of the matter is that Chalet as a company is not a residential company. This was a one-off project for us. And what happens typically in residential is that you book profits from time to time and sales from time to time. So we had in this last quarter, in this quarter last year, booked our profits for the towers A to I think it was A to J, and that was because, and what that had resulted in is a near 100% growth on the revenue and the EBITDA margins, and actually as a result our stocks had done very well. But that's not a true interpretation. Our core business is hospitality and commercial, and we define core by saying something that will have continuity, Residential was one-off, as I said, and you get in and you get out. So I would urge you and your viewers to look at our business in that light. And if you look at it from that perspective, we have done very well given the geopolitical situations and the uncertainty of the market. We have actually grown about 10% year on year on the revenue side, but more importantly, we have grown 15% on our EBITDA on our EBITDA value, and that has resulted from mainly commercial, but also been propped up by the hospitality numbers. If you look at hospitality numbers alone, the growth in revenue has been nearly 9% and EBITDA growth has been 11%. And a lot of this is because of fantastic asset management practices that we have put in place and cost control that we had envisaged even before the situation got worse in the Middle East.
Okay. Mr. Singh, if we talk about your revenue per available room, that's also improved 6%. If you could give us the drivers of this performance, and are you now seeing the demand normalize as we move into the second quarter?
Yeah, so a 6.5% growth is a decent growth. We would have obviously loved it to be higher. But if you break down that into first our leisure portfolio, which has done very well, we have had a 19% growth on that. Ex-Mumbai, if you remove MMR, we have had a growth of 10% on the RevPAR. Mumbai has pulled down some of our numbers, but partly it is because of the fact that we are under construction in Powai, which is one of our large hotels, which is improving over the next couple of quarters. We will be back to business as usual. We are building 0.9 million square foot of office space there. As a result, we have lost some occupancy there. Also in 4 Points, Navi Mumbai, which was under refurbishment. Again, mercifully, that has all been completed and we'll be relaunching the hotel with a fresh new, brand new look this quarter itself. JW Sahar continues to do very well. We have done well both on the rate growth side, and we have beaten the market comfortably when it comes to rate growth. On the occupancy side, it's always been a very high performing hotel, so we have been steady on the occupancy. As a result, MMR growth doesn't look as exciting as the rest of our portfolio, but overall, as you said, 6.5% is still very commendable. What's looking forward to the future, both this quarter, which is still doing up and down as Mr. Trump is still deciding what to do with the Middle East. Having said that, some amount of excitement has come back. As a portfolio, our business has been very dependent on foreign tourist arrivals. Yes. And some of that sentiment is starting to come back. The social calendar for the half two of the year is very strong. So overall, we are expecting a very steady coming quarter and a very strong second half of the year.
So, since you do see some positive signs there, give us an understanding for the rest of FY27. Where are you going to be seeing more action? Is it inbound corporate travel, or do you see the demand mix to evolve? How do you see that over FY27 particularly?
So look, Sakshi, the macro indicators of the industry are still strong. The demand-supply arbitrage still exists. Supply is barely, especially in the category that we operate, is somewhere between 5 and 6% if you look at pan-India. So, the supply continues to stay muted. And more importantly, it's the beauty of our industry is that supply can't sneak up on you. So you can see it coming 4 to 5 years out. So the supply side remains muted. The macros of the country stay strong. The domestic business is very, very strong. As earnings improve for the corporates and the individuals, there's more leisure travel happening. Thanks to the clarion call of the Prime Minister, a lot of Indians have turned towards domestic travel once again, and it's all very exciting times. So, overall, I think the numbers look very steady and healthy. It is very difficult in today's environment to sort of forecast the business that far out. So I would refrain from doing that, but I would continue to say that we should be in the strong double digits through the year.
Right. One of the highlights was the margins expansion for you in this quarter. So excluding the residential business, EBITDA margins have actually expanded over 230 basis points despite a mixed demand environment, like you pointed out. Give us an understanding of how do you see this sustain for the rest of FY27 also?
So again, breaking this down, we have had a 1% margin growth in the hospitality business. And already in the hospitality business at around 45-46% margins, we are at the top of the heap. We are the gold standard of EBITDA margins if there was one in the industry. We are also aided by our commercial business, which is practically running at 100% EBITDA margin, because whatever comes through in the rent sort of flows down to the bottom. How sustainable it is, as you start to hit or get closer to the 50% mark, especially in the hospitality business, it starts to get difficult to then improve the margin percentage. But having said that, we continue to deploy all sorts of asset management practices, but most importantly, thing that works for us is our asset sweating initiatives. And if you were to look at any part of our business, at all times we are looking to convert non-revenue generating areas into revenue generating areas. One quick example is where we converted a small lounge for the residents into a high energy bar at Powai, and it's already clocking in 1 crore of revenue per month. So that kind of stuff is constantly happening within the portfolio, and we continue to therefore improve our margins as well as our revenue from that.
So your annuity business continues to be resilient. Your occupancy at 91% and rental revenues growing at 18%. Give us an understanding how much more room is there for further occupancy and rental growth from here, particularly with the Bengaluru leasing activity also that you are stepping up.
See, look, we are at about 2.3 million square foot of office space that's currently operational, of which 91% is occupied. So in my mind, expecting 100% occupancy is a bit remiss. So if we were to run at about 95-96% occupancy, then we have some distance to go. More importantly, about 29 crores of what we call exit revenue coming from commercial business, which is basically in the last month we'll book 29 crores of revenue on a monthly basis. So that should climb up to anywhere about 34-35 crores overall and give us a very steady 350-400 crores coming from that. Having said that, we have another 0.9 million square foot under construction, which will complete the project by the end of this financial year, and should add another 150 crores to the revenue. So all in, by the time this is all stabilized and absorbed, we are looking at a 450-500 crore business coming from commercial alone. And as I said, it all flows through to the bottom, so we love this business.
Okay. You also have multiple projects under execution right now, including your Taj Delhi International Airport, Cygnus 2, Powai, Ritz-Carlton, Hyderabad as well. Give us an understanding, and if you could walk us through the execution timelines, and when will these assets start to meaningfully contribute to your top line and to EBITDA?
Look, that's a great question. I don't seldom get asked that. I only seldom get asked that question, but it is a very important phase in our expansion cycle. And we are an asset-heavy business traditionally, although we are now testing out operating our own brands and operating franchise hotels. But we have been traditionally an asset-heavy business, and we are entering a clear execution cycle. If you look at our capex deployment over the next 5 years, it's significant, and it's at the top end once again of the hospitality pool as we stand today. Having said that, the two big projects that we expect to complete by this financial year end and maybe in the first quarter of next year is the Taj. It's a 380 room hotel, which we should have at least 70 rooms operational by the end of this year, and the balance coming through in the first quarter next year. Cygnus Powai is actually our commercial space. That's the 900,000 square foot that I was speaking about. That should also be substantially complete by the end of this year, and the last bits may finish by the first quarter of next year. So these two alone will release a lot of what is the capital work in progress today. What's also exciting is the other projects that are under construction. Today, we have an announced pipeline of about 1,600 rooms over the 3,380 that exists, taking us to close to 5,000 rooms. There are a few other deals that are also in play today, which will continue to push this number up and get us closer to the 6,000 number. Having said that, the projects that we are now speaking of that are on the floor is the Ritz-Carlton in Hyderabad, comes through by FY29. There are two projects in Goa where we are waiting for some planning permissions. Only then we will be able to comment on exactly when this will play. And then there is These are our big projects that are in play as of now, and they should start to meaningfully contribute to us FY 28-29 onwards.
Okay. Given the healthy operating momentum in your core businesses and the upcoming project launches, are you confident of delivering stronger earnings growth, especially in the second half of the calendar year as well? And which business segment do you expect to be the biggest growth driver for you now?
Yeah, look, given the VUCA world that we live in, it's getting increasingly tough to forecast our business. And just in every week, every 15 days, we seem to be revising our forecast. So what we focus on is not quarter to quarter anymore. We just focused on the long term. And in our long-term view of the industry, we believe that we are in a very good shape. All cylinders are firing. The demand-supply arbitrage still exists. So we expect this business to continue to stay strong for the foreseeable future. We don't see any reason for a slowdown. There continues to be absorption of the new rooms that come into play. So we have a deep belief in this business, and we certainly see the India macro story playing out as it is with the other industries.
Okay. Give us an understanding on the robust development as far as the pipeline is concerned. How are you balancing both capex as well as debt levels, shareholder returns, and should investors expect any changes to your own capital allocation strategy over the next 12 to 18 months?
No, look, we are in very good shape when it comes to debt levels. In fact, our debt levels were at about 2,000 crores net level. Net debt was 2,000 crores last quarter. It has increased marginally. We did some strategic acquisitions and did some capex. But if you look at our capex deployment, there are 2-3 things that come into play. The first thing is that we have great internal accruals coming through, and that itself is sufficient to sort of help us with our expansion plans of what's coming in the next 3 to 5 years. The second thing is that our commercial business, and that's the beauty of commercial business. It's much more steady, much more predictable. And at about 300 odd crores, it already covers all our debt requirements, and we are actually effectively having a debt-free situation on our hospitality assets. So we have lots of headroom to grow to what is seen as acceptable levels of debt by the streets. And against that, we have plenty of dry powder available should we want to do expansion even beyond what's in our pipeline. So we remain very, very excited about this. Having said that, I would also like to add that we are very cognizant of the fact that we need to continue to invest in our existing hotels, and they have earned us a lot of money, so we need to give some back to them. And we continue to invest in our existing hotels. We have refurbishment works going on in many of our older hotels as we speak, and that investment will also continue. So from a capex side, we are very well positioned, both on our balance sheet as well as on the debt, to be able to sort of take care of all these capital requirements.
Fair point. All the very best to you for the coming quarters as well. Thank you so much for speaking to our audience as well through this platform and for explaining your earnings insights as well. All the best, sir. Thank you so much for taking the time.
Thank you. Thank you. Bye-bye.
All right, viewers, we'll wrap it up on that note. As far as this earnings special edition is concerned, it's the earnings season, which is in full peak, and we are going to be getting you many such conversations on the platform. So stay tuned. In case you are heavily invested in certain stocks, you might see the management talking about what is the vision on their companies.
The next chapter of India's growth begins with infrastructure. Adani presents the Business Today Infrastructure Summit 2026, where India's leaders and policymakers will discuss the India of tomorrow. Infra India 2047, building India's next growth cycle. Friday, 31st July, New Delhi. Book your seat now.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
everyone, welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our special edition What's Hot, where we focus on the biggest buzz on the day street. Let's also welcome our guest on board. We are joined by Mr. Sudeep Bandyopadhyay on the platform as our market veteran on the show. Warm welcome to you, sir. Good morning. How are you looking at the market suddenly, which has revived in its sentiment of late, despite the fact that crude oil prices are still very volatile? Overnight, we've also seen US Fed keeping the rates steady, and we have also seen some improvement as far as the foreign investors' approach to India is also concerned. And of course, the earnings season is in full peak. How are all of these factors leading to where the markets are headed, sir?
Good morning, Sakshi. I think, the most important, single most important factor is oil prices. And that to a great extent depends on what's happening in West Asia and the ongoing war between US and Iran and its associates. So I think that's got the single most important factor. And as and when things hot up there, I think oil prices shoot up and markets start coming down. And when things start cooling off, markets also improve along with oil prices coming down. But that's known and that's been happening for quite some time and it continues. Beyond that, I think a couple of factors you mentioned, and I would also like to reiterate, a US keeping interest rate where they were, I think is a good sign for overall markets. And that got reflected in the reaction of the US markets as well as other markets around the world today morning. So that's one positive. The second, of course, as you said, the corporate results for the Q1, which has been coming out thick and fast. I think by and large, it's the results are shade better than expectations. On an average, that's what I would say. And that also is cheering the market. The third thing, which is positive, I would say, the macro data which is coming out from Indian economy, whether it's the production numbers, whether it's the rainfall, actual rainfall, what is happening, things are looking up, and that again is cheering the market. So the mood generally is positive. As far as foreign investors are concerned, there are a lot of question marks over the valuations of the AI-related companies, and there has been some correction there, and that is enthusing, Indian market as well, because we all have been calling India anti-AI trade, and I think that anti-AI trade is gaining a little bit of traction. I won't say that there's a flood of money coming in or there's a massive excitement. That's not the case, but people have started looking at India as a hedge against the overexposure which probably they have on the AI-related companies in US and other markets like Korea.
Okay. Sudeep sir, also wanted to ask you on the IT space. We've discussed this deeply with you on many occasions. There's been a very smart rebound in the month of July. The index is up over 16-17% as well. Many of the stocks, TCS, Infosys, Wipro, Tech Mahindra, these stocks have also come off from their lows, almost 20-30%, in many cases 35-40% in some cases too. How are you looking at this reversal that's being seen on the IT pack? Is the worst already behind, or would you still be very cautious to approach the IT space right now?
Well, Sakshi, I'll be extremely cautious. I think, leave aside the valuations, whether the AI companies are overvalued, where Indian IT companies are undervalued. I think that's a different debate. The fact is AI is disrupting the way we do business, the way we live, and multiple other areas. And that's for real. Now, this disruption will lead to a lot of changes as far as service delivery model of Indian IT services companies. And that transition will take some time before they can navigate this rapid change which is happening. So it is going to be tough, few quarters, maybe 1 year plus. And how things will pan up is very difficult to forecast at this stage. So my preference will be to stay out and keep a watch on these IT stocks. Yes, as and when overall we see the AI-related companies' valuation comes down, we have seen US IT services companies, Cognizant, Accenture, and the likes go up a bit. That naturally has a positive impact on Indian IT services companies as well. But I think these are very simple, short-term trading trends. I won't go by these and recommend a buy or, comment whether it's reached the bottom and things should start improving from here on. It's a work in progress. It will take some time before things settle down.
Okay. Let's focus a bit on the earnings that are coming in now from some of the pockets. FMCG is in focus. We've seen HUL before and now Dabur also coming up with the earnings. How are you looking at the FMCG pack as well? Is there any sense of improvement here? It's been a long underperforming sector. Dabur we've seen down by 3.5% post the earnings. This is despite the fact that revenues up by 10%, profit up by 15%. Even the EBITDA is improved by 11 odd percent. Margins are steady at 19.7% and volume growth is at 5% as well, which is also a factor which was impacting even HUL post the earnings. So how are you looking at the FMCG majors, sir?
Well, I think the challenge is on the volume growth. In fact, Dabur's management commentary was very clear. While the rural consumption has been steady, urban consumption hasn't really picked up the way it was expected. It has moved up, but it hasn't picked up the way it was expected to pick up. And that's a matter of concern. Yes, all FMCG companies, there is some volume growth, but that is below expectations, unfortunately. Even in case of Dabur, the revenue growth expectation was 8-9%. It came around 5%. And there are certain concerns as far as monsoon and whether the rural economy will be strong enough to continue the same level of consumption going forward. Will they be down trading? And these questions remain unanswered at this stage. And only Q2, Q3 will tell how things are moving. It's okay by and large in line with estimates, but nothing which will enthuse the market as far as these stocks are concerned.
Okay, let's also talk about the auto pack as well. We've seen Eicher Motors come up with the earnings here. We've seen an improvement of upwards of 30 odd percent on both revenue and EBITDA. Profit is up by about 21.5%. Margins are at 24%, again steady vis-a-vis 23.9% earlier. We're seeing a lot of brokerage houses again come up with fresh targets, upwards of even 9,300 for Goldman Sachs. On the lowest level, we have Macquarie, which has given a neutral rating and a target price of 7,717. So that's the range in which the expectation for Eicher Motors is building on. Your own understanding, sir, on the earnings, and how would you approach it?
Well, if it's specific Eicher Motors you are asking, I think it's a good set of numbers, undoubtedly. Remember, they don't have any EV play, but they play in a completely different segment, and it's got its own charm and own attraction attached to it. Correct. The numbers are fabulous. And they have been trying to grow the international market as well. The new models are coming out, and there are still talk of further new models coming up. So definitely exciting numbers, and definitely the stock will continue to perform and outperform. So I have no doubts about Eicher Motors at this stage. I think it's a good company, good set of numbers. Market is appreciating them. But if I have to look at the overall two-wheeler universe, I think the fantastic set of numbers came from both TVS as well as Bajaj Auto. But between the two, I do like Bajaj Auto more. In fact, if one analyzes Bajaj Auto's earnings, one will see that the revenue from international business exports has crossed now domestic revenue. So it's more than 51% now. And that gives them a significant tailwind. We know rupee depreciation and the recurring trend. I'm not talking about one-off rupee depreciation. This continuous rupee depreciation, since they are now more tweaked toward exports, will keep their earnings growth going. There's extra leg to the earnings which is getting added. Domestic business is doing well. On the two-wheeler part, they're again a formidable competitor to TVS. TVS, of course, is doing well. But considering the valuation between TVS and Bajaj, I do like Bajaj at current level. TVS, definitely good set of numbers. There's nothing to kind of argue about the numbers. But valuation-wise, I will prefer Bajaj.
Okay, got that. Let me also take a view on the primary market action. We've seen a very strong listing or a debut today of Indo-MIM shares, listing at 45% premium over the IPO price. This was the IPO when it was opening. We had discussed with you as well. What is your own sense post this strong listing, and what would you advise investors, those who have been lucky and have got the allotment, vis-a-vis those who may be looking at this company now in the listed sphere? Of course, valuations is something that will again come into the picture after such a strong move. Will there be enough and more opportunity on the upside, or is it enough?
It's a good company, Sakshi. In fact, last time also when the IPO was open, we discussed it's a good company, and some people who have got it are lucky, definitely. But don't buy today. Don't buy now. Let things cool off a bit because there is always this excitement around the listing. So avoid buying today. Keep a watch at the counter at an appropriate time. When there is a bit of a correction, you can buy from a long-term perspective. It's a good company. It's a fantastic business, one of its kind in the listed space, definitely. So yes, it's worth looking at and worth keeping an eye for acquisition from long-term once price settles down.
Okay, and anything from the IPOs that are opening today? Juniper Green. Are you looking at any of those IPOs, fresh IPOs that are opening as well? MV Electro Systems IPO also.
Well, I think I'll wait for Manipal. I think that will be a very interesting IPO coming. And I think at this stage, I will avoid the current IPOs. Nothing fundamentally wrong with them, but the valuation levels at which they are coming is little rich. So I will avoid these.
Okay, fantastic. Thank you so much, Mr. Bandyopadhyay, for being with us on the program and helping us with all your insights. Always a pleasure to have you with us, sir.
Thank you. Thank you.
All right, viewers, we have slipped into the red on the Nifty, 24,237, just about a mild 12-point of a downtick. We have seen a smart rally play out in yesterday's trading session today. It's the Sensex expiry. You're seeing some pressure build on or some profit taking right after that smart gain that we've seen. Although several pockets continue to move up, IT stocks are still strong, leading from the front 2% higher. Autos, oil and gas, pharma and FMCG. Some gains on these pockets as well. Whereas wherever the profit taking has already occurred, real estate down by 1.2%, private banks down by 0.7%, Nifty Bank is slipped into the red, 0.5% almost lower in the session, almost 0.7%. That's where the pressure is. The banking names are not really performing at this point in time. So we'll see how the session really plays out as we progress going forward from here. But do stay tuned on to Business Today Television as we continue to get you more market insights. But up next is our personal finance show, Money Today, where we discuss everything that you as women and wealth is the topic at which we are going to be focusing on, especially why should women be looking at how different financial planning is for women vis-a-vis men, and every aspect that you need to know about women and wealth will be discussed up next. Stay tuned for that. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our earnings special edition where we are going to be focusing on Coforge, which has reported its June quarterly results late last night. And we're also going to be looking at the Encora Holdings consolidation for the first time in the Q1 numbers that we've seen. A solid 21.1% growth in the US dollars has driven the revenue to $592 million for the June quarter. We've also seen the rupee terms revenue has actually grown by 24.2% from the previous quarter to 5,527 crores as well. We've also seen the EBITDA margins expand and the board has also declared an interim dividend of 4 rupees per share as well. Let me get speaking with the top management of Coforge to help us understand the key insights from the quarterly earnings and the outlook. We have Mr. Sudhir Singh, the CEO and Executive Director of Coforge, joining in. Warm welcome to you, sir. Thank you so much for taking the time out for this conversation. I want to first begin by understanding on the top line, which has now for the first time included Encora's acquisition as well. Stripping out the acquisition impact, we've seen the organic constant currency growth stand at about 1.1%, sir, which is what you had also guided for Q1 as well. Now with the Encora acquisition completely operationally integrated and of course the exited business of say government portfolio and the data center disinvestment, how do you see the growth panning out for the rest of FY27, sir?
I think Q1 was an exceptional quarter for us because excluding the business that we divested, we've grown 5.2% in CC terms sequentially. We expect the rest of the year to also reflect very robust growth, starting with Q2 itself. And it's not just been revenue, as you noted, margins also have come in ahead of the full year annual guidance from our perspective. So we feel very good about an exceptional quarter, and we think it set the stage for an exceptional year, fiscal year 27 for us.
Absolutely, sir. So you did talk about the margins which have come ahead of your own expectations. What is the key driving factor there, and how would you guide for the margin band for FY27?
The key factor there has been the fact that the acquisition of Incora was consummated using the Coforge playbook, and we've always said that the Coforge integration playbook is uniquely our own. We take complete and immediate control on day one. We have already extracted out 40% of the G&A cost of Incora. And the fact that we've been able to do it on day one itself and have it reflected in what is not even the first full quarter of operations, it just shows that there's a lot more, or at least some more, that can be extracted in the coming quarter. And B, the fact that quarter one has come in at 16% EBIT when the guidance for the year was 15.5%, we would have expected to come in at around 15% in quarter one, gives us also enough of a margin buffer to keep on pushing the pedal on revenue as well going forward.
Absolutely. So for Incora particularly, what's the expectation of the peak revenue potential of the combined entity, and by when do you see that reflecting on the books, sir?
Almost immediately.
The next chapter of India's growth begins with infrastructure. Adani presents the Business Today Infrastructure Summit 2026, where India's leaders and policymakers will discuss the India of tomorrow. Infra India 2047, building India's next growth cycle. Friday, 31st July, New Delhi. Book your seat now.
Good morning and welcome, viewers. You're watching our brand new personal finance show, Money Today. In this edition of Women and Wealth, we are going to be discussing why financial planning for women needs a separate playbook altogether. From career breaks to longer life expectancy, the gender pay gap, women usually face unique financial challenges which actually require you to think different and to approach your personal finance very differently. So how can women build wealth, make themselves financially independent and secure their future? That's what we're going to be discussing today, and we have the best person joining in. We have Preeti Rati Gupta, the founder of Lakshmi, to join in and to decode for us everything that surrounds women and wealth, because she herself has created a platform that's purely made for women and their finances. Good morning to you, Preeti. Good to have you with us. Do help me understand, why do you, or experts like you, always say that women need a separate financial planning playbook, and what makes financial planning for women different?
Hi Sakshi, thank you so much for having me. It's always a pleasure to talk to you, and especially on this topic that I'm so passionate about. So, you're absolutely right. See, when we started Lakshmi, I used to be questioned that why do you need a separate platform for women? And today I think the rising awareness, where at least that question is not being asked, I think people are asking a different question, that how do you create platforms separately for women? What is it that women need, right? And I think that answers this question, that women, their life stages are very different. You rightly pointed out, we basically have, we don't have like one big retirement. We have many, many retirements along the way. Our life stages, our earning stages, our pay, the gender pay gap that exists, and basically our behavior towards money. If you look at historically, what have women done? Because of these life stages, because of, our wealth or our earning careers, earning journey not being linear, what we've always done is over-indexed on safety assets. So basically, that's why women were doing a lot of fixed deposits. They were buying gold, but not really thinking beyond and saying, how do I create wealth for myself? So how do you connect the dots between all of these, her non-linear earning journey, her different life stages, the gaps that she has to take, the gender pay gap that she has, all of these, how do you connect to her creation of wealth? And basically, instead of making, the traditional world says save and invest, but for a woman, it is actually invest at every interaction with money. So her journey with money is very different.
So, a lot of people think that financial independence, when we talk about for women, it's only starts and stops with financially being independent in terms of earning. But does it also require a lot more independent financial decision making as well? And that's when you truly understand that a woman is financially independent.
Absolutely right, Sakshi. I think, when we spoke of financial independence at a time where women weren't even earning, right? They weren't being, I would quote unquote, allowed to actually step out and earn. A lot of that has changed. I think every family is now telling their daughters that you need to be financially independent, which basically means that you need to be able to earn money, right? But a large part of this conversation is missing. Financial independence is really not just about earning money, but like you rightly said, having agency over that money, as in deciding what that money is going to do. Now, what most women land up doing is they earn the money, and I would give a lot of sort of benefit to women, because the reason they do that is because we suffer from so much time poverty. So we're managing home, we're managing work, we're managing children, everything, right? So that one thing which we should actually be managing ourselves, we delegate to someone. And that essentially means that the money that we are earning, we no longer have a say over. We don't know what the money is doing for us. Are our financial goals being met through this money?
Yeah.
And over a period of time, it actually comes to a point where, today we have 15 lakh women on our platform, and about 80% of these women have come to a stage where they are saying that, okay, I know I earn money, but I don't know what that money is doing. And tomorrow, if I need money for something, I actually come to a place where I need permission again. So it's defeating that entire purpose. Financial independence means that you are able to take a call, all your financial decisions, you don't have to depend on anybody. But even while earning, if you start depending on somebody, then that financial independence is purely lost, right?
Absolutely. So help us understand with the big financial mistakes that you've spotted in your conversations with women, what they tend to make regardless of whether they are working professionals or they're entrepreneurs or even homemakers. What are some of those big mistakes so that a lot more women who are watching this show can become more aware of?
So one, I pointed out just earlier that I think women delegate financial decisions to the men in the family, right? A large majority of women do that. Some women who don't do that basically land up creating or putting money into, like I said, safety assets. So most of that money into near-term protection, right? So which is, call it fixed deposits, call it bank accounts, call it gold, sometimes even just kept as cash. That's what gives her the comfort. It's in her head, that emergency fund that she's created, right? I think both of these women need to look at differently. We know that the only way to create wealth is to give yourself or give your money the time to compound. And women leave that decision of, most women by the time they are 40 are actually starting to look at capital markets.
Yes.
Now you've lost 20 years of your earning life, right? Which are the most precious ones. So basically, the first mistake women do is safety assets, delegation. The third they do is basically put it in, not put it in equity, or which allows the money to beat inflation, to create wealth, and they look at it much later. And I keep on saying this again and again, which is why this platform is very important, is that the day you start earning is the day you start distributing your money between your safety assets as well as your long-term goals, be it retirement, be your child's education, etc. And fourth very big mistake, Sakshi, that women make is that they do not even consider insurance. And that invariably leads to a lot of, issues. One, if there is a medical emergency, then you're literally dipping into your savings. Today, a lot of working women, they have corporate covers, insurance covers, but that is also not assessed to say whether it is enough, right? The number of single women in our country is increasing. The number of, we've heard, I mean, if you look at the stats of, the need to have like a critical cancer cover, women's cancers, right? All of these women, that awareness is missing, and therefore they don't have enough insurance to cover all of these pieces, which actually derails her wealth creation journey. I mean, I can go on and on, Sakshi, but even if these four are addressed, I think a woman is on her way to creating, at least not retiring towards poverty.
Absolutely. So, you did mention in your comment also some of the financial goals that one has to plan for. If you could give us 2 to 3 goals that one has to start planning for right from the word go. When you start earning, you said that, don't lose out on those precious earning years, because you're young, you can still contribute and get that long time duration in which your money can give you better returns. So, what are the first few financial goals that one should start off with?
Absolutely. So I think the first goal that every woman needs to have is create her own emergency fund, which means doesn't necessarily mean money kept in the bank or in the cupboard. There's a scientific created so that you have access, but the money is still growing, right? As much as it can, while giving you the capital protection as well as liquidity. So creating that emergency fund is the first goal that she needs to do. And simultaneously start, even if it is small amounts, start keeping money aside for, the world calls it retirement fund. We at Lakshmi call it financial freedom fund, right?
Okay.
Because a woman needs that financial freedom at different stages of her life. If she is going to get married, she will need money. If she takes a career break, she will need that money. So we call it the financial freedom fund, where you don't have to depend on anybody if your earning is not there. And that actually applies to a earning woman. It applies to a homemaker. Basically, money that allows you to live life on your own terms. So simultaneously start adding money to that fund. Basically, that fund is highly, indexed towards equities. So these two most essential. If you have a child, I always recommend that take ownership of the child's education fund. Today, the biggest cost to an Indian average family is a child's education. So start creating your child's education fund, and instead of borrowing at every instance, you can actually create a fund that allows you to borrow better and create a huge, a very, very good corpus by the time your child turns 18, because that is when the education gets even more expensive.
Okay. So 3 very important points here: an emergency fund for yourself, a retirement fund, or like Preeti pointed out, it's the financial freedom fund for you. And in case you have children, then definitely work towards their education funds as well. Those are the 3 very important goals that you have to start off with too. Now, you did talk about insurance. That's something that people avoid. Women avoid at the first glance too. Either they are a part of a family floater plan or somewhere or somehow covered, but they are not sure whether they are adequately covered, what kind of covers do they need. If you could just expound upon that what all insurance covers are absolutely essential for women to get.
I think a health cover, a medical health cover is basic. It's hygiene, right? You have to get it. Now, how much do you take? How much of that cover do you take? Basically, we use a thumb rule to say, whatever is required for a heart surgery in your city, just look at that amount, and that is the basic amount that you must have. Then you look at riders, if you have a family history. And again, I keep saying, I think the number of, the women-related cancers it's so much on rise that in our optimism, we feel that that's a cover we don't need. It is worthwhile because today the cost and add-on cost of that cover is literally nothing, right? So look at these, women-centric covers. If you think that you're going to become, you're getting married, you may have a child, you're planning a child, then take all the maternity covers, etc. So build on your basic plan, take those riders instead of taking an overall policy, which actually turns out to be far more expensive. So that is the first thing. Second, I think a term or life insurance, if you have responsibility, if you've taken on loans, which then you don't want to leave behind for your dependents to sort of be left with, it's only then that you look at taking a term or a life insurance, which again based on the number of children you have or dependents you have, what is the sort of today a lot of the millennial and Gen Z world is living on EMIs, so that EMI portion, how much that will be covered. So taking into account that, insurance is also very.
Okay, so now that we've catered to the insurance and emergency funds and looking at all your financial goals, let's talk more deeply in terms of what are the kind of investment products that women tend to always overlook. Like you also pointed out that most of them usually go for the safety net, but what are the investment products that have to be looked at in case you're planning for your future?
So I think, like I've said, the key is always for any good investor is to have the right asset allocation. So while women land up putting money into debt products, into gold, I think what is typically overlooked is equity. Women, besides gold and debt, tend to look at real estate as the other portion of saying, okay, this is my guaranteed security, right? Even to take real estate, it's very important that you first start building a portfolio in your equity, so you're able to do it far more, effectively and at the right time. Instead of plunging into it as soon as, I've seen young girls, as soon as they get a job or as soon as they get married, they start thinking about a home. So there's a right time to plan for real estate, because real estate, while we don't consider it as an, as a investment or an asset class within your financial planning, but it is still something that gives us security and worthwhile if it matters to you, right? So plan for it at the right time. But I think equity as a component is completely missing from women's portfolios, and which is where I think this gap of creating wealth, beating inflation, making your money work hard, otherwise it loses its value, is where I think women need to pay more attention to. And again, that of saying, okay, let me leave it to later is possibly the biggest mistake we make. Within equity, I've always said that, you can buy direct stocks, you can do mutual funds. Our preferred choice or our preferred advice is always to invest in mutual funds, because that's the easiest step. And if you have, anyways, we suffer from time poverty.
Yes.
Then to do all of that research on stocks may be difficult. But equity as an asset class is completely missing. So I think this is something that I keep saying, that please have your asset allocation right.
Absolutely. So, okay, towards the end, I know that this is all these topics, of course, beg deeper understanding, and each of them can be like a full half-an-hour discussion for our viewers to understand better how to approach mutual funds, how to approach gold, how to approach your insurance. All of that can be deeply discussed. But for just somebody who's starting out and is still confused, yes, I have my money, but I don't know where to start. What would you advise them? What's the simplest way, or top 2 or 3 things that you go ahead and you'll be sorted?
So I think that's where, and I'm so glad that you bring this up, Sakshi, because there's just so much noise that women are very scared that it's very complicated. I don't know how to begin, right? And I think most important is to begin, right? Begin big, small. So say, even if you begin with 1,000 rupees today, you can do an asset allocation. Even just through mutual funds, right? For example, if you're somebody who's 25 years old or 22 years old, who's just started her career, who's just started earning money, normally I advise with girls that even at 18, when you've got your pocket money, is the time that you should start taking decisions on where this money will be invested. But the minute you start earning, you can start doing that asset allocation, and you can use a basic thumb rule of saying, okay, your age, 100 minus your age. So for example, if you're 22, 25, you can easily begin with almost 70 to 80% of that money into an equity mutual fund, right? Even within the equity mutual fund, if you're supremely confused, which fund, etc., just begin with a simple index fund, or begin with just a large cap fund, right? Or a multi-cap. You don't have to, you see, the decision of asset allocation is actually the most important decision that a person, that an investor makes. And then choosing the security is actually, it makes very little difference to how your portfolio will actually perform over the years, over the long term. So basically just divide that 1,000 rupees into, very simply saying, okay, I will put 700 into equity fund, I will put 200 rupees into debt, I will put 100 rupees into a gold fund. That's simple, right? Just begin and do it month on month, step it up every month, you feel comfortable, add on to this portfolio. There are a lot of tools that mutual funds allow you, whether it is step up or whether it is, SIPs. Use those tools to then add on to the investment amount as you get comfortable, as your earnings increase. What it does is, one, I think, forces you to just save and put it into your today, your future, in a very simple, systematic way. It doesn't take time from you. It doesn't require hours for you to research. It's just a simple mandate to your bank to say, okay, these are the 3 places I want to put my money every month or every fortnight.
Fantastic. All right. I think it's a great starting point, Preeti, that you've mentioned for all our viewers who've yet to start out, a lot of young women who watch our show as well. I hope that you've got very simply, as Preeti has explained to you, what are your starting steps. If you've still not got on, it's not late. At whatever age you want to start off, at least start, at least begin. Yes, the best time is when you just get your pocket money or start off your jobs, as Preeti's pointed out. But in case you missed out also, do not think that you do not have more time. Yes, you can start today and start with all those explanations and all those points that Preeti has helped you out. Thank you so much, Preeti. Great to speak with you yet again and getting all of those insights for our women viewers.
Thank you, Sakshi. Pleasure. Thank you for having me.
Thank you so much. All right, viewers, we'll wrap it up on that note on this edition of Women and Wealth. But do stay tuned. We'll continue to get you such fascinating conversations around money, simplifying that to as much extent as we can for you. In case you have any doubts about your own investment plans, your financial planning, send us your queries. We'll be happy to address all of those questions with our top experts who join in on Money Today.
The next chapter of India's growth begins with infrastructure. Adani presents the Business Today Infrastructure Summit 2026, where India's leaders and policy makers will discuss the India of tomorrow. Infra India 2047, building India's next growth cycle. Friday, 31st July, New Delhi. Book your seat now.
आराम से हाँ। सामान देना भैया।
अब आगे क्या करना है? वो पिट्टू की पर्ची में देखो ना।
पर्ची?
देखो कहाँ गई पर्ची?
मैंने।
नमस्ते
जी
हाँ? मुझे पता है वो पर्ची में क्या लिखा होता है। आप चलिए मेरे साथ। व्हीलचेयर। पर्ची में ये तो लिखा ही होगा कि सीधे फ्लाइट में नहीं चढ़ना है, थोड़ा घूम के जाना है। अब पर्ची में शॉपिंग की बात तो जरूर लिखी होती है। थोड़ी पेट पूजा की बात कोई पर्ची में ना लिखे, ऐसा हो सकता है? टिफिन लाए।
थैंक यू।
अरे पर्ची मिल गई।
पर्ची में तो ये सब लिखा ही नहीं था।
हम है ना आपकी पर्ची।
भीड़ में जो थाम ले।
सिर्फ वर्ल्ड क्लास एयरपोर्ट्स नहीं चलाते हैं, आपके सफर में हम सफर बन जाते हैं। अदानी, हम करके दिखाते हैं।
India today is a 346 lakh crore rupee economy, the 4th largest in the world, the fastest growing major economy. 10 years ago, 125. By 2028, the 3rd largest, 12.2 lakh crore rupees of public capital expenditure this year, 6 times what we spent a decade ago. Highways at 34 kilometers a day, 1,46,000 kilometers and counting. Airports doubled. Port capacity doubled, and a 111 lakh crore rupee national infrastructure pipeline. But here is the truth every builder knows. Infrastructure and law are not two industries. They are one system. A port is a concession agreement before it is a berth. A highway is a land title before it is tarmac. A power plant is a purchase agreement before it is a megawatt. Nearly 70% of the national pipeline, energy, roads, rail, urban, sits in the most contract-intensive sectors of the economy. Investors do not simply fund projects, they fund enforceable contracts. In the road sector alone, 88,000 crore rupees of claims in 5 years. How fast the law resolves them decides how cheap the next kilometer is built. This is the work we do at White and Brief every day. Before a project breaks ground, land acquisition, title diligence, right of way. We de-risk the ground itself through construction, concession agreements, EPC contracts, power purchase agreements, financing. And when disputes come, tender challenges, bank guarantees, delay claims, arbitration, enforcement, and full service beyond litigation, corporate, finance, real estate, tax, regulatory. One firm, the entire life of a project. Practical, timely, aligned to your business. And the opportunity is only widening. A legal market past 30,000 crore, with arbitrations once bound for Singapore, now seated in Mumbai. India's law firms are ready. We are already there. As legal partner to the Adani Business Today Infrastructure Leadership Summit, we stand with the largest private builder of Indian infrastructure, a group we have had the privilege of working with these past several years. 1.53 lakh crore rupees of capital expenditure last year, the largest by any Indian corporate group, and a 9 lakh crore rupee program for the years ahead. Infrastructure builds the future. Law gives it a backbone. Governance, certainty, trust. Thank you.
India is a land of dreams. A land that gives you hope and wings to turn your dreams into reality. Our dreams define us, what we are, and what we want to be. They make us phenomenal. We are KPT Piping Systems, and we dream with a vision. A vision to make our people more healthy and prosperous. Our vision gives us a purpose, a direction, and passion to operate to outer limits of our potential. We don't make just pipes. We make 100% food grade certified PPR pipes. Our diversified range of products are making this world a better and healthier place to live. Our pipes transfer water and fluids safely at all extreme temperatures to your hospitals, schools, and all other important businesses. And we love doing this every day, every minute, every second. This is what makes KPT an exceptional. We are builders of a new future. A future that is bright and promising for everyone. We are proud members of prestigious organizations like FIIO, CII, and EEPC India. We have bagged some of the eminent business awards, and we are the ones that inspire ourselves. Our partnership is focused to improve the future of real estate, energy, railways, aviation, and healthcare. Our research teams are creating the products that no one saw coming. Our meticulously designed plumbing solutions are changing the world. Our products have cut down the maintenance costs of our clients by millions. Today we have a long list of corporate giants who have joined hands with us and are using our products. We have delivered more than 6,000 projects worldwide.
I call my grandfather Bauji, and he is a role model to me. He is always advised that if you are making the life of people healthy and convenient, then you are successful. We as a company and as a family believe in the same value system. The products that we make reflect our values. Humanity is our priority.
We are working with Indian government to achieve their vision and mission. We are executing massive projects like Jal Jeevan Mission, Assam, Rajasthan, and Karnataka. Our products are building a better and stronger Indian railways. And we are proudly associated with Indian Military Engineering Services, a business that is focused on welfare of humanity. Our motive is to uplift the quality of life for people, communities, and planet. We simplify. We perfect. We are KPT Piping Systems, a new generation pipes. Smart pipes for a smart future.
The next chapter of India's growth begins with infrastructure. Adani presents the Business Today Infrastructure Summit 2026, where India's leaders and policy makers will discuss the India of tomorrow. Infra India 2047, building India's next growth cycle. Friday 31st July, New Delhi. Book your seat now.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV. And a very warm welcome, ladies and gentlemen, to the booming world of portfolio management services, a section that has grown immensely well over the last 7 years, with fabulous performances coming into the market from companies such as Incred Asset Management. Let's just take a broader view. There are about 495 SEBI registered PMS managers who manage somewhere like 8.37 lakh crore rupees, and amongst the upper super top quartile is Incred Asset Management with its pharma focused portfolio, which has given phenomenal returns. If you look at how the stock has how the portfolio has performed, it has handsomely beaten all exchanges, all indices, as well as the healthcare index by a very wide margin. In the last 3 years, the portfolio has appreciated 27% each year versus the 12% rise in the BSE 500 index, as also the 25% rise in the BSE healthcare index. To discuss the way forward into where markets are and how CIO Aditya Khemka watches the sector, we are joined by Mr. Khemka himself to discuss the broader markets as also his portfolio. Namaste Aditya ji, and always a very warm welcome. Phenomenal tailwind for pharma stocks and an incredible performance by Incred Asset Management. How are you viewing sentiment these days?
Thanks, Shalji, for having me, and thanks for the compliments. Sentiments from an investor standpoint, I think, is that of slight cautious optimism, I would say. I know it's a cliche to say cautious optimism, but investors are liking the valuations that the markets have come down to, but they're still scared of the global macro where things, refuse to settle down. And also, when I say global macro, I imply geopolitics as well as where the interest rates and currencies are headed. I think these are the two uncertainties that globally investors are talking about. And whereas valuations, I think in the local market seems pretty decent at this point to deploy capital. So there is optimism, but then investors are also scared about when and how much to deploy at this juncture. I think that's the key worry.
So, Aditya ji, you've been fortunate on two accounts. Of course, it does not take even a whit away from your phenomenal stock picking. Weakness in the rupee was very good for export oriented pharma stocks, as also the fact that the broader market crashed and investors sought the safety of pharma companies where revenue and profit was more or less predictable. Plus, we have this very strong tailwind of hospitals as well as laboratory stocks doing very well. Now, given the popular trade that is in the market in the pharma space, how are you viewing your own mid-cap focused PMS portfolio in pharma companies?
So Shailji, two things here. I think, the type of companies that we invest in healthcare, right? Our healthcare strategy. There, these companies are mostly importers. They actually don't benefit from a weaker rupee. They actually get hurt by a weaker rupee. So the outperformance of the sector that you have seen in the past 3 to 6 months is actually not much to do with a weaker rupee. It is actually got more to do with the non-discretionary nature of the consumption or non-discretionary nature of the business that these companies are in. So, if a Thyrocare, if you take for an example, they import their reagents, they import their blood analyzers, and all of these is imported in dollars. And a depreciating rupee does impact their capital cost, but it does not give them any benefit on their operating revenue or margins. And hence, Thyrocare does not really benefit from a weaker rupee. It actually is a higher cost. Given, however, why the sector has done phenomenally better is because the global macro is not so certain, the local macro is not so certain. So investors may be slightly, wary of deploying capital in lending businesses or autos or IT or, other sectors, which may be cyclical in their nature. And hence, maybe this sector is getting more flows from investors, given that the earnings in this sector are largely non-volatile. They're fairly secularly growing, businesses. And because of which I think sectors are getting sort of some confidence in this sector for the near term.
So at the moment, Mr. Khemka, you have about 2,000 crore rupees in this wonderful scheme that has outperformed the broader markets as also the pharma index. There are new plans as well to launch a broader vehicle for investments. How is that progressing?
So, Shailji, again, just a small correction. We at InCred Asset Management, our total AUM is 2,000 crores. Our healthcare PMS at this juncture has just crossed 1,000 crores. So, the healthcare, the size of the healthcare PMS is at 1,000, and our other products, which are small and mid cap and multi cap, put together is another 1,000. So, the total AUM is 2,000. Now, at this juncture, what we have done is we have launched an open-ended AIF for our healthcare strategy. This is on behest of investors who don't like to invest in PMSs because of the complications that come with a PMS investment. There is a demat needs to be opened in their account. There is a taxation that they need to go through every quarter. The AIF on that front is a fairly simpler vehicle to invest in, because the returns that you get on the AIF is post-tax, and the taxation is done at a trust level rather than at an individual investor level. So we have therefore launched this AIF, and this AIF is again open-ended, and the investors can apply and subscribe whenever they want, and they can redeem whenever they want, as and when convenient to them. There is an exit load for the first year, but after the first year there is no exit load as well for the investors.
At this InCred portfolio which is in front of us, we have the top 10 holdings right there on the screen, led by Healthcare Global. This is a very, very well-known hospital chain doing immensely well, and the stock has is now trading at 673. This is about 15% of the portfolio, Mr. Khemka, and unlike the multi-baggers that have graced your portfolio and performed phenomenally well, HCG has been a tepid sort of a stock. How are you viewing this as your largest holding?
So, Shailji, again, some context needed here. So, HCG, we bought, I think, first time in 2021. And at that time, the stock price, if I'm not mistaken, was around 150, 140 rupees. So from there, obviously, the stock has been a multi-bagger for us over the past 5 years. I think where you are right is the last 6 months, the stock has not done much. And probably the reason for that was because the stock ran up a bit too fast, a bit too soon in the previous year. So there is a bit of catch up that the earnings need to do with the stock price. And that is where I feel, LCG for the past 6 months has not been a great, return generator for us, but that's okay. As you know, markets are like a pendulum. They go from extreme optimism to extreme pessimism in no time. And SCG last year was in the extreme optimism bucket, and this year seems to be in the extreme pessimism bucket. But, markets do that to individual stocks and individual themes. And what we are more focused on is the earning growth. So last year also SCG reported close to 20% EBITDA growth, and this year also we are expecting the company to report a 20% EBITDA growth. Then how the market rewards or views that, we'll leave it to the market. We're pretty confident of the investment thesis in HCG. It is a company that in the near term, in our view, will consistently compound at 20% EBITDA, and that should eventually reflect in stock prices at some point.
Fair point. The other wonderful stock, which sadly has been a relative underperformer in the segment, is FDC. This is your third largest holding and is somewhere like 6.5% of your portfolio. Many buybacks and a fairly strong portfolio of drugs hasn't somehow helped the company. What keeps you bullish on FDC?
So, Shalbhai, FDC actually, had a phenomenal last year where their domestic business, which is about 85% of their top line, grew in high teens last year. And that created a very high base for the company last year. And hence, this year when the company is reporting earning growth in the domestic business, it is not looking very great because the last year base is phenomenally high, right? But let's all keep in mind that FDC is a company that has been able to create brands like Electrol, Enerzal, Ziffy, which are household brands today in India. So this is a company which knows how to create brands and has a legacy of creating huge household brands in the domestic pharma market. And we kind of view this company as the most structural story. Another angle where FDC has probably faltered in the last year was basically on the export side. So FDC had some issues with their facility from where they manufacture products for exports. And I think that facility needed some renovation, some things to be fixed, where they missed out on some sales last year. And these sales seem to be coming back beginning from the fourth quarter of FY26. They reported a very decent revival in their export business. And we expect FY27 to be a similar year like 4Q FY26, where the export sales will come back. And that will basically help the profitability of the consolidated entity for FY27. So we expect FDC to be a core part of our portfolio. And we expect this business to be really good for FY27 for FDC because the FY26 results were adversely impacted by export business, which was disrupted due to some renovations they wanted to do at the facility level.
While a fund manager is hopeful for all the stocks that he or she picks up in the portfolio, but at this point of time, Mr. Khemka, given the last 6 odd months, which amongst your stocks in the top 10 are you most, how should I say, bullish about, and the one which has a bit of a concern in your mind?
Sure. So, Shalbhai, the way we do this is our highest conviction lies, it reflects in the weight that we have taken in the stock. So, if today, for instance, HCG is 15% of the PM's portfolio, that reflects my highest conviction. And that conviction may be over 12 months, 24 months, 36 months. We generally don't look at stocks from a 6 to 12 month perspective. We look at these businesses more from a 12 to 24 month perspective. So if you take that perspective, I think we are most bullish on HCG as we stand today. We are second most bullish on Thyrocare because that's our second largest position. And then we are third most bullish on FDC because that's our third largest position. So whatever we are most bullish on will reflect on our sizing in the portfolio because that is how the investor makes the alpha. When we are bullish on something, you size it well and the stock performs well, you get a very decent alpha versus the index.
Yes.
Okay. The companies which are...
coming back to the new launch, the AIF, please continue.
Yeah. No, so you asked the question on, if there are any companies where we had some worries in the portfolio. And, there were a couple of such companies, but if you look at our last 12 months, companies where we tend to get worried or where companies are not delivering in line with our expectations due to reasons which we don't feel are transitionary or rather more structural, those companies we actually tend to
Hello and a warm welcome, ladies and gentlemen, back on Business Today Television. We continue with our coverage of top-notch earnings coming in from corporate India, and we are also joined by the top management at Team Lease. This is India's largest staffing firm, where sales for the quarter gone by are up 5% to 3,035 crore rupees. These are up both year on year as well as sequentially, and it's the net profit that has soared 31% to 34.4 crore rupees versus 25 crore rupees in the year ago quarter. We are joined by Ms. Ramani Dati, CFO at Team Lease Services. Namaste ma'am, and a very warm welcome. A sigh of relief with this sequential rise in sales as well as year-on-year uptick. How are you watching the market at this point of time? What worked for Team Lease in the quarter gone by, and what sort of disappointed you?
Yes, very good morning, and thank you so much for having me. So this quarter or H1 for this year has been kind of stable across the industries, while IT recovery, finally after 5 quarters, we are seeing good recovery on IT service hiring as well. GCC has been consistently strong for us over the last 3 years, and we believe the momentum can continue this year as well. And the good part is IT services also has started on the hiring trajectory. More than that, now every company is talking about or started their digital transformation journey, their AI transformation, because of which there is an increased demand for niche skill set talent at mid and senior level, especially skills like cybersecurity, AI, ML, cloud management, data analytics. So these are some of the skills which every organization is looking for, not necessarily only IT companies or GCCs. So that's a very positive trend to watch out for. On the non-IT front, overall, I would say the hiring trends are, while they are very stable, but compared to last year, there is a little softness, especially in high volume formal employment generators like BFSI, retail, FMCG, FMCD. Compared to last year, we are seeing 1-2 points lower hiring trajectory this year. That could also be because of relatively weaker monsoon this year. So the pre-festive hirings have kind of relatively lower compared to last year. But H2 pipeline as of now is looking very strong. And we are very confident that even BFSI will have a recovery starting August, end of August, September this year, along with retail segment.
So that's the broad cross-section of thought processes that Team Lease is sharing with us. Ma'am, let's bring it down to the basics of what happened. So your buyback is completed. You spent 238 crore rupees to buy back your counter at around 1,600 rupees per share. About 15 lakh shares were purchased, and this was of course funded by internal accruals. Net free cash at the moment, how much is it?
Yeah, we currently have a free cash of 350 crore, and we also have incremental another 150 crore that we are expecting as tax refunds between this year and the next. So our overall free cash is still at a very good number after doing this 238 crore of buyback.
Okay. You've also received a 38 crore rupee tax refund. So that is also including a lot of interest. That was a part of the numbers?
Absolutely. So during the quarter, we received 38 crore of incremental tax refund. So that's part of the free cash of 350 crore.
Okay. Now let's look at where the demand is coming from. How about GCCs? They contribute about 2/3 of specialized staffing on the net revenue level. What is the demand that is coming in? Is there a specific geography that the GCCs are concentrated in, or is this across India?
Yeah. Specific to GCC, we are seeing I mean, good demand across locations in India, but the topmost currently for us is Hyderabad-based GCCs. And also within the size of the GCCs, keeping aside the very large established GCC, the mid-sized ones, the ones with less than 5,000, is where we are seeing the maximum demand for new hiring and cutting edge technology related demands is where those are the segments where we are seeing. And we are also seeing very good demand coming from Europe and Australia based GCCs this year. In fact, the ongoing discussions we are having are many new discussions on the GCCs coming from Europe and Australia, apart from US, which has been the traditional base.
Okay. Did the staff strength rise in the quarter gone by?
Sorry, I just missed it.
Did the staff strength rise in the quarter gone by?
Yes, yes. So even in quarter one, the GCC, we had a fair amount of addition overall in headcount as well as in revenue. However, on margin front, since Q1, we have to go through the appraisal cycle for our employees. On margin front, it is looking little softer. But by Q2, Q3 onwards, we can demonstrate a steady trajectory of margin expansion.
Okay. Ma'am, in the new staffing, about 65% are on variable and outcome linked pricing. How do you expect blended markups to perform in the quarters ahead? And what is the kind of blowback or maybe a pushback that you are getting from top clients?
Within our core staffing business, which is the general staffing business, within the base, about 75% of our associates are on fixed markup. But over the last 2 to 3 years, we are making sure that any new client that we are onboarding are on variable markup model. Because of that drive, now almost 60 to 70% of all the new additions are happening on variable or outcome linked markup model. With that, and with the labor code corrections happening, the average salaries, the average CTCs going up. So we will get a direct benefit since we are charging the clients as a percentage on the associate salary. So that will directly give us a little higher recovery in our per associate per month realization. And that contributes to our margins as well.
Okay, fair point. Ma'am, a couple of quick questions on the broader structure of the whole IT setup. What are your top 5 clients telling you? Are they breathing a bit easier than what they were about 2 quarters ago? Or is the pain still in the system?
Within IT services, actually, I would say the pain is still in the system, and there is a margin pressure and also a lot of pressure on rationalization and upskilling of their existing talent pool. And coding and testing jobs, which are the traditional software jobs, there has been a considerable amount of reduction that has happened over the last few quarters, and we believe that may continue into future as well, because this is the biggest area that got impacted by AI, the coding and testing. So there has been a significant reduction, anywhere between 40 to 60% of reduction has happened within these profiles because of AI. Having said that, with more and more digital transformation projects coming to IT services industry, they started hiring on the mid and senior level around the skills that I mentioned earlier. So on back of that, we are expecting a strong recovery from IT services this year.
Okay, I'll request the PCR to show us the long-term chart of TeamLease. I remember the company executed a very successful buyback program at about 1,600 rupees a pop. That's about 15 lakh shares. Ma'am, this is again the stock price, a 1 year performance is down 31%. If you look at the 5-year data, this will also be right there in front of you. What according to you is the situation? What are market participants asking of you? What are you telling them? Is the worst behind you? Are the tailwinds with you?
Yeah. No, in fact, in your first question, you asked about what are the disappointments for the quarter, which is on the margin expansion. So while we have been considerably growing on our overall revenues as well as volumes consistently over the last few years, on margin expansion, we are having, different setbacks. So I don't want to get into those explanations now. And while we have a very strong balance sheet and a very strong cash position, sufficient investments to be made within our existing business to build newer capabilities and build adjacencies with higher margin verticals is something which we should have done about a year back, but now we started those investments. So with those investments going in and building more higher margin verticals, the overall profit margin should start reflecting in our numbers in 1 or 2 quarters. So we already started making investments in technology, expanding our leadership depth and width, and also building some new products and business verticals with a much higher margin than our staffing business. And these verticals will typically grow at a higher rate than our core staffing business. So with all of these contributing over and above the operational efficiency, the economies of scale in our core staffing business should contribute to the margin story. So in fact, that's the single most focus area for us for the near term, as well as obviously long term.
Okay. You've also been trimming your JVs. You exited out of Crystal HR, and the original investment cost has been recovered. Is this an ongoing process with other JVs as well?
So Wallet is the only JV that we have made investment about 18 months back. And in our investment agreement, we have clauses very clearly called out saying that at any point in time, we have the option to exit. So the board has taken a very deliberate decision after looking at our capital allocation decisions. And as I mentioned, we are going to make some investments to build adjacencies to our core staffing offering. So in view of that, as well as the management bandwidth that is needed to run these new initiatives, so the board has decided to exit Wallet. And we continue to look at rationalization of our portfolio, especially in some of the old verticals which are non-core to staffing. So wherever rationalization is needed, the board will decide on that front.
My final question, you still have 350 crores on your balance sheet in terms of free cash. What do you intend to do with it?
No, we continue to look for growth opportunities because we still have about only 5% of market share within staffing. So there is a lot of opportunity for consolidation through organic and inorganic route, as well as I also mentioned that we want to build high margin adjacencies around talent solutions. So that also both organic and inorganic investments are needed. Apart from that, the board will continue to work on dividend and buyback kind of distribution of profits to the shareholders.
Right. On that very hopeful note, ma'am, we'll pause it here. As always, it's a pleasure listening to your thoughts in a market that's terribly in pain. And of course, let's hope that this pain is easing a bit. At least that's what some of the stocks are telling us, as also the 18% uptick on the IT index. Will it last? Only time will tell. But like clockwork, ma'am will be present for the second quarter earnings 3 months from now. We look forward to them.
Thank you so much. My pleasure.
That, ladies and gentlemen, was Team D's CFO Ramanik Dati talking about how the company performed in the quarter gone by. We will again be shortly joined by another management that's going to be with us. This is the KPIT Technologies Management, which should be with us shortly. And joining us on the show will be the top management represented by Sachin Titekar, Joint MD and co-founder of KPIT Technologies, and Priya Hardikar, CFO of KPIT Technologies. Let's meanwhile look at how the numbers have shaped up at KPIT. When you look at, okay, and we will, let me just highlight the numbers before we go into a quick break. KPIT Technologies reported a 9 percentage point uptick in sales for the quarter gone by, 1675 crore rupees, but profit slumped 32% to 116 crores. The management is there on the other side of the break.
आराम से सामान देना भैया।
अब आगे क्या करना है? वो पिट्टू की पर्ची में देखो ना।
पर्ची?
देखो कहाँ गई पर्ची?
नमस्ते
जी।
हाँ, मुझे पता है वो पर्ची में क्या लिखा होता है। आप चलिए मेरे साथ। व्हील चेयर। पर्ची में ये तो लिखा ही होगा कि सीधे फ्लाइट में नहीं चढ़ना है, थोड़ा घूम के जाना है। अब पर्ची में शॉपिंग की बात तो जरूर लिखी होती है। थोड़ी पेट पूजा की बात कोई पर्ची में ना लिखे, ऐसा हो सकता है? टिफिन लाए।
थैंक यू।
अरे पर्ची मिल गई।
पर्ची में तो ये सब लिखा ही नहीं था।
हम है ना आपकी पर्ची।
भीड़ में जो थाम ले
सिर्फ वर्ल्ड क्लास एयरपोर्ट्स नहीं चलाते हैं, आपके सफर में हम सफर बन जाते हैं। अदानी, हम करके दिखाते हैं।
India today is a 346 lakh crore rupee economy, the fourth largest in the world, the fastest growing major economy. 10 years ago, 125. By 2028, the third largest, 12.2 lakh crore rupees of public capital expenditure this year, 6 times what we spent a decade ago. Highways at 34 kilometers a day, 1,46,000 kilometers and counting. Airports doubled. Port capacity doubled, and a 111 lakh crore rupee national infrastructure pipeline. But here is the truth every builder knows. Infrastructure and law are not two industries. They are one system. A port is a concession agreement before it is a berth. A highway is a land title before it is tarmac. A power plant is a purchase agreement before it is a megawatt. Nearly 70% of the national pipeline, energy, roads, rail, urban, sits in the most contract-intensive sectors of the economy. Investors do not simply fund projects, they fund enforceable contracts. In the road sector alone, 88,000 crore rupees of claims in 5 years. How fast the law resolves them decides how cheap the next kilometer is built. This is the work we do at White and Brief every day. Before a project breaks ground, land acquisition, title diligence, right of way. We de-risk the ground itself. Through construction, concession agreements, EPC contracts, power purchase agreements, financing. And when disputes come, tender challenges, bank guarantees, delay claims, arbitration, enforcement, and full service beyond litigation, corporate, finance, real estate, tax, regulatory. One firm, the entire life of a project. Practical, timely, aligned to your business. And the opportunity is only widening. A legal market past 30,000 crore, with arbitrations once bound for Singapore, now seated in Mumbai. India's law firms are ready. We are already there. As legal partner to the Adani Business Today Infrastructure Leadership Summit, we stand with the largest private builder of Indian infrastructure, a group we have had the privilege of working with these past several years. 1.53 lakh crore rupees of capital expenditure last year, the largest by any Indian corporate group, and a 9 lakh crore rupee program for the years ahead. Infrastructure builds the future. Law gives it a backbone. Governance, certainty, trust. Thank you.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our special personal finance show called Money Today. And today's topic is all about how should Gen Zs invest? Gen Zs are investing earlier, they are earning earlier, they're also borrowing earlier than any generation before. But are they clearly building wealth, or are they only chasing trends, from stopping SIPs too soon, or taking loans for even travel, or even getting lured by the buy now pay later schemes that are frequent, and on everything that you see to be shopped on an everyday basis, to even diving into the newer formats of investments, say cryptos, and even futures and options, which were usually only considered for experts as far as investors are concerned. Are they understanding the risks that happen in today's financial choices, and could all of that shape up their next 30 years of lives in the best way possible? That's something that we're going to be discussing today. We also are going to be talking about what is the right way for Gen Zs to invest. Let's actually welcome our guest on board. We have Mukul Malik, the founder of Asset Yogi, joining in to share with us his take on how is he looking to advise and discussing a lot of problems that Gen Zs are facing while their financial planning is taking place, and at the same time, how should they begin their financial planning journey as well? Thank you so much, Mukul, for taking the time out for this conversation. I'm sure a lot of Gen Zs approach you to try and understand what exactly should they be doing. Yes, we do know that Gen Zs are far more aware than millennials and the previous generations when it comes to taking decisions with money. They are more aware about the investment opportunities ahead. They are very clear they are here to take the money. But are they also creating a lot of mistakes while also looking at all of this? So give us an understanding of what are the key problems and the mistakes that usually Gen Zs are facing at this point in time, or making at this point in time, as they are on their fintech journey.
Yeah, first of all, thank you for having me on the show, Sakshi. It is always a pleasure to talk to you. Now, coming to your first question, which is about the problems that Gen Zs are facing. And I think once we acknowledge the problem, only then we can talk about the solutions. So a clear trend that I can see is that, a lot of Gen Zs, people who are in their 20s or in early 30s, they are taking a lot of borrowings or loans. And without even realizing that how much it can dent their financial planning in the long term. So just to quote some of the data that, today personal loans, in personal loans, the top category is vacations. People are taking a lot of loans. Almost 27% of personal loans are taken for vacations these days. And this has displaced the top category of home renovation, which used to be the top category. So earlier, before 2020, we can see a clear change in the trend before 2020 and after 2020, once the social media has taken over. And, today, I think the aspirations are industrialized. So when I say that aspirations are industrialized, means that, people are wanting to copy the influencers. I mean, not for the...
Welcome back on Business Today, ladies and gentlemen. We continue with our coverage of quality first quarter earnings coming in from corporate India. And in this context, we are joined by the top management of mid-sized auto-focused software developer KPIT Technologies. Sachin Titekar, joint MD and co-founder at KPIT Tech, joins us, along with Ms. Priya Hardikar, CFO of KPIT. The numbers are right there in front of you. A 9 percentage point uptick in first quarter sales at 1,675 crore rupees. Profit unfortunately slipped 32% lower to 116 crore rupees, as a slowdown in the auto sector, especially in Europe, and OEMs being under pressure because of Chinese competition, and of course a bit of a forex loss that came in has been the major reasons as to why profit is down 32%. We'll start with Priyaji. Namaste and a very warm welcome, both of you. Ma'am, terrible times in the market, and the contraction is fairly visible on your P&L statement as well. Would you explain to our audience how did this 32% slip in profit happen and why?
As you've rightly mentioned, Shell, this automotive industry has been facing these significant global challenges, whether it is competition from China, geopolitical tensions, or tariffs. All of this basically means for our clients, supply chain disruption, and it has impacted their cost and input prices. All of this put together impacted us. We actually a month ago did give a disclosure that because of this we see some of our clients doing drastic measures such as doing some job cuts, or some of them have also taken a big write-off to their P&Ls, restructuring it. So most of the OEMs that we have on our clientele have gone through this. Our top two clients basically gave us the reduced budget, therefore. And a month ago, we gave a disclosure of this potential impact on our P&L. Accordingly, if you look at the Q1 results, we see YOY degrowth of 1% in reported dollar terms. And in terms of CC, constant currency numbers, quarter on quarter, it's a 3.6% decline, while we are anticipated around 5. The reported EBITDA is 17.2%. All of this revenue decline has translated into reduction in profits. That has been the primary, reason, and therefore the reduction in PAT, one time, apart from just one-time forex loss and otherwise, but those are business as usual. I think the profitability has impacted purely because of the reduction in the revenues.
Right. Let's get Sachinji to the conversation. Paint for us a picture, Sachin, of what your clients in Europe are telling you. How is the automotive scene changing because of this increased competition that we see from Chinese OEMs? I believe the price point is mouth-watering in Europe when you compare Chinese products to, the traditional Volkswagens, the BMWs, the Mercs.
Absolutely. Good morning to you, Shell, and thanks for having us. Let me just talk about a specific issue that we faced recently, and that was related to two of our top clients. And one was in Japan, and they cut some of their vehicle programs, especially electric vehicle programs that we were working on. That happened in Q4. That had significant impact on us because it was our number one client. And then, as luck would have it, our number two client gave a profit warning towards the end of last quarter. And that had significant impact on our revenue, and we didn't have enough time to adjust our costs. So obviously, the disproportionate hit on our bottom line. Having said that, to answer your question, yes, there are significant challenges, specifically for European OEMs and some of the Japanese OEMs. If you look at them, their number one market was China, number two was US. In China, they've been consistently losing market share for the last 3 years now. And China market itself dropped by 25% year on year in the first half of this year. So that made things worse for the European OEMs. And on top of that, they have tariffs in the US, so which is the second largest market. So they're actually getting squeezed in between. And it's the same case with Japanese OEMs. And all of these happen to be some of our top clients. This is a structural change. This is not, a cyclical change. This is a structural change because of the competitive landscape that has been disrupted by the Chinese car players. So all of our European, and essentially to your point, Shell, there is 30 to 40%, if not 50% cost difference. And some of the features are even better. And the Chinese have the ability to deliver features and new products much faster than the European and the Japanese ones. So there is a lot of catching up to do. Having said that, all of our European clients and Japanese one, they've been working on increasing their time to market and reduce cost. And I think it's a structural change that they all have to go through. And as one of their key partners, it's also our responsibility to help them in this journey to not only reduce the cost of their product by 30 to 40%, but also to help them reduce the cost of their production to the same degree. So this is the change that everybody has to go through, and it's going to take some time. But our commitment to our client remains. We've been with them for several years through ups and downs, and this is another up and down that we have to go with them. That's how we look at the current scenario.
Sachinji, you work on the innards of the auto, four-wheelers, and I am an auto enthusiast in terms of, trying to buy the best of them. I can tell you for certain, the price point at which the Chinese work is impossible to match in Europe, plus the technological leap that Chinese vehicles have taken over the last 5 years vis-a-vis their European and US counterparts. Even Japanese products fall way short of the kind of work that China is routinely coming out with. Let's get Priyaji into the conversation. So H2, now that calendar H1 is, calendar 2026 H1 is out of the picture, how does H2 look against the backdrop of two top clients having a flutter in their heart and margins going for a toss? Priyaji, your job is cut out for H2.
Absolutely. So
Sachin is laughing.
No, we are all in it together, Shell.
So we expect growth to return in H2, performing better than H1. It will be led by Q4 driving the recovery. Profitability is also expected to improve naturally once the revenues, improve, and the current headwinds in terms of geopolitical pressures and all the other factors that Sachin mentioned ease a little bit. We have been working on several levers over last few quarters, not just now, but we will now strengthen it and maybe speed track it to support the performance improvement. That includes the broad-based growth from our existing OEM clients, increasing our wallet share with them, and larger program responsibilities. We are also expanding our offerings in these areas of cost reduction programs. You would recall we have done a acquisition, namely CareSoft. So from there, we are planning to expand our offerings into cost reduction programs, value engineering and design, and after sales transformation. This is apart from driving the AI-led, cost optimization programs or delivery efficiency. All of those have been driven as a routine course of business. However, to drive growth, these are the initiatives that we are taking up. Basically, improving broad-based growth for new passenger vehicle OEMs also, which we are targeting, particularly stable and successful companies in Korea, some of them in Europe. Our engagement with them has increased. So we are focusing and accelerating on these relationships, and we are quite confident that these will fructify in few quarters, and you will see the results coming up. We are engaging with new logos for off-highway and commercial as well. So you will see all of those fructifying in coming quarters to come.
Right. Sachin, this question is for you. It is no reflection on the kind of work that KPIT is doing. It's just that how the markets are understanding this change that you so very well put. Now, sadly, you've been at the wrong end of the stick. The stock has corrected from 1900 all the way down to about 530 that you see in July, and today the price is somewhere in the vicinity of 638. I see very, very heavy buying that's happened on your earnings day. That is some sort of cheer. In fact, if you look at the volume on that particular day, that's the highest since 6 odd years, the data of which is right there in front of me. Tell us, is this a pivot? Pivot in the sense that in your opening remarks you mentioned that this is here to stay, this change that you talk about. Would you want to add new verticals over the next 3, 4 quarters, 5 quarters, 2 years or so, so that you move away from the auto industry? You are hit by a double whammy of the software sector taking it on the face, plus a global slowdown in auto. So do you want to pivot away from this?
No, it's a valid question, and Shel, let me tell you what our strategy has been for the last 2 years. It's to have a more balanced growth. If you look at the tremendous growth that we had since COVID till about last year, that was largely on the back of 8 PASCAR OEMs. That actually drove most of our growth. And what we started doing 2 years ago was to diversify in 2 ways. One is, have little more balance growth in terms of our clients, what we call T25 clients. So now we have more passenger cars. So we are going deeper and wider with our existing clients. This is number one. Number two, as Priya mentioned, we have also acquired new clients that we never worked with in passenger car business. One from Japan, one from Korea. There are 2 from North America and so forth. We are working with more clients. Secondly, we started to make investments in off-highway segment, and that's looking very promising to us. Obviously, it's going to take time before it actually matches up to the level of growth that we have had in passenger car segment. But that's the second part where we see growth over a period of time. And third is the commercial vehicles, so trucks and buses. Unfortunately, that segment has also gone through a cyclical cycle of seasonality of another year or so. We believe that business will pick up in 2027. And so this is one part. One is the diversification within the mobility segment. And we have started to make investments in micro mobility. And we are also looking at applying our technologies in other parts, adjacencies like defense and space tech, getting into robotics. So wherever, our autonomous technologies, our propulsion technologies, all of these can be applied very clearly to these adjacencies. So we have started to look at those very seriously. This is one side of the story, which is the diversification of our client base. The second is, if you look at our business, there are 4 parts to it. And the growth was primarily driven by, what was called SDV, or what we call in-vehicle software, right? That was our biggest business. But there are 3 other parts to our business. One is the propulsion business, which used to be our biggest business till about 4 years ago. Second is off-board. So your diagnostics, your over-there updates, cybersecurity, and after sales that Priya talked about. That is also our fastest growing business now. And last but not the least, with the acquisition of the business of CareSoft, we have also started to look at engaging with our clients on vehicle engineering, design, and also manufacturing engineering. This is where we think with the combination of these 4 forces and broad-based clients, we should have a lot more resilient growth going forward. Now, this has been the strategy for a couple of years. It's just that some of the changes are just happening at a much faster pace. So we need to respond with a greater sense of urgency. And that's what we are actually working on. So yes, things change externally, and we are in the process of building a more resilient organization to some of these changes. So that's really strategy over the next several quarters, and you'll see, as we speak, once every quarter after our quarterly earnings, we'll sort of demonstrate that the progress that we are making with new clients in automotive sector, new acquisitions of the clients, and the progress that we are making on off-highway and trucks as well, and also the broader base of services. So that's really the plan going forward, Shell, given all the headwinds that the world has faced, especially the automotive industry.
Yes, I've been tracking your stock from the IPO listing that we just spoke about, off mic. Priyaji, I don't know whether this is the right time to ask this question or not, but it has to be asked for the benefit of viewers and shareholders. What about staff? How have salaries moved? Are you giving increments? Are you hiring to strengthen and deepen your bench? How is that part of the business doing?
Look at our headcount, we have, as Sachin mentioned, we are slowly moving away from headcount related business. So our business is now more fixed price based, more outcome based. We are moving to large engagements where our AI productivity related tools are deployed, and therefore the direct linkage to headcount has been reduced considerably. As you know, over last 1.5 year, we have added to our staff the CareSoft and the Indian staff members, so that has been a significant increase. In terms of hiring, yes, it's not going as great that we did maybe last couple of years ago, but our focus on hiring freshers or mid-tier junior level employees will remain. We will also, be continue to be connected with certain academia to whom we have been connected over the years. We've run the programs of, software defined vehicles with them, and we have been deeply engaged with them. So our engagement with them will remain. However, the hiring will slow down. We do believe that our bench and our, fresher level hiring will sustain over the coming quarters. Also, in terms of increments, Shell, in last 2-3 years, you've seen industry itself, moving away and have been little bit slow in terms of increments or otherwise. But KPIT has been given significantly high numbers of increment last year. This year, because of this sudden downpour, we have simply delayed it. The increments will happen. But we have delayed it. Maybe we will start first with the junior staff and the freshers, in the coming quarters or so. So the increments will happen, maybe delayed because of the current downpour, and our employees continue to remain our strength. They are our biggest strength to move on and also deliver the profitable growth in coming quarters.
Right. On that somber but optimistic note, Priyaji and Sachinji, we'll call it time. We've interacted in the heydays of the tech boom, the heydays of KPIT Technologies, and in this significant downturn that the company, the sector, and the world is experiencing. As experience tells us, this too shall pass, and better days ahead. And we look forward to them. Thank you for your time, and we look forward to interacting with you in the second quarter when things will be better.
Absolutely. Looking forward to it.
Thank you for your optimism. Thank you for having us. Thank you.
Very much appreciated.
That, ladies and gentlemen, was the top management of KPIT Technologies, where Q1 sales have gone up by 9%, but profit shrunk 32% in the 3 months gone by, mainly on account of a global slowdown in the auto space, increased Chinese competition in Europe, which is the biggest market for KPIT Technologies, and of course, an unforeseen forex loss. Thank you for watching. Stay tuned.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is our special edition where we are going to be focusing on the upcoming IPO. Manipal Health is among India's largest private hospital operators, and its IPO is now going to be launching next week for all the subscribers. It will definitely rank among the country's biggest healthcare listings in recent years that we've also seen. It's a 9,200 crore rupees, a little over that kind of an IPO that is coming in with a fresh issue of 8,000 crores, and the rest of the portion will be offer for sale from existing shareholders. The IPO opens on July 29th, will also close on July 31st. There is a price band that's been announced between 560 and 590 rupees as well. Let me now welcome our guest on board. We have the MD of Manipal Health joining in for a special conversation. Warm welcome to you, sir, and thank you so much for taking the time out. Many congratulations. The street is looking forward to your IPO. First up, give us an understanding of what is the aim with which you're launching this IPO.
So first of all, thank you, Sakshi, for having me on your show. The primary purpose of this listing is to, the inputs would be used, the proceeds would be used to repay and actually prepay some debt that we have. We had taken about 6,000 crores of debt some months ago to complete the acquisition of Sahyadri Hospitals. And the primary purpose of this listing is to raise proceeds to repay that debt.
Okay. So could you also help us understand, when it comes to the offer for sale, who are your selling shareholders and what would be the stake, or shareholding pattern look like post the IPO?
So, Sakshi, it would be proportionate. All the existing shareholders are selling proportionately. In terms of post-listing shareholding, between Temasek and the Manipal Group, they would continue to be promoters.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers your specific stock questions on the program. In case you're here for the first time, WhatsApp number is on your screen. Send me your questions here along with your name, location and contact details. Now you can also join us live on our YouTube channel, Business Today. Go to the Daily Calls live video and then go to the comment section to send us your questions. We'll be happy to address all of those queries with our top market experts who join in over the next 50 minutes on the program. The markets we'll start off with are trading mildly positive. We are at 24,250 and around that level, just about 5 points of a gain. And we have seen a very narrow band of range since the morning trading action up until the halftime trade. Although the IT stocks are continuing to gain ground, and we have already seen a fantastic July pan out for the IT index. It's cooled off from the high point of the day, but still is hovering about 1.3% higher. Beyond the IT, we are also seeing autos, oil and gas, pharma and infrastructure stocks also have some kind of gaining ground at this point in time. But real estate is the one which is the top losing sector at this point in time, 1.5% lower. You're looking at the banks that have lost a bit of ground too. Mid and small caps are also under a tad bit of pressure at this point. But let's welcome our guest on board to seek what exactly is he expecting as far as the markets are concerned. Let's welcome Osho Krishnan with us from Angel One. Welcome to you, Osho. Good to have you with us as always. Your sense on how are you looking at the markets? We kickstarted the August series on a very strong note. How are you looking at what's panning out?
Very good afternoon, Sakshi. Firstly, thank you for having me at the show. Well, yes, no doubt we have seen very strong momentum in previous trading session. Today, again, there has been some kind of subduedness in the market, but overall, there has been some kind of positive stature that can be seen in the undertone. But overall, Nifty on the technical front is at a very crucial juncture. The sloping trend line of the recent close for Nifty is approximately around the same levels, 25, 24, 250 kind of a zone. So I expect this will be a very critical juncture for market to decide on the trend. But overall, looking at the undertone, I expect that till the time Bank Nifty does not contribute, we might not witness a kind of a strong surge in the market. So for Nifty, I am expecting 24,250 as a very crucial juncture. If there will be a sustainable move beyond this, then 24,350 followed by 500 can be seen on a positional point of view. But for short term or for intraday perspective, dips should be utilized to take position. So 24,150, 24,180. This is a very strong support levels. If there will be any kind of correction, any kind of profit booking from these levels, then this might give some kind of positive traction in the market. But again, on the other hand, Bank Nifty is not doing very positively. So until we witness some kind of a strong traction in the Bank Nifty, one should not be very much certain about bullish momentum in the market. For Bank Nifty, until it breaches the 20-day exponential moving average, which is approximately around the zone of 57,300. So till that time, I'm not very much bullish in the banking counters, and accordingly, I'm not very much bullish in the Nifty 50 as well. But no doubt there is a stock-specific action, thematic movers are there in the market for day traders. So one should focus on those themes, those sectors to have some kind of outperformance in them.
Okay, let's also take now a fresh view as far as the IT sector is particularly concerned. Osho, before we kickstart our discussion with the queries that are coming in for you, IT index after that stellar 16% of a run-up also in the month of July, what is it that you are projecting going forward? Will the rally sustain?
See, overall, no doubt there has been very strong momentum in the whole IT space. The whole IT space has only contributed to the bullish traction in the recent period. But again, with the kind of a strong momentum that we have witnessed specifically in the past 4 to 5 trading session in the IT index, some kind of profit booking or some kind of consolidation might be seen because the IT index is now hovering around the previous swing highs of 31,800, 31,850. So that will be a very crucial juncture for Nifty IT. If it breaches the zone of 800, then from there onwards we can see some kind of strong momentum to be continued. But now it's time to have some kind of caution, some kind of trailing stop losses should be kept in the IT counters. All the mid cap, large caps, all the counters are looking very attractive at current levels. But this might be seen as a FOMO segment, and one should not be very much aggressive at present levels. Definitely, it's looking very aggressive, but one should definitely keep a trailing stop losses to the positions that are being taken in the IT.
Okay, fair point. Let's start taking some queries now, Osho. We have a lot of our viewers joining in early to ask you the questions that they have from their portfolios. We have Satyan, Mr. GD Rao joining in. We have Subbu, Ankur, Vinita, Ranjeev. Welcome to everybody who's joining in early. We'll start taking your questions. We'll take this first one from Mr. GD Rao from Andhra. He says, I want to know about Canfin Homes and Home First Finance from the housing finance space. Which one is better stock between both of these for the next 6 months, if you could advise me, Osho sir? Canfin Homes vis-a-vis Home First Finance.
See, firstly, for Canfin Homes, the counter is at a very strong historical support zone of 800, 820. So from these levels, historically, we have seen a kind of a strong cushioning, and from there onwards, there has been some kind of retracement as well. But present levels, technical developments has been negative, but overall, the historical trends showcase that these levels are comfortable enough to take positions in the counter from medium-term perspective, but again in a staggered manner because the counter has already been into a strong correction zone and now it is having some kind of a stability at these levels. So I'm expecting that in the coming period, there is a possibility of some kind of recovery in the counter, not very much aggressive in the targets, but near about 870, 880 can be seen as the near-term technical pull in the counter. So one may look for technical pull in Canfin Homes. Then the other counter, Home First, is also looking quite decent, not very much positive on the technical front. So some kind of correction might be seen near about 1140, 1135 is the zone where one should try to accumulate the counter, but in a staggered manner. And in the coming future, there might be some kind of possibility of further movement in this counter. If not, then one should even try to accumulate further towards the dip of 1075 to 1080. But at current levels, it's not that one should be infuse a lot of capital in this counter.
Okay, got that. Osho, we have the next question. बहुत सारे हमारे दर्शक हमारे साथ हिंदी स्ट्रीम से भी जुड़ रहे हैं, हमारे डेली कॉल्स हिंदी लाइव से भी। अथर्व बैनर्जी का सवाल यहाँ से लेते हैं, ये आपसे पैराडीप फॉस्फेट्स के बारे में पूछना चाह रहे हैं और लिखते हैं, दिस इज द बेस्ट शो, थैंक यू सो मच for writing in Atharv, and I hope that this show truly helps you with the guidance from top market experts like Osho. पैराडीप फॉस्फेट्स में हमने देखा था कि रिजल्ट्स के बाद एकाएक काफ़ी बढ़िया मोमेंटम देखने को मिला था, आज थोड़ा कूल ऑफ है 2.5% तक के आसपास का। अभी फिलहाल कैसा लगता है आपको ये शेयर शॉर्ट टर्म के लिहाज से?
सबसे पहले काउंटर में नो डाउट पिछले कई दिनों से कंसोलिडेशन था, कल के दिन हमें वॉल्यूम बेस्ड ब्रेकआउट देखने को मिला है, तो ओवरऑल ट्रैक्शन अब यहाँ से बुलिश कन्वर्ट होते हुए नजर आ रहा है। मुझे लगता है शॉर्ट टर्म में 170-175 तक के जोन ये काउंटर टेस्ट कर सकता है, वहां पे थोड़ा सा रिव्यू करना पड़ेगा, बिकॉज ऑलरेडी अगर हम देखें तो पिछले 2-3 महीनों से काउंटर में एक अच्छा पॉजिटिव मूवमेंट है, लोअर जोन से नियर अबाउट 105-110 से एक अच्छा बाइंग मोमेंटम में रहा है काउंटर, तो थोड़ा प्रॉफिट बुकिंग हायर लेवल्स पे बन सकता है, तो 170-75 के जोन के लिए पोजीशन बना सकते हैं।
ओके, नेक्स्ट क्वेश्चन हमारे पास सुबू का है, लिखते हैं, गुड आफ्टरनून ओशो सर, प्लीज एडवाइज मी ऑन विप्रो, 209 पर है मेरे पास, प्लीज गाइड व्हेन टू एवरेज एंड व्हाट आर द मीडियम टर्म टारगेट्स एंड स्टॉप लॉसेस।
The first target for Wipro is near about 200 only, so I'm expecting once it reaches the zone of 200, then we need to again review the counter, because recently there has been a strong correction in the counter, so I'm not very much bullish in the counter, but 200-205 can be seen as immediate target for Wipro.
ठीक है, next question we have is from Ankur Modi. He says, hi Sakshi, good afternoon, hope you're doing good. We are very well, thank you so much Ankur for asking, and I hope the same for you. नीवा बोपा पर आपसे पूछना चाहते हैं, कैसा लगता है आपको ये स्टॉक, क्या करंट लेवल्स पर इसे खरीदना चाहिए या नहीं?
अगर मीडियम टर्म पर्सपेक्टिव के लिए देखें तो यस, यहाँ पे करेंटली एक्यूमुलेट किया जा सकता है काउंटर, एक अच्छा ट्रैक्शन है, करेंटली कंसोलिडेट कर रहा है, मुझे लगता है आने वाले दिन में 92 से 98 के जोन में होवर करते हुए नजर आ सकता है, तो करंट लेवल्स पे एक्यूमुलेट करने की राय बनी।
Okay, next we have Rajendra writing in. He says, I want to know about Tata Elxsi. If you have any view, Osho sir, please share.
For Tata Elxsi, overall view is very negative. The counter has been into a negative terrain. There have been multiple rejections at the higher zone of 4,000. So until there is a decisive surge beyond 4,000, 4,100, till that time better to stay sideways from the counter.
ठीक है, नेक्स्ट क्वेश्चन लेते हैं विनीता गुप्ता का, ये आपसे पूछना चाह रही हैं कि विच इज अ बेटर स्टॉक फॉर फ्रेश एंट्री, स्किपर और अतुल ऑटो? बिटवीन दीज टू आई हैव ओनली अ 1 month व्यू एंड आई एम लुकिंग फॉर टारगेट एंड स्टॉप लॉस ऑल्सो इन विच एवर स्टॉक यू एडवाइस। स्किपर या अतुल ऑटो, क्या टेक्निकली अच्छा लगता है कोई सा स्टॉक?
Firstly, Skipper is looking quite good to me at current levels. एक अच्छा मोमेंटम है काउंटर में, मुझे लगता है यहाँ पे एक अच्छा ट्रैक्शन बन सकता है, तो स्किपर को यहाँ पे एक्यूमुलेट करने की राय बनेगी। हायर लेवल्स पे नियरली 570, 580 का पहला टारगेट रहेगा, उसे ब्रेक थ्रू करता है तब यहाँ से और डिसाइसिव मूव देखने को मिल सकता है। बट एट करंट लेवल्स वन मे लुक टू एक्यूमुलेट, 505 शुड बी द स्ट्रिक्ट स्टॉप लॉस दैट वन शुड फॉलो। अतुल ऑटो में थोड़ा ट्रैक्शन बन रहा है, बट अभी भी अपने रेजिस्टेंस को ब्रेकआउट नहीं किया है, तो अगर 528 के ऊपर निकलता है काउंटर तब बाई करें, उसके ऊपर नियरली 600 तक के टारगेट्स देखने को।
ठीक है, नेक्स्ट क्वेरी लेते हैं और ये सवाल हमारे पास आया है मनोज गुप्ता का। ही इज इन न्यू दिल्ली एंड ही सेज, आई वांट टू मेक अ फ्रेश एंट्री इन वरुण बेवरेजेस सर, वुड यू एडवाइस दैट एट द करंट level as well, and what is your overall view for the next 6 months to 12 months on this stock? Now the company came out with the earnings also, so we did see some pressure as far as the volume growth is concerned. The stock has been hovering just about mildly higher, 0.3% up at 448. What is your own understanding of the charts?
See, overall, the counter is quite negative as of now. There have been multiple negative developments on the technical front, so not very much bullish at present levels. On the higher end, till the time it does not process 500, 500 decisive manner, the technical view remains sideways to negative, so better to avoid at present levels and wait for any reclaim towards 505 zone. If it happens, then only try accumulating the counter.
Okay, let's take another query. This one is from Akhila from Hyderabad and says, I want to know on UPL from Osho sir, I bought this at 630. I can hold and maybe exit in next 3 months. If you could advise me, what is the strategy?
Again, UPL, the technical structure is very negative. There has been multiple rejections at the higher levels of 650, 55 odd levels. So overall, the technical view remains sideways to negative. But at these levels, we have seen a kind of stability in the counter. So from these levels, the downside risk is limited near to the zone of 570. So stay invested in the counter. If it breaches the zone of 650, 55, then only some kind of positive traction can be seen in this.
Okay, let's take another one. This one is again from one of our viewers. Okay, Mohit. He's from Ludhiana and he says, good morning to both of you. Good afternoon to you as well, Mohit. Good to see your question. He says, I have 200 shares of Container Corp and this is at 512. His time horizon is 1 year. Osho, what would you guide him?
Hold the counter. The counter have now started gaining some kind of traction. No doubt in the short term period, I am expecting a kind of a strong resistance around the zone of 535, 540 odd levels. But if it breaches the zone, then from there onwards, we can see strong momentum. So if the time horizon is longer, one should stay invested.
Okay, fair point. I hope that you've taken down that note. We will take Seema Ghosh's question next. She says, good afternoon, how are you? We are very well. Thank you so much, Seema, for asking. Hope the same for you too. L&T Technology Services पर इनका सवाल है 3800 पर इन्होंने खरीदा हुआ है. When should she average? What could be the trend going forward? Any target also if you can advise here?
The first target for this counter is 3800. 3800 is a very strong resistance zone for the counter. If it breaches the zone of 3800, then we might see another 800 points of the rally. So near about 4600 can be seen as the next potential target. So it will be advisable to wait for 3800 to get retested, reclaimed, and then only start accumulating.
ओके नेक्स्ट सूरजीत हैं कोलकाता से. ये लिखते हैं, सर प्लीज़ एक्सप्लेन MTAR टेक्नोलॉजीज में आप क्या ट्रेंड देख रहे हैं और कैसे इसमें ट्रेड करना चाहिए. MTAR टेक्नोलॉजीज वी डू नो हैज़ बीन ऑफ लेट कमिंग अंडर सिवियर प्रेशर बट टुडे देयर इज़ अ रीबाउंड. You can see a 5% upper circuit. Last some of the sessions we have seen consistent lower circuits onto the stock as well. Your sense on how should one be viewing MTAR technologies, Osho?
See, overall, एक अच्छा correction देखने को मिला है काउंटर में. I am expecting that with the kind of technical developments, there is a possibility of further downside movement in the space. So 4600, 4700 is the support zone for the counter. If the counter tests the zone of 4600, then it will be advisable to start accumulating the counter. Till that time, better to stay sideways from this.
Okay, I hope that this has helped you out as well. Let's take the next question. सयंतन दत्ता का सवाल है नेक्स्ट और ये आपसे मोती सन्स जूलर्स के ऊपर पूछ रहे हैं कि इसमें किस तरीके का टेक्निकल पैटर्न डेवलप हो रहा है. सर प्लीज एक्सप्लेन एंड वेदर देयर इज एनी स्ट्रैटेजी ऑन दिस यू वुड एडवाइस.
See, again, it's a penny counter, so the conviction on penny counters are quite low for me. But I expect that with the kind of developments there has been in the recent period, the counter is trying to surge beyond the 200, the simple moving average. But overall, the technical view will be bullish only once it reaches the zone of 16. 16.5 is the zone where one can see some kind of breakout. Only above those levels, it will be advisable to accumulate.
Okay, next we will take Ayush's question. He's from Jhansi and he asks you, Osho, which is the best defense stock to invest in for long-term horizon with moderate risk reward?
The preferred pick will be HAL. HAL is a very strong candidate from the defense space. So from a conservative approach, one should stay invested in HAL or one should even start accumulating HAL at current levels. I'm expecting that in the shorter term duration, 5,000 is the target. If it breaches the zone of 5,000, then again, from a longer term perspective, we might see a further strong rally going forward in the market.
Okay, fair point. I hope this has helped you. Let's take the next query. We also have more people joining in on our Hindi stream as well. नरेश मेहता का सवाल लेते हैं हिंदी चैनल से भी हमारे. टाटा केमिकल्स के ऊपर पूछना चाह रहे हैं. ये 752 पर बाय किया है, होल्ड करें या एवरेज या सेल, क्या सलाह होगी टाटा केमिकल्स पर?
टाटा केमिकल्स काफी वीक है, अपने शॉर्ट टर्म मूविंग एवरेज के नीचे होवर कर रहा है एंड कंसिस्टेंटली 200 सिंपल मूविंग एवरेज से रिजेक्शंस देखने को मिल रहे हैं. सो व्यू नेगेटिव है, मुझे लगता है अभी और डाउनसाइड इसमें देखने को मिल सकता है। 660 658 का एक फाइनल सपोर्ट है, तो उसका स्टॉप लॉस लगाए रखें। कोई भी बाउंस आता है नियर अबाउट 740 745 के आसपास, तो इससे एग्जिट करने की राय है।
Fair point. Next, we have Vikas Ahuja writing in. He wants to ask about LG India. He has got 10 shares at 1140 and wants to know, can he hold for the next 3 to 4 months horizon as well? Well, we will see a lot of festive season, wedding season related purchases maybe. Do you think consumer electronics major LG has any kind of an uptrend to track?
Overall, the technical setup is not very convincing at present levels, but I expect that with the kind of setup the counter is into, the downside seems to be limited. So 1480 should be kept as a stop loss or a trailing stop loss in the counter. If it breaches 1480, then again it might plunge towards the zone of 1380, 1370. So keep a strict stop loss of 1480. If there will be any kind of bounce beyond the zone of 1570, 1590, then only we can see some kind of a strong momentum coming back.
Fair point. Okay. We have Arihant Pavpant writing in. He says, I'm a big fan of Business Today channel. Thank you so much, Arihant, for writing in. He says, I want to know about KEC International. Any fresh entry level that Osho sir you can advise?
At present levels, the technical is very weak, so I won't recommend to catch the falling knife in the counter. So I will wait for the counter to breach the 100 exponential moving average, because that has been a consistent rejection zone for this counter. So on the higher end, 540 is the zone. If it breaches 540, then it will be advisable to start a clean.
Okay, not right now. Keep an eye out on this stock. Only after it reaches 540 odd levels should you look at it again and maybe take a fresh advice then. Let's take the next query. This one is from Seema. She's from New Delhi and she says, hi Sakshi, I have Sangvi movers at 421. What should I do with this stock for short to medium term time frame?
The counter has seen very strong momentum. The counter have already seen a strong vertical move from the zone of 260 towards 470. Still, it is looking very positive. The only caution signal is there is now negative divergence in the counter. So it will be advisable to trail profits with a stop loss of 418, and on the higher end 470 is the first target. If it reaches 470, then again the momentum will be seen in this space, else better to exit.
Okay, let's take the next question. This one is from Mafa, who says, hi Sakshi, good afternoon to you as well. I want to know about Kaplan Point Laboratories, he says. 2650 पर इन्होंने लिया हुआ है. अब पूछना चाह रहे हैं आपसे, अगले 3 से 4 हफ्तों के पॉइंट ऑफ व्यू से क्या करना चाहिए? ट्रेडिंग का नजरिया है एक ही महीने का.
बहुत ही हाई लेवल्स पे लिया को बहुत ही स्ट्रॉन्ग वर्टिकल रैली के बाद कंसोलिडेट करते हुए दिखाई दे रहा है. सो टाइम वाइज करेक्शन में एंटर हो सकता है, बिकॉज ये इसका ब्रेकआउट जोन भी है. तो यहाँ पे काफी कॉशन रखना चाहिए. मुझे लगता है कि अगर 2450 के नीचे स्लिप करता है तो यहाँ से एक और करेक्शन जोन में एंटर कर सकता है. 2450 एक फाइनल स्टॉप लॉस से होल्ड करें. हायर लेवल्स पे अगेन एक ब्रेकआउट के पास खड़ा है, तो 2680 2700 का जोन है. अगर इसके ऊपर निकलेगा तभी बाइंग मोमेंटम बरकरार रहेगी, एल्स स्ट्रिक्ट स्टॉप लॉस के साथ पोजीशन को होल्ड करने की राय.
ठीक है. सवाल है स्वाति योगेश्वर का नेक्स्ट. शी राइट्स इन एंड सेज, वेरी यूजफुल शो फॉर अस. थैंक यू सो मच स्वाति फॉर राइटिंग इन. चेन्नई पेट्रो पर आपसे पूछना चाह रही हैं ओशो, फ्रेश एंट्री लेवल इस पर क्या हो सकता है?
चेन्नई पेट्रो काफी अच्छे ट्रैक्शन में है, काफी अच्छे मोमेंटम में है. सो इसमें करंट लेवल्स पे भी बाई किया जा सकता है. अगर शॉर्ट टर्म का व्यू है तो 1360 का पहला टारगेट रहेगा काउंटर में. हायर हाइस का फॉर्मेशन है, तो कोई भी यहाँ पे कॉशन के सिग्नल्स नहीं है. 50 डे काफी स्ट्रॉन्ग सपोर्ट जोन रहा है काउंटर के लिए. 1360 पहला टारगेट है, उसे ब्रेकआउट करता है तो और भी कंटिन्यू मोमेंटम देखने को मिलता है.
Okay, next let's take another query. This one is from Sai from Hyderabad. ये आपसे 20 माइक्रॉन्स के ऊपर पूछना चाह रहे हैं. 220 पर ऑलरेडी इन्होंने लिया हुआ है. यहाँ से शेयर कैसा परफॉर्म करता हुआ आपको नजर आ रहा है? इस पर क्या स्ट्रैटेजी होनी चाहिए? फटाफट से शेयर को भी उठा लेते हैं और देखते हैं अभी कैसा चल रहा है ये शेयर. आज ऑलमोस्ट 1% ऊपर है, लेकिन साइड बेस मोमेंटम पिछले 1 महीने में, पिछले 6 महीने में हालांकि 15% तक का अप मूव दिखा है, लेकिन ईयर टू डेट नेगेटिव है अभी भी 4% तक के आसपास से. तो वॉलेटाइल रहा है अभी ये शेयर. कैसा आउटलुक है आपका?
और पहली बात, थोड़ा लिक्विड है, सो वॉल्यूम काफी कम है काउंटर में. सेकेंडली टेक्निकल डेवलपमेंट्स तो थोड़े पॉजिटिव होते हुए दिखाई दे रहे हैं। तो 218 का इसका पहला रेजिस्टेंस है। 218 अगर ब्रेक थ्रू करता है तब यहाँ से एक और अच्छा मोमेंटम बनते हुए दिखाई देगा। एल्स अगर सपोर्ट इसका अगर हम देखें तो नियरली 190 188 के आसपास है। उसके स्ट्रिक्ट स्टॉप लॉस से काउंटर को होल्ड करने की राय।
Okay, let's take another query. This one is from Saran. He says, okay, we've addressed a query on Wipro, so we will skip that. I hope, Saran, you can take the earlier advice that Osho has given on Wipro and you'll be able to abide by that. We'll take Chandrasekhar's question next. Persistent systems के ऊपर इन्होंने पूछा है कि can I buy at the current market price and any stop loss or target that you can advise. Yet another stock on IT. अब देखा जा रहा है जैसे ही IT में रिवाइवल आ रहा है, बहुत सारे सवाल IT स्टॉक्स को लेकर एक बार फिर से आ रहे हैं.
See, again, for persistent, this might be an opportunity or this might be a kind of a FOMO candidate as well. But technically, there has been a breakout. So I'm expecting that with the kind of breakout the counter have witnessed, there is a possibility of further movement towards the zone of 6,000. But it will be advisable to trail with strict stop losses. At present, 5,400 is the support zone. So better to trail stop losses at 5,400. 6,000 will be the first target that one can expect.
Okay, fair point. I hope you've noted those levels down. Jatin Dave has the next query. He says, good afternoon, Osho sir. I have CG Power in my portfolio at 829. My quantity is 750. Please suggest me a target and a stop loss that I can maintain for the next 3 months on CG Power.
See, overall, the fundamentals of the company are very positive. There has been very strong momentum in the counter from the breakout zone of 780 towards 980. The counter have rallied in a vertical manner. So I expect that the recent correction of profit booking might see some kind of further aggravation towards, again, retesting the neckline zone. So 780 can be retested, but again, I won't advise to exit the counter at current levels. So then one can even accumulate further on any dips towards 780. Overall, the technical structure is quite positive. Fundamentals are positive, and from a longer term duration, one should stay invested.
Okay. Next we have a query coming in. We'll take that last query and then we'll jump on to taking Osho's own top choice of stock ideas as well. This one is from Raju Tiwari. He says, Osho sir, please explain Murugappa Group's Shanti Gears that posted weak set of Q1 results despite healthy order book. Will it be a temporary slowdown onto the stock price or is it a good opportunity to accumulate? I'm a long-term investor. How would you advise me on Shanti Gears?
Shanti Gears, it's not in my track list, so I'm not able to find the exact technical for the. Just give me a moment.
Okay. Fair point. All right. Maybe we'll skip this question for now, but Raju, we'll try and get you another view from some other guest because Osho is not able to track this for you right now. Let's move on and take another query. We'll move on to our Hindi viewers as well. A lot of people who are joining in there too. And we'll take one last question. This one is from Shubham who says, Ajmera Realty पर बताइए सर 5,000 मेरे पास शेयर्स हैं 145 पर मैंने लिया है क्या करना चाहिए मुझे?
अगेन काउंटर थोड़ा वीक है बट मुझे लगता है थोड़ा ट्रैक्शन बन रहा है इस स्पेस में अभी तो होल्ड रखें लोअर जोन से हायर हाई का फॉर्मेशन है 118 120 का एक स्ट्रॉन्ग सपोर्ट लेवल्स है तो पोजीशन को होल्ड करें हायर लेवल्स पे 140 को अगर ब्रेकआउट करता है तो 155 से 158 के जोन रिटेस्ट करते हुए दिखाई देते हैं
ठीक है अब Osho now help us understand with this your own top choice of research stocks what are those and any fresh perspective that you can share with our viewers there.
Two counters are looking very strong and very positive on the technical front. The first one is Bharti Airtel. Bharti Airtel has given a very strong breakout in the last trading session. Today the counter is not doing much, but there has been a subdued movement in the space. So overall, I am expecting with the kind of technical breakout the counter has seen, there is a possibility of further movement on the higher end. So for a shorter term duration, 2000, 2040 is the target that I am expecting in the counter and 1910 will be the advisable stop loss for short term traders. The other counter is which is looking quite positive is Maxell. This counter has started gaining strong traction from the past week. Today it is already 2% higher, so it is looking very positive even at current levels. 1130.33 is the current market price. So one may look to accumulate this counter on the higher end. The first target that I am looking for is 1165. If it breaches 1165, then 1200 will be the next potential target for the counter. and on the lower end, 1110 will be the advisable stop.
Okay, fair point. I hope that this has helped you as well. Let's now thank you, Osho, for being with us on the program and for guiding all our viewers like you always do. It's always good to have you on the show. So hopefully we'll keep getting you back to get in touch with all the followers of yours on Business Today as well. Thank you so much for being with us on the program. Meanwhile, viewers, we are at 24,266, slightly picked up more momentum, but just about 17 odd points of a gain that's coming in there. Before we welcome our next guests, we will also look at some of the big movers and shakers in the broader markets. Look at the debut stock today, Indo-MIM. After a substantial listing gain of 45% premium, the stock has gone up to 54% of a rally on the listing day. That's the kind of strong momentum that we're getting. So congratulations to all those lucky investors of the IPO who got this allotment. Strong move there. Let's also pull up some of the other stocks that are doing very well. Lohia Corp also as a debut stock, 15% higher. It's holding up strong. A to Z Infra Engineering, about 10% higher. You're looking at Reddington, 9% higher post the earnings. Very strong move for that one. 63 Moons Technologies is up. So a lot of these mid-cap IT names that are definitely higher in the session. Then you're looking at Moil also about 7% higher. That's another stock, manganese ore, that's holding up. Elgi Rubber is also up in the session today, a very strong gain of about 6% coming in on the platform. Let's now welcome our guest on board. We have Ruchit Jain joining in on the platform from Motilal Oswal Financial Services to give us a fresh take on the markets. Ruchit, welcome. We're seeing a strong pickup as and when you entered into the Business Today show. Look at the markets. We are inching closer to 24,300 yet again, about a 46 point of a move. It's just happening as we speak. Your sense of where are we headed?
Yeah, hi, very good afternoon, Sakshi. Well, overall, we have seen that in the recent correction last week, markets have managed to form the higher bottom around 23,600 because in the correction previous to that, 23,100 was the low. Now, the support base of the higher bottom is formed at 23,600. And as we are moving higher, the support base is shifting higher. So this is a bit positive sign. So we may now see the index heading towards the 24,400 to 24,500, which was the previous swing high resistances. Now, for a bigger move on the index, we need a breakout about 24,500. Otherwise, till then, we would see some consolidation with a positive bias. And it's a buy and dip market. Whenever we get such declines and the markets comes near the support, that is reward ratio favor becomes favorable, take that as a buying opportunity. But broadly, I think 24,000, 24,500 is the immediate range for the Nifty.
Okay. Yes, you can actually see that spike right now, viewers. About 0.2% of a move that's come in now as far as the rally is concerned, just as how we began our conversation with Ruchit. And this gain is coming in from a lot of other sectors that are coming in and contributing beyond IT, auto, oil and gas that were already up. We are now seeing PSU banks come up about 0.2% higher. Metals are going strong, infrastructure, FMCG, some gains coming in there. So the breadth is improving largely. Look at the PSU Banks Index. That's the one that's seen a vertical spike right now. Smart move coming in on this one. Any indication on PSU Banks as to what's happening here? Ruchit, what would you advise?
So the follow-up move would be very important. Whatever companies have come out with the numbers, we have not seen any kind of momentum building up in many of those. And largely the Nifty PSU Bank Index has been in a sideways trend since last 2 months. So I think until we see a breakout above that 8,500, 8,600 zone on the Nifty PSU Bank Index, the near-term trend remains range bound or sideways.
Okay, fair point. I hope that this is a momentum that continues and sustain as well. Let's kickstart by taking some of your top choice of stock ideas because the markets are moving. We'll take that before Ruchit. Any suggestion of any stocks that you are able to pick out right now that may warrant maybe an intraday or a short-term call?
So Alchem Labs is one stock that we like for the short term. So in fact, if you see the pharma and healthcare space as a whole has really done quite good over the last few weeks. And Alchem Lab today has given a consolidation breakout that too with good volume. So at current levels of around 5,800, Short-term traders can go long with stop loss below 5,720 for potential up move towards 6,000 in the near term. Apart from that, I think within the pharma and the healthcare space itself, the diagnostic space is one where we have seen consolidation breakout in Lalpet Lab. About 20 months of consolidation was there, and we have seen a breakout about the 20 months of consolidation in Lalpet Lab. So I think this also stock can do well in the short term. So at current levels, one can even go long on Lalpet Lab with stop loss below 1800 for potential targets around 2050.
Okay, fair point. I hope this has helped you out, viewers, in understanding where is the momentum to be seen and what kind of stocks can you look at buying for the short term. We'll start taking some queries now. Ruchit, we have the first one from Namish. He says, thank you so much for helping us with the understanding on the stocks. Thanks, Namish, for writing in. Vedant Fashion is his question, and he wants to know, is there any kind of a fresh entry that you can advise on Vedant Fashion? He's asking this at a time when we are just about to get into the festive season and wedding season. That's where Vedant Fashion has its forte in a lot of sales that usually happen during festive and wedding season for the company. Your own sense, how would you look at the charts?
Our setups are not that good. Since October 2024 or December 2024, the stock has consistently been under pressure. I think somewhere at the start of December 2024, the stock made a high of around 1470, 1480. From 1400, the stock has corrected to 400. So, and in the last 2 years, we have seen many such seasons, where wedding seasons and all, but still, the stock prices does not show that we see any positive move during such times. So overall trend still continues to be remain negative until we see good price volume action or high top high bottom structure. Better to stay away from such underperformers.
अभी अंडर परफॉर्मेंस नज़र आ रही है तो अभी आप इस पर मत इन्वेस्ट कीजिए, क्योंकि इस चार्ट स्ट्रक्चर जो है बहुत कन्विंसिंग नहीं लग रहा है रुचित को. ये आपको गाइडेंस दी जा रही है. येस, यू आर राइट कि फेस्टिव सीजन शुरू हो रहा है, लेकिन फिलहाल यहाँ पर कोई स्ट्रॉन्ग मोमेंटम नहीं नज़र आ रहा है. नेक्स्ट आगे करते हैं और सवाल की तरफ आगे बढ़ते हैं. बहुत सारे हमारे साथ दर्शक जो हैं व्हाट्सएप के ज़रिए भी जुड़ रहे हैं, उनके सवाल भी ले लेते हैं. हमारे पास सिद्धार्थ का नोएडा से सवाल आया है त्रिवेणी टर्बाइन को लेकर. 620 पर इन्होंने खरीदारी की. आप पूछना चाहते हैं आपसे क्या टारगेट एक्सपेक्ट कर सकते हैं अगले 3 से 4 महीनों में?
फिलहाल तो साइडवेज है स्टॉक का ट्रेंड. इमीडिएट सपोर्ट 595 है, सो अपने पोजीशन से 595 का स्टॉप लॉस रखे और ऊपर रेजिस्टेंस 645 650 के बीच में है. तो यही रेंज एज ऑफ नाउ लग रही है.
ठीक है. नेक्स्ट क्वेश्चन है जय का, तिरुपुर से हैं. ये लिखते हैं, थैंक यू सो मच फॉर दिस शो. लुकिंग फॉर योर व्यू रुचित सर ऑन KPIT टेक्नोलॉजीज. आई कैंट होल्ड फॉर द नेक्स्ट 2 years. इज इट द राइट टाइम टू एंटर इन दिस स्पेस? KPIT टेक में भी हमने काफ़ी अरसे से एक अंडर परफॉर्मेंस देखी है. नतीजे आए हैं कंपनी के, उसके बाद क्या लगता है कोई भी रिवर्सल के साइंस यहाँ पर नज़र आ रहे हैं क्या आपको? आज भी 6% नीचे है हालांकि.
So what has happened that many of the IT names or the IT sector as a whole has given a decent bounce back in last 1 week. So generally it happens that the entire sector was oversold. We have seen quite a sharp sell-off since last few quarters comes on a consistent basis. तो जब कोई सेक्टर ओवरसोल्ड होता है तो एक बार तो पुलबैक मूव में सब स्टॉक्स पार्टिसिपेट कर लेते हैं, लेकिन फॉलो अप मूव उन्हीं स्टॉक्स में रहता है जहाँ पे स्ट्रॉन्ग बाइंग इंटरेस्ट रहता है या अच्छे नंबर्स आते हैं. सो आईटी में आई बिलीव दैट the companies which are reporting good numbers, those would see a sustainable up move going ahead. बाकी जो recent last कुछ दिनों में दिखा है कि हर IT stock में bounce back आया, that won't be sustainable across the sectoral stocks. So KPIT Technologies has been an underperformer. अभी तक तो कुछ इतने positive signs stock में है नहीं. The results के बाद का reaction काफी important होता है rather than results के दिन या results के एक दिन पहले stock क्या करता है. And we are clearly seeing that there is not much buying interest in this stock. So I think KPIT Tech we can see some pullback moves, but trend is not positive.
Okay, let's take the next query. This one is from Ravi. He's from Gujarat and he asks you, he says, hope you're doing great. I'm very well. Thank you so much, Ravi, for asking. Hope the same for you. He says, this is a great show for investors and traders and I'm a great follower of Ruchit sir as well. So please help me understand when it comes to your own understanding of Piramal Pharma. I have bought this stock at 173. What is your view on this stock? Can it continue to give me good returns?
Yeah, thank you, Ravi. I think yes, you can hold the stock as of now. We have already seen a good price-wise corrective phase since last 1.5 years. And off late on the weekly charts, after a long time, the stock has started forming that high top, high bottom structure. So initially, for the short term, you can expect levels somewhere around 225 to 230 kind of range. So hold for those targets, and when it comes near that range, just take a review again.
Okay, fine. Next question is from another Ravi from Delhi. He says, नमस्कार नमस्कार आपको भी रवि. लिखते हैं मैम आपका प्रोग्राम रिटेल इन्वेस्टर्स के लिए बहुत हेल्पफुल है. थैंक यू सो मच. उम्मीद करते हैं आपको जो भी यहाँ पर सलाह दी जा रही है इससे आपके निवेश जो है वो बेहतर हो रहा है, आपके पोर्टफोलियो में बढ़िया स्टॉक्स आ रहे हैं, आप बेहतर रिटर्न्स कमा पा रहे हैं. और नेक्स्ट सवाल जो इन्होंने पूछा है आज सैक सॉफ्ट को लेकर है. 500 शेयर्स 183 के लेवल्स पर है इनके पास. शॉर्ट टू मीडियम टर्म का एक आउटलुक आपसे जानना चाहते हैं रुचित, क्या राय देंगे?
50 डेमा सपोर्ट 160 पे है, जो रिसेंटली अभी तक ब्रेक नहीं हुआ है. सो आई थिंक वो सपोर्ट इंटैक्ट है. तब तक आप अपने पोजीशंस को होल्ड करिए. पुल बैक मूव अगर आता है तो हाई लेवल्स पे वापस से रिविजिट करिए, बट अपने पोजीशंस पे 160 के नीचे जस्ट स्टॉप लॉस लगा के रखें.
ठीक है. जयश्री तमिलनाडु से हैं और ये लिखते हैं हाई, आई वांट टू नो अबाउट आईसीआईसीआई प्रूडेंशियल लाइफ एट 500 लेवल्स. शुड आई होल्ड और एग्जिट? आई हैव अ 1 year टाइम फ्रेम. द इंश्योरेंस कंपनीज हैव आल्सो बीन not performing too well. Any indication of what should one do on ICICI Prudential?
We have already seen a good phase of correction, and now there are chances that in next 1.5 year, if you have time frame, then in the next 1 year we would see a pullback move or a high levels in the going ahead. 570, 580, I think is a reasonable target that you should expect in the stock. Once it comes over there, then take a review again. But for now, at these levels, it is not advisable to exit or book losses. But wait for an up move towards 570. Yes, considering the time frame of 1 year that we have mentioned.
Okay, got that. सलेम का सवाल नेक्स्ट लेते हैं. लिखते हैं रुचित सर, प्लीज एडवाइज ऑन पीसी ज्वेलर फॉर लॉन्ग टर्म इन्वेस्टमेंट एंड इफ एनी काइंड ऑफ एन एंट्री लेवल शुड बी लुक्ड एट फॉर पीसी ज्वेलर.
काफी हाई रिस्क का स्टॉक है. हम यूजुअली देखते हैं कि वॉलेटिलिटी स्टॉक में ज्यादा रहती है, राइट. सो रिसेंटली देखिएगा तो काफी रेंज में रहा है. 11 रुपए के आसपास रेजिस्टेंस होता है, 8 साढ़े 8 के बीच में सपोर्ट होता है. तो अगर आप वो हाई रिस्क लेने को तैयार है तो 8 और साढ़े 8 के बीच में अगर स्टॉक मिल रहा है तो वहां पे खरीदारी करें और 7.5 के नीचे के स्टॉप लॉस मेंटेन करें.
Okay, stock only for high risk investors. Keep that in mind, viewers. We have Sai asking the next question on Inox Wind. लिखते हैं रुचित sir, please advise on Inox Wind. 154 is my purchase price. I have a long term view.
Trend is negative for the stock. A consistent low top, low bottom structure, irrespective of market movement, the stock is not participating. It's just trading around its previous swing low, because around 73, 74, I think the stock made a lower in the March 2000, in this year, March as well. From we witnessed a pullback. So any kind of pullback moves, if you get it again, take that as an opportunity to exit. So excellent rise का approach stock के लिए रखें.
Okay. Manas Malik लिखते हैं, what is the future outlook, Ruchit sir, on TVS supply chain? It has been underperforming for a very long term now, and it's a very reputed business house that the company belongs to, but there is no impact on share prices that I see.
More or less, I think तब तक ये 145, 150 के level surpass नहीं कर देते, तब तक you should not expect any big up moves in the stock. But yes, downside also seems to be limited. So it may see some more time-wise correction or consolidation between 150 to 125, and that's the range in which the stock has been trading since last 3 months, since last at least 2 to 3 months. So you can hold your stock from a medium-term perspective, but don't expect any fireworks in the short term.
ओके, अथर्व बैनर्जी का सवाल लेते हैं. ये आपसे लॉरस लैब्स के ऊपर पूछना चाह रहे हैं. हमारे हिंदी दर्शक हैं डेली कॉल्स लाइव, जो हिंदी स्ट्रीम हमारी चल रही है उसमें से, और लॉरस लैब्स के ऊपर पूछना चाहते हैं कि अभी बाय करना चाहिए या नहीं, और इसके टारगेट और स्टॉप लॉस शॉर्ट टर्म के लिए क्या होने चाहिए.
बाय ऑन डिप्स की स्ट्रेटजी रखिए. ओवरऑल के स्ट्रॉन्गेस्ट स्टॉक्स अगर आप फार्मा एज अ स्पेस में देखिए तो लॉरस लैब्स और डीवीस लैब दो ही रहे हैं, राइट. सो ये अप ट्रेंड इनमें और भी कंटिन्यू रह सकता है, बट लेकिन क्योंकि स्टॉक्स में रिसेंटली एक ऑलरेडी अच्छा मूव आ चुका है, तो कभी कुछ नियर फ्यूचर में डिक्लाइन आता है 1650 1700 के बीच में, वहाँ पे फिर बाइंग अपॉर्चुनिटी ढूंढे सो दैट आपके स्टॉप लॉसेस रीजनेबल हो गए. 20 डे में सपोर्ट 1590 पे है. सो आपके कोई भी लॉन्ग पोजीशन डिप्स में और रेंज में बनाते हैं तो 1590 के नीचे के स्टॉप लॉसेस होने चाहिए.
Okay, Kaushik Rana has the next question. He says, good afternoon, Sakshi. Good afternoon to you also, Mr. Rana. He says, I'm from Vadodara, Gujarat, and I want to know, I got SBI Funds IPO and I'm holding even now. Is there any advice here? Ruchit, of course, you have just few days of a chart here, but any kind of, house view that you could probably share on SBI Funds post-listing?
No, frankly, there's no house view as well as I don't have anything to say because of the limited data. So I think if any fundamental analyst comes, then you can take up the question who can help better.
Sure. Vikas Ahuja has the next query. He says, Sakshi, I have KPI Green, 20 shares at 612. Any view here as to whether I should continue to hold on to my position?
Any pullback moves take it as an opportunity to exit. At current levels, I think the downside could be limited. The stock could stay within a range for some more time. The weekly 200 EMA is around 360, 370. So 360, 370 is a strong support for the stock. So if the support remains intact and if you get pullback towards maybe 430, 450 range, then look to exit at higher levels rather than current levels.
Okay, got that. I hope this has helped you. Let's take the next question. We have this question coming in from one of our viewers, Mr. Puff Pant, who says, Sir, green ply में fresh entry करने का advice होगा क्या फिलहाल? Green ply industries.
नहीं, अभी एडवाइस नहीं रहेगा. लास्ट 3-4 दिनों में हाई लेवल से करेक्शन में इमीडिएट शॉर्ट टर्म सपोर्ट स्टॉक ने ब्रेक किए है. सो जब तक अच्छे वॉल्यूम बेस्ड अप मूव या पुल बैक मूव हम स्टॉक में नहीं देखते तब तक आपको वॉच लिस्ट पे रखें, बट एज ऑफ नाउ नॉट अ बाइंग कैंडिडेट.
Okay, we have Raju Tiwari asking you on Shanti Gears. He says that the results have been weak, but we are seeing the stock fall. Is this a temporary blip or an accumulating opportunity on Shanti Gears? Any suggestion on this one?
The trend for the stock is still not strong, so I think it should remain in a range going ahead. If I look at the historical data, then 390, 400 is the support zone. Whether in February 2025 the low was around 390, January 2026 the low was 390, and yesterday's the post result the low is around 390, 388. So around 390 the stock has multiple support. So if that gets breached, then we could see next leg of correction getting started in the stock. So maybe yesterday's low 388 was there. So you can keep a stop loss below if you already have long positions. If you're looking to fresh buy, I think you should avoid it.
All right, okay. I hope that this has also answered you well as well. Towards the end, any other stock that's come onto your mind, Ruchit, that you'd like to highlight for our viewers?
So I think I've already mentioned some couple of pharmaceutical names. Apart from non-pharma names, Pidilite Industries, one stock that we like if one has to do any delivery-based buying. A consistent high top, high bottom structure, irrespective of market volatility. We are not witnessing any price-wise corrections or volume-based selling in the stock. So I think if one is looking for a slow and gradual up move in the portfolio, and Pidilite could be added here.
All right, okay. Thank you so much, and Ruchit, for being with us on the show and for guiding all our viewers on their questions as well. Good to have you with us as always. Thank you so much for your time.
Thank you.
All right, viewers, time to wrap up Daily Calls edition right here. Stay tuned on to Business Today Television. Up next, of course, a lot of earnings-linked conversations with the top managements of the companies, and the market coverage also continues on the other side. Stay tuned.
We just had the most successful World Cup in history.
It was the defining image of the 2026 Football World Cup. The president of FIFA and the president of the United States standing together at the center of football's biggest stage. But barely days after the final, Gianni Infantino unveiled a plan that could change FIFA more than any expansion of the World Cup. In an unprecedented move that rewrites the financial playbook of global sports, FIFA has unveiled plans to commercialize world football. FIFA has proposed new company, FIFA Forward Enterprise. It will bring FIFA's commercial and event operations under one corporate structure and generating money from tournaments, media rights, sponsorships, tickets, hospitality and licensing. FIFA would then raise as much as $4.2 billion by selling minority, non-controlling stakes based on an initial valuation of $20 billion. Under the proposed terms, private investors won't receive traditional dividend payouts. Instead, their return rests on the enterprise value appreciating over time. This marks the first time in FIFA's 122-year history that the institution is opening its media and sponsorship assets to outside capital. FIFA says the investors will have no authority over the rules, the match calendar, tournament formats, or disciplinary decisions. It hopes to lock in long-term enterprise valuation, similar to recent commercial restructuring in the PGA Tour and European domestic leagues. The timing is important. Before the tournament, Infantino said that the 2026 World Cup alone was expected to generate approximately $11 billion for FIFA. After the tournament's commercial performance, he said total FIFA revenue for the 2023 to 2026 cycle could cross $15 billion. That would be almost double the $7.6 billion FIFA generated in the previous 4-year cycle. The World Cup has demonstrated how much FIFA's commercial rights are worth. The new company is designed to put a market price on their future value. FIFA argues the additional income will be reinvested in the game and that each of its 211 member associations could access up to $20 million for stadiums, training centers, coaching, grassroots competitions, national teams and women's football. But the debate is no longer limited to finance. It is also about proximity to political power. Infantino has spent years building a visibly close relationship with Donald Trump. He has been a frequent White House visitor. Reports have documented visits to Mar-a-Lago and Trump National Doral. FIFA also leased office space in Trump Tower in New York. Infantino attended Trump's inauguration, praised him publicly, and presented him with the first FIFA Peace Prize.
Can I keep it for you?
During the tournament, the relation, however, entered the field of play. After United States striker Folarin Balogun was sent off against Bosnia and Herzegovina, Trump called Infantino and asked FIFA to review the decision. Trump later confirmed the call, describing the referee's decision as unfair. FIFA did not erase the red card, but it suspended the automatic one-match ban for a 1-year probationary period, allowing Balogun to play in the next round. Meanwhile, the political speculation has gone further. A report claimed that Trump wanted Infantino considered as the next United Nations Secretary General. The White House did not confirm that such a conversation had taken place.
I don't know if he and the president have discussed that. I haven't been present for all their conversations. I know they speak quite frequently, and the president has a lot of respect for Gianni and what he has done with FIFA. As we all just saw, the World Cup was a tremendous success here at home. It not only was hugely beneficial to our businesses and our local economies across the country, but I think it showed that America is the greatest country on earth, and the president is grateful to Gianni for all of the efforts that he had to make that dream a reality here in the United States.
The proposed fundraising has added another politically sensitive connection. Joshua Kushner's Thrive Eternal is expected to lead the potential investor group. Joshua Kushner is the brother of Jared Kushner, who is married to Trump's daughter Ivanka. Opposition to the move was swift. The powerful European Football Association UEFA says that the proposal crosses a line. In a scathing rebuke, it declared that the soul and governance of football are not assets to trade, and it is not FIFA's to sell. FIFA's answer is that investors will be minority partners with no operational role and no influence over sporting decisions. The proposal now goes before the FIFA Council and the 211 member associations for a final vote. Infantino faces a dual battle, convincing skeptical member nations that privatizing equity won't compromise the sport while navigating the high-stakes intersection of Wall Street finance and presidential politics. Bureau Report, Business Today TV.
We just had the most successful World Cup in history. Did 5 times the business of any World Cup in history. And I can't wait to get him back, but I think we won't be able to get him for the next time.
a warm welcome on Business Today Television, ladies and gentlemen. We continue with providing you access to top flight fund managers, chief investment officers, PMS managers, as to how they are navigating this volatility and this uncertainty in the market, where bulls refuse to give up 24,000 and bulls refuse to let 24,300, 24,500 a pair. We are joined by none other than Mr. Alok Singh, CIO of Bank of India Mutual Fund, to discuss the way forward and to see where markets are headed. Namaste Alok ji, and a very warm welcome. We are at the fag end of July and mostly all major earnings are with us. What is your considered opinion on how corporate India's report card has fared against the backdrop of your fund's holdings?
Thank you very much for having me on the show. So you're right, the earning, we are in the middle of earning season, and maybe just close to halfway through, and I think next week is going to be really heavy. But having said that, I think the initial trend for so far are quite encouraging, and especially the places where people had lower expectations. If you look at banking and financials, where people were generally was expecting some NIM compression, I think a larger part of the lenders have not shown that trend. Margins also, I think, are holding on despite the disruption which was there in the Middle East and the after effect of that. Overall, I think if you look at the small caps are so far, whatever has been declared, are showing a very healthy growth rate as well as margin profile. Mid caps, some of the oil companies being there are getting influence. Other than the oil marketing companies, which have which got majorly impacted because of the government decision to hold on to the prices, I think, barring that, and if you adjust for that, I think the earnings season so far has been quite healthy. And I think next week, maybe when we conclude major part of it, I think the trend should be more cheerful to the street than they expected.
Okay, let's look at your flagship scheme, which is the Bank of India Flexi Cap Fund. This is a phenomenal performer. 3-year return is 21% compounded, and the scheme was launched in January of 2013 as far as the direct route is concerned, but the launch date is June of 2020, and the returns since launch are a compounded 25%. By any stretch of imagination, this is a fabulous performance. Let's look at the top holdings. It's banks all the way. A gold retailer, Sky Gold, is the 4th holding. Hindustan Aeronautics, Quality Power Equipment, Acutaas Chemicals. This fund has done immensely well, and it's a concentrated holding of 65 shares. Would you want to comment on how jewelers are doing immensely well, given that gold prices have corrected fairly sharply, and you have a fairly decent stake in Sky Gold?
Yeah. So, India has inherently high demand for gold because of cultural as well as the investment, which have started taking more shapes through ETFs and all. But, if you look at overall, a stable gold prices typically drive volume. And what we have seen, after the correction, the gold has been holding around $4,000 in the international market. I think that is what is driving demand, because typically people don't buy in terms of grammage, people buy in terms of wallet size, 5 lakhs, 10 lakhs, whatever that translate to. And if there is a spike in gold prices, obviously the grammage come down or the purity come down. But if it remains stable, I think there is, people plan for it, and it takes some time for them to do planning. I think also somewhere, the way it behaved in last year or so, there is some fear that what if it spikes back, and that is also front loading some of the future demand in terms of family wedding and things like that. I think combination of these two is helping the volume being higher, and that's where the entire value chain, right from the retailers to the contract manufacturers like Sky, which is in our portfolio. I think they all are getting benefited with the entire thing. So as long as it remains stable, I think we may see a better volume growth over there.
Mr. Singh, I was just taking your opinion on the way IT is shaping up. July has been, by all accounts, a fabulous month for IT stocks. The index itself is gone up by 15%. You are still not convinced with the way IT is shaping up, or is there more pain point, possibly more hidden hurdles that you see? Within the flexi cap space, in the top 20 companies, there isn't an IT representation.
Yes, your observation is right. We are underweight on IT. While last 1 month has been good and there is some rebound, I think it's from the extremely oversold situation. There is some reversal, which is very natural to happen in any of the major sectors or major part of the index whenever they go in a extremely oversold situation. Having said that, I think we believe that why the sector got re-rated is primarily because the visibility of the cash flows going ahead is uncertain, and it remains uncertain. And by the thumb rule, higher the uncertainty around the cash flows, the lower is the multiple, and the higher the certainty, you get a higher multiple. Just to explain it to you in an example, for example, an FMCG company where the certainty is higher, we give higher.
The next chapter of India's growth begins with infrastructure. Adani presents the Business Today Infrastructure Summit 2026, where India's leaders and policymakers will discuss the India of tomorrow. Infra India 2047, building India's next growth cycle. Friday, 31st July, New Delhi. Book your seat now.
Hello and a warm welcome back on Business Today television, ladies and gentlemen. We continue with our top-notch coverage of providing you with the fabulous earnings potential that companies have reported in the quarter gone by. And in that effect, we are joined by the top management of Syrma SGS Technologies. This is a company which is in the manufacture of electronic goods items such as air conditioners, and has been a fabulous outperformer as far as earnings are concerned, as also the stock price. Just take a look. Sales for the quarter gone by are up 68% to 1,590 crore rupees. It is both a year-on-year and a sequential rise. Profit, on the other hand, has surged 100% to 106 crore rupees versus 50 crore rupees in the year-ago quarter. I'll request the PCR to kindly show us the long-term chart of Syrma SGS Technologies. You will see that in the last 6 months alone, the stock has appreciated by 93%, and it got listed in August of 2022, and from that period till now, in the last 3 years, there has been a CAGR of 44%. To discuss this, the way forward, as also what are the potential growth prospects of the market, we are joined by the management of the company. Mr. Jasbir Singh Gujral, MD of Syrma SGS Technologies, joins us on the show. Namaste Gujral Saab, a very warm welcome. What a wonderful performance. 100% rise in first quarter profit, as also a 68% rise in sales. What have been the highlights and how did this come across?
See, we have been following a very structured strategy of repositioning and recalibrating our business. This journey started from Q2 of FY25, and then over the last 8 quarters, we have progressively worked on a strategy to bring the company to this level. The growth is very good. 67% growth is very satisfying, and so is the growth in profits and PAT. But to us internally, it is the quality of growth which is even more satisfying. And when I say the quality of growth, I refer to the exports. Exports last year increased by 40%. This year, Q1 of this year versus Q1 of last year, the exports have increased by 60%. Now, as we have always been maintaining that exports would be the cornerstone for sustained growth and profitability of the company, I think the steps which we have taken over the last 2 years on onboarding big global giants into a customer portfolio have started yielding returns.
Okay.
I would like to add that I think the best from those customers is yet to come. We have just started scaling with them, and I think the way we are sort of meeting their requirements and satisfying them, I think going forward, this would be even better. The base of exports would become large, but I expect exports to be a big cornerstone for our future growth. The second important point, and which is again very satisfying, is that my own design manufacture, which is where I design the products, has grown 100% compared to last year. This year, my own design manufacture is approximately 270 crores versus 125 crores last year. Now, this growth again bodes very well for sustained profitability growth in the company. So I think these 2 points of growth are to me more satisfying than the 67% top line.
Fair point. For the uninitiated, Syrma SGS offers electronic manufacturing services, engineering and technological services, as also medical technology services to a host of sectors such as automotive, telecom, industrial, IT, and fairly recently into railways as well. Exports, as Mr. Gujral has just highlighted, is about, I think, 37%.
25% of my revenue.
Yes. So that's a third of the business, which in Q1 grew 61%. Now, let's look at the overall order book situation, Mr. Gujral. where does it stand at the end of Q1, and how much does that translate in terms of work that you can do?
See, we have delivered a strong performance in Q1, and based on this foundation which you have laid for this year, I think we are well on track on not only achieving the guided revenues, but with the potential upside also.
Okay. What's the guided revenue that you are targeting for the current financial year?
We had guided a 30-35% growth in revenues and matching growth in EBITDA.
Okay.
I think we are well on track on surpassing the guided revenues.
Okay.
Not put a figure to that. I'll wait for another quarter. And then I'll have more clarity, because the geopolitical situation continues to be a bit uncertain in terms of war in the Middle East and all that. But I'm very confident that we'll be able to surpass the guided figures.
Okay, fair point. We of course look forward to interacting with you in the coming quarters, and we will be keeping track of that. Now let's look at new clients. You added 18 in Q1, which is 5 from auto, 3 from industrial, 2 from healthcare, and the remaining from telecom and IT and railway services. So what is the client concentration in terms of top 5 vis-a-vis to revenue contribution?
See, if I look at my top 5 clients, they contribute about 35%. Top 10 contribute about 51 odd percent. And top 20 about 66, 67, 68%, somewhere around that. So I think one of the strengths of Syrma SGS is a very diversified portfolio. We are not dependent on one vertical. No single client accounts for significant portion of my revenue. Majority of the clients would be less than 10% of my revenue. If top 20 account for only 68, and I have a list of plus clients. And then we are not dependent on one geography. We have a healthy mix between domestic and export. So a truly risk mitigated business model which we have been able to build over the last several decades.
Mr. Gujral, when you look at the pipeline in terms of expansion, a large part of this growth that you mentioned, sales growing 68%, profit growing 100% was because of fabulous capacities that you put in place already. At the moment, what is capacity expansion and what is fresh capacity in the pipeline?
See, my capacity utilization on an average basis is approximately 67-70%. And when you say your capacity is at 70%, you should assume that 5% inefficiency would have crept in, human nature. If my clients are getting deliveries on time, then you don't sweat that extra. It's a human nature. The real sweating of the capacity comes once you reach a 90-95% capacity. That's when the efficiency levels further go up. We keep on planning capacity expansion in our existing facilities based on the client requirements. For example, we have just commissioned our Bangalore facility, a second facility of about 90,000 square feet, where we have allocated first floor to a joint venture, which is the LE Master, Syrma LE Master thing. The second and third floor are being allocated to our new customers or existing customers who are ramping up. The fourth floor is still being kept for the balancing for customers. So each area we expand capacity based on the requirements.
Fair point. So, Mr. Gujral, when people talk about India's manufacturing growth potential, I think yours is one of the best companies to look at, because you are not facing a crisis of clients. You are essentially facing a supply chain issue where the demand is so much that you are unable to meet it because of various issues. What would be a constraint to this 30-35% growth that you are targeting on revenue?
See, we are targeting a 35%. We have guided 35%. And when I say that we'll achieve or surpass this guided figure, it is keeping into account all the supply chain constraints. So the supply chain constraints, until some new big supply chain constraints crop up in the next month, 6 months, which is beyond my control. For example, if the war in Middle East was to escalate, well, I can't do anything about it, and so can no other industry can do about it.
Absolutely.
But keeping into account the constraints, we have guided what we have guided at about 35%. Now, the supply chain constraints are real. Now, we cannot shy away from it. And we in Sirma SGS have set up a special, we call it the war room, headed by one of our most seasoned supply chain experts, specialists, to ensure that the production lines of my factories and my customer factories do not suffer a stoppage because of the supply chain. To us, maintaining that supply chain of the customer is of utmost importance. So the gentleman, the team is authorized to buy materials at whatever costs are available. The first objective is to ensure supply chains are maintained. The costs which have already been factored in would be a secondary factor of next year and all those things. So maintaining budget is the key factor and delivering on the guided numbers.
Okay. So at the moment, there is a fresh project in the pipeline which is of PCBs, that's printed circuit board assemblies. As also, how many manufacturing plants as of now, sir, and in how many states?
See, we are present in 7 states across the countries, starting from Himachal, Haryana, Rajasthan, Karnataka, Pune, Chennai. Pune is in Maharashtra. So 7 states across, and Andhra, where we are putting up a PCB plant. We are present in 7 states across the country, and we have a design center in Germany. We are present in one country outside India also. We have a full-fledged design center and a manufacturing facility in Stuttgart, Germany. The PCB plant which you referred to is a bare PCB plant which we are putting up in Andhra Pradesh.
Yes.
Production is in full swing, and we are on schedule to power on the equipment in January to March quarter and take out our first samples by that quarter.
Okay, fair point. You also have an enabling resolution for 1,000 crores QIP. What is the need for this fund, and when do you see this QIP bringing in money within the balance sheet, and what are the deployments?
Okay. See, this is an enabling resolution we have taken for the QIP, and I reiterate that for my existing organic business of EMS and the new project of PCB, the funding has all been tied up. We have surplus treasury funds of 800 crores, and we generate operating free cash flow, so we don't require funds for the existing operation. That's number one. The tailwinds in the electronic sector are huge, favorable tailwinds, and opportunities keep emerging every sort of the proverbial second day. This enabling resolution is to have a ready access to a war chest. War chest will be when I actually raise, but have a ready access to a war chest should I go in for a greenfield project, say in semicon, or there was an inorganic acquisition. Currently, nothing concrete on table. We'll come back once we have some firm commitments on that.
You know, it's always good to have dry powder in your treasury account. कब opportunity आ जाए कोई कुछ नहीं कह सकता.
Yeah, absolutely.
Gujral Sahab, when you look at, as you very rightly mentioned, that the opportunities in the sector are so huge, the government itself has a 76,000 crore plan on the semiconductor business, and this is one area where mega giants are looking to set up shop. What about Sirma? Is this a space that interests you?
Oh, it's a space which is of great interest to us, but we don't want to jump into the bandwagon just because other people are doing it. We are very cognizant of the fact that a semicon business requires deep pockets and it has a fast technological obsolescence. We are evaluating, we are in discussion with several global companies. For us, there are two parameters, sort of red lines, which we have drawn for ourselves. A, it should be a credible partner, credible name in the industry. And second, there should be some sort of a percentage of offtake, which means what I produce, they should buy.
They should buy, obviously.
These two are of immediate concerns. If these two are met, we are willing to invest. And the third one is that if a collaborator is giving me technology, what he is doing is he's vacating his capex and capital in his host country or wherever it is and migrating newer futuristic technologies. He's not going out of business. There I should have a right for the right of refusal for the future technologies, because the technologies which are being migrated to India are the legacy technologies. Whether the chips or anything, they're not the futuristic technologies. Now, if and when these legacy technologies have a sunset clause in terms of usage, maybe 5 years, maybe 10 years, whatever it is, I should have access at that point of time to access the future technologies if my collaborator is wanting to give. I don't want to be stranded up with the legacy technology and he sells a future technology to someone else. So the first two are very critical. The third one is preferable. So the first two are met, which is a credible partner. Now, when I say a credible partner, it will be among the top 10, 15, 20 companies of the world. I don't want to enter into this space with startup technologies and all that, because I'm not a venture funded. I'm a businessman and an industrialist and have a trusteeship to my shareholders. So these are the two lines, but we are very much interested in entering the semicon supply chain ecosystem.
गुजराल साहब, क्योंकि आप दिल्ली के हैं तो एक बड़ी अच्छी हमारी तरफ कहावत है कि किसी को मुकम्मल जहां नहीं मिलता, कभी ज़मीन तो कभी आसमान नहीं मिलता. आपकी लिस्ट तैयार है, देखते हैं कौन कौन से बॉक्सेस इसमें क्लिक होते हैं. बट फेयर इनफ, एज अ फिड्यूशियरी रिस्पॉन्सिबिलिटी फॉर शेयर होल्डर्स, वन मस्ट बी one must exercise caution rather than bravura. Be that as it may, now what about the fact that IT, medtech, railways, and the third one is the new defense. How are these three small pockets shaping up?
I think they're shaping up very well. I'll take one by one. The railways with the Master joint venture in the coming quarters or years should see a bump up. It should see a growth level in coming in that. It's currently a very small portion of my revenue of, I think, less than 75-80 crores or approximately that figure. I should see in the, maybe not in this year a significant thing, but in 27-28, I expect a significant growth in the railways, which will be leveraging the Master joint venture. MedTech is well on track to register a very healthy growth. We had the MedTech devices business, subsidiary Sharma Johri of about 210 odd crores in FY26. I expect it to grow to 300 plus crores in this year. Whatever MedTech business is housed in Sharma SGS per se will continue to maintain a steady growth level.
Okay.
Sorry, you were saying something?
No, sir. No, sir. Please continue.
And defense, for example, we acquired it on 18th of December 2026. So it's been almost like 6-7 months since we have acquired. We expect that business also to grow at a 30-35% growth rate this year. But with addition to the product offerings which you are working now after having taken over, consolidating and increasing the portfolio or increasing, as they call it, the menu of what we offer to the armed forces or the maritime or the paramilitary forces, the forces of ports, I expect that next year onwards, the growth in this segment would be even better.
Right.
But it all depends on how much portfolio of offerings I can increase.
Gujal Sahab, you seem to be sitting on a crisis of plenty. Customers wanting to get more of their products designed and manufactured from you, and of course newer and better and higher margin vistas opening up for Sirma SGS Technologies. So we wish you all the best, and for the coming quarters we hope to interact with you on a fairly regular basis. Thank you for joining us.
Always a pleasure. Always a pleasure, Mr. Mukhtar. Bye.
Yes. That, ladies and gentlemen, was Mr. Jasbir Singh Gujral, the CEO and founder of Sirma SGS Technologies. A phenomenal Q1, about a 70% rise in top line and a 100% rise in Q1 profit. Thank you for watching.
The next chapter of India's growth begins with infrastructure. Adani presents the Business Today Infrastructure Summit 2026, where India's leaders and policymakers will discuss the India of tomorrow. Infra India 2047, building India's next growth cycle. Friday, 31st July, New Delhi. Book your seat now.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
आराम से हाँ। सामान देना भैया।
अब आगे क्या करना है? वो पिट्टू की पर्ची में देखो ना।
पर्ची?
देखो कहाँ गई पर्ची?
नमस्ते
जी।
हाँ? मुझे पता है वो पर्ची में क्या लिखा होता है। आप चलिए मेरे साथ। व्हीलचेयर। पर्ची में ये तो लिखा ही होगा कि सीधे फ्लाइट में नहीं चढ़ना है, थोड़ा घूम के जाना है। अब पर्ची में शॉपिंग की बात तो जरूर लिखी होती है। थोड़ी पेट पूजा की बात कोई पर्ची में ना लिखे, ऐसा हो सकता है? टिफिन लाए।
थैंक यू।
अरे पर्ची मिल गई।
पर्ची में तो ये सब लिखा ही नहीं था।
हम है ना आपकी पर्ची।
भीड़ में जो थाम ले।
सिर्फ वर्ल्ड क्लास एयरपोर्ट्स नहीं चलाते हैं, आपके सफर में हम सफर बन जाते हैं। अदानी, हम करके दिखाते हैं।
आराम से हाँ। सामान देना भाई।
India today is a 346 lakh crore rupee economy, the fourth largest in the world, the fastest growing major economy. 10 years ago, 125. By 2028, the third largest, 12.2 lakh crore rupees of public capital expenditure this year, 6 times what we spent a decade ago. Highways at 34 kilometers a day, 1,46,000 kilometers and counting. Airports doubled, port capacity doubled, and a 111 lakh crore rupee national infrastructure pipeline. But here is the truth every builder knows. Infrastructure and law are not two industries. They are one system. A port is a concession agreement before it is a berth. A highway is a land title before it is tarmac. A power plant is a purchase agreement before it is a megawatt. Nearly 70% of the national pipeline, energy, roads, rail, urban, sits in the most contract-intensive sectors of the economy. Investors do not simply fund projects. They fund enforceable contracts. In the road sector alone, 88,000 crore rupees of claims in 5 years. How fast the law resolves them decides how cheap the next kilometer is built. This is the work we do at White & Brief every day. Before a project breaks ground, land acquisition, title diligence, right of way. We de-risk the ground itself. Through construction, concession agreements, EPC contracts, power purchase agreements, financing. And when disputes come, tender challenges, bank guarantees, delay claims, arbitration, enforcement, and full service beyond litigation, corporate, finance, real estate, tax, regulatory. One firm, the entire life of a project. Practical, timely, aligned to your business. And the opportunity is only widening. A legal market past 30,000 crore, with arbitrations once bound for Singapore, now seated in Mumbai. India's law firms are ready. We are already there. As legal partner to the Adani Business Today Infrastructure Leadership Summit, we stand with the largest private builder of Indian infrastructure, a group we have had the privilege of working with these past several years. 1.53 lakh crore rupees of capital expenditure last year, the largest by any Indian corporate group, and a 9 lakh crore rupee program for the years ahead. Infrastructure builds the future. Law gives it a backbone. Governance, certainty, trust. Thank you.
Cockroaches, open drains, moldy food. These visuals are not from a roadside eatery, but from Mumbai's most prestigious clubs. Just weeks after action against Rustom Ice Cream Parlour and Parsi Dairy, the Food and Drug Administration has now turned its attention to some of the city's biggest private clubs, suspending the food licenses of RK Juhu Gymkhana, MIG Cricket Club and the Willingdon Sports Club. Also, the Cricket Club of India and the Aparna Juhu Gymkhana. These inspections paint a disturbing picture. One club allegedly had flies in food preparation areas, poor hygiene, improper food storage and even stale food. Another reportedly had live cockroaches, cross-contamination risks and no food or water safety records. Elsewhere, inspectors flagged dirty floors and poor drainage. Taken together, the inspections reveal what officials describe as a systemic breakdown in food safety practices, cockroach infestations and flies around food, expired and moldy ingredients, unsafe storage, poor segregation of food, rusted equipment, dirty kitchens and basic hygiene protocols allegedly being ignored.
फूड बनता है वो स्टैंडर्ड से बनना चाहिए, सेफ फूड बनना चाहिए, ड्रग जो बनते हैं वो क्वालिटी एफिकेसी बननी चाहिए और वही लोगों तक जाना चाहिए. फूड बिजनेस ऑपरेटर हो या मैन्युफैक्चरर फार्मेसी हो, इनसे वो करवा के लेना और वो स्टैंडर्ड्स क्वालिटी और रूल्स अबाइड बाय कर रहे हैं कि नहीं कर रहे, उसका इम्प्लीमेंटेशन करना हमारी जिम्मेदारी है, वो हम कर रहे हैं.
So these food safety officers visited the premise. There are FSSAI guidelines which are to be followed. They check if these guidelines are being followed. For the case of CCI club, when or the other clubs, when the team visited, they found that severe hygiene and structural issues were being seen. They also found that there have been pest infestation, unhygienic storage, structural decay. These things were common in all of the clubs.
The FDA says that the crackdown is far from over. It has directed school canteens to apply for food licenses and has banned junk food on campus. With Mustafa Sheikh, Bureau Report, India Today.
Hello and a warm welcome on Business Today Television, ladies and gentlemen. We continue with providing you access to top flight fund managers, chief investment officers, PMS managers as to how they are navigating this volatility and this uncertainty in the market where bulls refuse to give up 24,000 and bulls refuse to let 24,300, 24,500 a pair. We are joined by none other than Mr. Alok Singh, CIO of Bank of India Mutual Fund, to discuss the way forward and to see where markets are headed. Namaste Alok ji and a very warm welcome. We are at the fag end of July and mostly all major earnings are with us. What is your considered opinion on how corporate India's report card has fared against the backdrop of your funds holdings?
Thank you very much for having me on the show. So you're right, the earning, we are in the middle of earnings season. And maybe just close to halfway through, and I think next week is going to be really heavy. But having said that, I think the initial trend for so far are quite encouraging, and especially the places where people had lower expectations. If you look at banking and financials, where people were generally was expecting some NIM compression, I think a larger part of the lenders have not shown that trend. Margins also, I think, are holding on despite the disruption which was there in the Middle East and the after effect of that. Overall, I think if you look at the small caps are so far whatever has been declared are showing a very healthy growth rate as well as margin profile. Mid caps, some of the oil companies being there are getting influenced. So other than the oil marketing companies which have which got majorly impacted because of the government decision to hold on to the prices, I think barring that, and if you adjust for that, I think the earnings season so far has been quite healthy. And I think next week, maybe when we conclude major part of it, I think the trend should be more cheerful to the street than they expected.
Okay, let's look at your flagship scheme, which is the Bank of India Flexi Cap Fund. This is a phenomenal performer. 3-year return is 21% compounded, and the scheme was launched in January of 2013 as far as the direct route is concerned, but the launch date is June of 2020, and the returns since launch are a compounded 25%. By any stretch of imagination, this is a fabulous performance. Let's look at the top holdings. It's banks all the way. A gold retailer, Sky Gold, is the 4th holding. Hindustan Aeronautics, Quality Power Equipment, Acutaas Chemicals. This fund has done immensely well, and it's a concentrated holding of 65 shares. Would you want to comment on how jewelers are doing immensely well, given that gold prices have corrected fairly sharply, and you have a fairly decent stake in Sky Gold?
Yeah. So, India has inherently high demand for gold because of cultural as well as the investment, which have started taking more shapes through ETFs and all. But, if you look at overall, a stable gold prices typically drive volume. And what we have seen, after the correction, the gold has been holding around $4,000 in the international market. I think that is what is driving demand, because typically people don't buy in terms of grammage, people buy in terms of wallet size, 5 lakhs, 10 lakhs, whatever that translate to. And if there is a spike in gold prices, obviously the grammage come down or the purity come down. But if it remains stable, I think there is, people plan for it, and it takes some time for them to do planning. I think also somewhere, the way it behaved in last year or so, there is some fear that what if it spikes back, and that is also front loading some of the future demand in terms of family wedding and things like that. I think combination of these two is helping the volume being higher, and that's where the entire value chain, right from the retailers to the contract manufacturers like Sky, which is in our portfolio, I think they all are getting benefited with the entire thing. So as long as it remains stable, I think we may see a better volume growth over there.
Mr. Singh, I was just taking your opinion on the way IT is shaping up. July has been, by all accounts, a fabulous month for IT stocks. The index itself has gone up by 15%. You are still not convinced with the way IT is shaping up, or is there more pain point, possibly more hidden hurdles that you see? Within the flexi cap space, in the top 20 companies, there isn't an IT representation.
Yes, your observation is right. We are underweight on IT. While last 1 month has been good and there is some rebound, I think it's from the extremely oversold situation. There is some reversal, which is very natural to happen in any of the major sectors or major part of the index whenever they go in a extremely oversold situation. Having said that, I think we believe that why the sector got re-rated is primarily because the visibility of the cash flows going ahead is uncertain, and it remains uncertain. And by the thumb rule, higher the uncertainty around the cash flows, the lower is the multiple, and the higher the certainty, you get a higher multiple. Just to explain it to you in an example, for example, an FMCG company where the certainty is higher, we give higher multiple. An EPC company where the certainty is low, we give a lower multiple. So from a very, very certain environment which IT used to operate, it is moving towards an uncertain side. And that uncertainty is still lingering around. While they all will survive and they may do better, but at the same time, till this uncertainty remains, I think to give a very higher multiple to the cash flows will be difficult, and hence what we visualize is they may be a market performer and then as a fund manager, I have to take a call whether I want to subscribe to uncertainty for a market performance segment. So I think there where the difference lies. It is not that they will, they are dead companies, they are good companies, they are still making cash flows. But that certainty, visualizing 2030 is difficult. And that's where our weights are. So, it's very simple. If I have to buy uncertainty, then I'll buy uncertainty where I have a bigger delta. Otherwise, I will not like to buy that.
So, where is uncertainty with potentially a higher delta?
So, if you look at the entire capex side, say for example, if I put it this way, that from the macro top-down view, government wants our manufacturing percentage in our GDP to increase from current 15% to 20-25% over the period of time. Now, obviously, there's a policy framework that has to translate to businesses in form of cash flows. And then, obviously, there is an uncertainty over there. But if we look at way both public policy making and the private sector being enthusiastic about the scope of manufacturing in India. I think that uncertainty has a far higher reward possibility. And that's where I think the entire manufacturing space, and because if you look at if we move from 15% to say 20% in next 5-7 years, I think that's a very decent growth rate on a size of $4 trillion. We are, and that will lead to a lot of new pools of profit and many of the existing pools of profit getting augmented at a very fast pace. So I think that is one uncertainty we are ready to subscribe to.
Mr. Singh, you are not alone. A vast majority of fund managers, irrespective of their lineage in terms of mid caps, small caps, large caps, flexi caps, have 2 or 3 banks as their top holders. They have been massive underperformers. While the smaller PSU set, the old world private banking set has performed substantially, but frontline banking has let down fund managers. What is your reaction?
See, I think it is just that the some of the private banks used to get excessive premium because they were the only one who were executing well in terms of growth and margin profile and ultimately ROEs of the business. Over last 5-7 years, we have seen that there are many players who are able to execute that script for a longer period of time, and hence, the excessive amount of premium which the market used to give to a particular set of lenders have shifted to other lenders, because ultimately, if say for example there was a lender who was giving growth rate of 20% and ROEs of 18%, where everyone was barely able to grow at 10% and ROEs of 10%. Now, if everyone is able to do the same, then obviously the classic valuation convergence happen. And that is what, if you look at, has happened over the period of time between the private sector lenders and the public sector lenders. There is a convergence which has happened. While there is still a difference, I don't expect them to merge actually, but I think that is, and that primarily happened because, the underwriting became quite democratized, or rather socialized, by the CIBIL score becoming the gold standard of underwriting. So it is available to everyone, and then the person with the better CD ratios win. And many of the private lenders have that issue. Their CD ratios are too high. So till they are able to resolve that, they are not able to grow that fast. So I think that was, over the period of time, what I'm telling you, this has happened and transited over last 3-4 years. And now what we see is a relative underperformance.
Mr. Singh, within the BOI portfolio of stocks, there are 244 in number as of June ending. Where do you see alpha?
So obviously, what you see is at the fund level, that is our part of active investment bets. Some of it is, some of that can be a beta trade as well, but most of it is alpha, because our larger AUMs, which are sitting in our flexi cap or small cap, or our aggressive hybrid, these are more bottoms of portfolios, and hence we are all what we have selected as part of our investment broadly is tilted to, if you look at, if I look at or rather I put it this way, that if I put it this way, what are our overweight positions as sector wise? So we are overweight on capital goods, and in capital goods also we are more overweight towards engineering as well as power, high voltage power ecosystem. We are overweight on public sector lenders. We are overweight on capital market. We are overweight on healthcare and some discretionary. I think we are decently exposed to the entire reusable or recyclable ecosystem. I think broadly this is where we are. Rest all is more of equal weight or marginally underweight. Major underweight is of course oil and gas and IT.
Okay. Yes. Surprisingly, and a very a positive surprise, Mr. Singh, your top holding is a newly listed company called Quality Power Electrical Equipments, and you have very consistently over the last 6 months from January repeatedly increased stake in the company, and it's worked out amazingly well for the portfolio. What exactly does your research team like so much in Quality Power Electric Equipments? At the moment, the holding is 318 crores at the end of June.
See, we are positive on entire high voltage ecosystem, right? Because what is happening is that not only India was anyways not properly electrified, but even the world, if you look at, there is a lot of disruption which has happened in the ecosystem. Right from the the generation side where the solar and the renewable came in picture, to the user side where the EVs and overall automation or the data centers, both the sides, generation and consumption has seen a drastic change. As a result of that, the pipe connecting them, which is the high voltage ecosystem in between, is not capable to handle those fluctuations and surges, and hence it need to be overhauled, and that is for India we have to build a lot of it, and globally that has to be overhauled, and as a result there is a huge demand, and this is beyond the point that some of the standalone data centers may be setting up their own high voltage ecosystem. So I think that's the demand portion which is which we find that is sustainable for a longer period of time, and it is not only AI driven, it is general the structure, the way we were operating our grids and things like that, and that's where we have a positive. The company you pointed out, other than also we have a decent exposure on the high voltage ecosystem, right from the transformer guys, the connectors, the people providing complete solutions, or the switch gears, the entire value play is what we are positive on, and we have exposure across funds.
Okay, fair point. In terms of the broader structure of large caps, apart from banks, where exactly lies value within Nifty?
Other than so if you look at frankly speaking, Nifty at this juncture is fairly priced. While there is some amount of scope in banking per se, because of the fact that the NIM pressure is lower than what the market expected. So I think there could be some potential of re-rating. But other than that, I think we are fairly priced. Whether IT also, I call that to be fairly priced. Healthcare, I think is fairly priced, but I think there are growth drivers which are emerging over there because slowly, the generic pricing pressure has pushed off a lot of people from the developed market, and hence there is some pricing stability which is returning over there, and some of the newer discoveries and Indian companies moving up the value chain from being pure play generic. I think that those things we find interesting from next 3-5 years point of view. So we have a positive view over there. But for that, I think at Nifty level, I think it's quite fairly priced. But at the same time, if you move to the next Nifty, I think Nifty next Nifty, I think there where the space is very, very interesting. Many of the new age businesses doing quite well over there. Even otherwise, if I look at the overall margin profile, growth profile of Nifty next 50 being superior than Nifty. So there's a fair possibility that some of those companies may move up, and I think that will give a better sense of Nifty from next 4-5 years point of view.
Okay. What would you prefer in Nifty Next 50? This is, of course, one of the most popular indices on which a very old ETF has also been based, and it's one of those magnificent outperformers over a decade and a half. What do you prefer in Nifty Next 50?
So our choices remain the same. So what overweight sectors I have mentioned, I think we remain biased towards that. Obviously, Nifty Next 50 has a slightly higher representation of that versus the Nifty. So I think our fix remains the same over there. And some amount of new age businesses also, I think some of them we like, especially where the profitability is more clear, and the scalability also has been tested in the public, ever since they have been listed. I think that some of those we like.
Okay. Mr. Singh, we'll call it time here. Thank you so much for your wonderful interaction, and of course discussing the BOI FlexiCap Fund Plus, many of those individual stocks that have been responsible for such fantastic performance. Thank you for your time, sir.
Thank you for having me. Thank you very much.
That, ladies and gentlemen, was Mr. Alok Singh, Chief Investment Officer at Bank of India Mutual Fund. Thank you for watching. Hello and a warm welcome on Business Today Television, ladies and gentlemen. We continue with our very aggressive coverage on Q1 earnings, as also quality fund managers who are deploying clients' money at this volatile time, and of course coming up tops. We are extremely delighted and honored to welcome Mr. Chokkalingam Narayanan. He's the head of equities for the PMS and AIF business at ICICI Prudential AMC. Ladies and gentlemen, ICICI Prudential AMC also offers a PMS service comprising of 10 schemes and 4 AIFs. The scheme under Mr. Chokkalingam Narayanan manages somewhere like 40,000 crore rupees for clients, and it makes it India's largest PMS. Namaste, Mr. Narayanan, and a very warm welcome to you. How are you reading sentiment on Dalal Street amid this crisis which has reinflated itself in West Asia? We all know the pain points that are there in the market. What, according to your research team and yourself, are the 2 or 3 major tailwinds for Dalal Street?
Sure. Thanks a lot for the opportunity, Mr. Shailendra, and very good morning to all your viewers. At the outset, I think we are in a very, very interesting juncture, given all the geopolitical uncertainty that we've kind of been seeing, particularly this year and actually over the last 3-4 years. The way it has evolved continues to, make us believe that we are, in some sense, in a continuous volatility from time to time. The episodes tend to be different, but at the outset, what we can see is we are in volatile periods. Now that makes up for very, very interesting period for stock picking. While at the macro level, things thankfully are actually quite decent. We would say fiscal deficit to GDP is at a very comfortable level. The balance sheets across most constituents of the economy are in a reasonable shape, be it the corporates, be it the governments, both central and state governments. And when you look at individuals as well, there is reasonable recovery that we've kind of seen. And to that extent, I think as balance sheets are healthy, we are seeing corporate earnings being reasonably okay. We saw earnings being subdued about year and a half, two back. From there, we've kind of seen a decent recovery over the last 3 to 4 quarters. We've actually had mid-teens earnings growth. And into this quarter and possibly the next quarter, given that we've had the situation in the Middle East, we've had a little bit of a uncertainty with regards to earnings. But that said, I think there is a higher pricing-led earnings growth in this kind of an environment. Volume has got impacted a little bit given the supply chain challenges that we've kind of seen as a result of this developments. But overall, I think while at the start of the year we possibly could have started at say about a 17-18% possibility of earnings growth for fiscal year 27, I think as we stand today, that number could be somewhere in the 12 to 13% ballpark. Some amount of the gap has got pushed down to next year, and if this situation were to kind of reverse, we would see the reverse the balance kind of also kind of get pulled back. So there is some delay, and some amount of it is a little bit, you can say, lost. But the greater portion continues to be, reasonably healthy. And in that sense, it's actually quite a reasonable market to do stock picking in.
Okay. Mr. Narayanan, because you have the benefit of being a part of an AMC that has more or less been amongst the founding fathers of this wonderful bull run that we are seeing in the markets, and ICICI Pru also has a very long history in the world of mutual funds. Generally, I get a sense when I watch all these 10 PMS schemes that you offer. There's a contra strategy, growth leaders strategy, ACE strategy, value, pipe, rising stars, large cap strategy, smart strategy. Broadly, when I see the portfolios of these 10 schemes, by and large 7-8 stocks at the top are common. These are large caps. There's a private sector bank, your parent. There is the largest banking outfit in India, which is SBI. There is L&T, there's Bharti. Essentially, what you're trying to do is tide over market volatility by putting 25, 30, 35% of every strategy into these large caps and possibly trying to wade this volatility through. What's the differentiation between these 10 schemes when 30-35% of the portfolio at the top is common?
Sure. Very valid question. So I think when you kind of look at the solutions as far as PMS itself is concerned. It's more a solution, not a product. And in that sense, each individual's requirements kind of tend to differ from the other. But at the broader level, there are 7-8 different investment styles which are there, and there are different market cap based strategies that you can kind of offer to the investors. Now, what suits them, they can in conjunction with their advisors is what they tend to pick. We've always been a big proponent of asset allocation as an institution, and we continue to do that. In equity PMS or AIF, what we are essentially saying is the asset allocation bit is done by the investor along with their advisor at their end, and only the equity portion of the money they consider are solutions for that. And when they come to that, depending on what sort of investment style they're looking for, they come into that. So if you kind of, let's say, look at some of the flexi cap strategies that we kind of run, it ranges from value, which is at one end of the spectrum in terms of investment style. There you're essentially trying to participate in effectively what we normally think is about any stock or any investment. A stock price is equal to EPS into PE, so delta earnings and into delta P, which is price to earnings multiple, is what gives you the stock returns. So value sort of a strategy, the higher proportion of earnings, higher proportion of return potential, we tend to believe can be gathered over a period of time through re-rating. There we tend to pick companies where potential for earnings growth is there, but then potential for re-rating is higher. Whereas when you look at contra, it sits somewhere slightly in the middle, where you're typically looking for out of flavor sectors, but leading companies within those sectors, and trying to participate. And once those sectors come out of those periods, you tend to benefit out of it. Or there could be special situations that you tend to participate. The third end of the spectrum is obviously growth at a reasonable price. It's not growth at any price. And the final end of the spectrum is higher growth strategy, which is where we have ACE as a offering to our investors. Now, these are certain investment style based strategies depending on what spectrum the investor is looking at, and the advisors, depending on their understanding of the investor's requirements, offer these solutions. The other bit that we do is also market cap based strategies. So when you kind of look at large cap, these are typically the blue chip companies that we tend to have, but the concentration levels tend to be higher than what you would normally find. Then you have in the mid cap, small cap segment, we have offerings like emerging leaders, and then there is rising stars, and then pipe. Pipe is an out and out small cap oriented strategy, whereas you have rising stars and emerging leaders sitting somewhere in between. So depending on the investor's need, these solutions are there. Broadly, when you look at most of these strategies, they run very high active shares. So when you kind of look at most of the flexi cap strategies, our active shares would range anywhere about north of 70% in terms of active shares that we run in the portfolios. So they are at least about 70+% in terms of weightages different from that of the index. And similarly, when you kind of look at our small cap and mid cap oriented strategies, they would have a even higher active share. So that is how we look at it. While some names could be common here and there, at a broader level, the active share versus the index is substantially higher, because when investors consider a solution like portfolio management services, they are looking for boutique offerings which are different from that of the index, and running high active shares and concentrated portfolios. So we bring the depth to the research through our backbone of our large research team, and this following this on.
Hello and a warm welcome back on Business Today television, ladies and gentlemen. It's turning out to be a fine day on equities, and that's primarily because the risk of trade in South Korea, in China, in Taiwan and Nikkei, the sell-off that is happening there is helping Indian markets in a big way. As we know, the Korean markets are off 18% this week. About 30% in 1 month. Taiwan markets are off 11% this week, 15% in July, and of course you have a massive fall in the Chinese markets as well. The SZSE component index is down 17% in the month of July so far. All that has had a very nice impact on India, where the unraveling of the AI trade globally is benefiting local equities. As you can make out, the Nifty IT index is up 18%. This was beaten down badly, and this is what looks good, and apart from that, many other things. To discuss the way forward in the market, ladies and gentlemen, we are now joined by Mr. Devarsh Vakil, Head of Prime Research at HDFC Securities. Namaste Devarsh ji, and a very warm welcome. It must be gladdening your heart to see the mean reversion trade that's happening in large parts of Asia, and a very, very positive impact of that happening on Dalal Street. How are you reading sentiment at this point?
And thank you for having me on the show. So as you mentioned, the mean reversion is happening. The markets like Korea and Taiwan, which were running away and they were taking a lot of money out of emerging market indices for countries like India, is now mean reverting. Those markets had their weight gone up substantially compared to India. So for example, as of April, Taiwan weight was 25%. It was almost 12% few years back. So from 12 to 25. And Korea, which was March 25, it was 10%. It has become 19%. And India's weight from 20 had come down to 10%, almost 11%. So India was getting sold, and all this Korea and Taiwan, China was attracting a lot of capital. And as you mentioned, now since they have corrected, their weight will again go down, and that will not only stop the incessant FII selling which was happening in our market, but that will also bring the money back into the Indian market. And that means the larger stocks, the Nifty stocks, should start getting good flows, as we expect that when they return, usually the MSCI indices have larger stocks. So maybe it will time that the large caps will start giving returns compared to mid cap and small cap.
Ji, Devarshi, because you deal so much with data that is coming in every earnings, as also your own research at Prime Research in HDFC Securities, what is the pulse that you are able to make out when you look at quarterly numbers? How have large caps, mid caps, small caps performed to your liking?
So numbers are more or less in line with the expectation. The expectations were that the large caps would generate some single-digit return. That has happened. I think around almost 800 companies which we have analyzed till now, about overall combined about 5% growth on the top line and about 7% kind of growth on the bottom line is there. So it's nothing great. Nifty companies also single-digit growth till now, and that's why we have seen that our markets have underperformed. The expectations are there that for the FY27, we are likely to end with about 12 to 14% growth. So that means for the remaining quarters, for the second quarter, third quarter, it is likely to be much better than what we had this quarter. And some of the concerns on the geopolitical side, higher crude oil prices, all these have been affecting the earnings. Those headwinds should reduce going forward, and market is trying to discount that. In fact, for the last 24 months, we have seen one reason or another affecting the earnings, and earnings growth has not been as per the market expectation. So we have already had a prolonged consolidation, and the hope is that from next quarter, all these headwinds will reduce, and that should help earnings pick up from here. The mid cap and small cap have announced better numbers, and that's why they have also performed compared to Nifty, as we see in the prices.
Okay. Devarshji, in the portfolio that HDFC Securities advises its clients, what are the major changes that have happened in these three segments, large, mid and small, based on Q1 earnings? What stocks have been taken out? Any that have added?
So the model portfolio changes will happen post the end of the quarterly season. What we have seen, the last changes which we made was that we were quite underweight on IT. That we have in our model portfolio made it market weight a few weeks back, and that is playing out well. That has worked out. We have been overweight on banking and financials, BFSI insurance companies. That has been helping. Defense is one of the other areas where we have exposure, and we continue to like that space. So those were the changes which we did, and post this end of the earnings season, post August 15th or so, then we'll maybe making a few changes, but banking and finance continue to attract the major weights.
Okay. Devarshji, when you say IT underweight has moved to market weight, have you added stocks or have you increased weightage to existing stocks? In either situation, what are the stocks that represent the IT sector at HDFC Securities portfolio?
So we have some IT stocks under coverage. These among the preferred stocks, technology side, Tech Mahindra, Coforge, and Persistent are the ones which we have coverage and where we have targets higher than the current market prices. And this is what we have recently recommended. We recently come out with a report on Tech Mahindra with a higher target. So these are some of the stocks which we prefer, not the top four, but the mid cap ITs likes of Persistent, Coforge, and Tech Mahindra. That's where we see opportunities in the market.
Okay. So you haven't increased the number of stocks, and the existing stocks is where you have raised the market weightage. Am I correct in that presumption?
Yeah, so primarily these are model portfolio stocks, and the one which I'm talking about is where we have come out with a fresh recommendation from our brokerage side. So that's where, so we have recommended buy on Tech Mahindra recently. Then that way, earlier we had recommended Persistent as one of our picks. So that's how we,
Fair point. So that takes care of IT. Now, banking, Devarshji, has been a disappointment, especially 4 out of the top 5 private sector banks plus the sector giant SBI. What do you think has gone wrong?
So it's not that it has gone wrong. The performance was more or less as per our expectation, supported by the credit growth. Credit growth was 15% compared to the deposit growth, which was much lower, and that is what we expected. The issue was that credit is higher compared to the deposit growth, and that is putting pressure on the NIMs, and NIMs were lower. But I think we have seen the last of it. The government measures on the FCNRB side, the allowing of ECBs, all this should start helping banks. There are some teething issues on the taxation side on the Gulf and UK and others. I think government will work on it, and hopefully in next few quarters we will get a lot of foreign flows coming in the form of all these deposit schemes, which will solve the deposit growth problem which banks has. And I think the balance sheet positioning is strong. We do not have any slippages or stress on the balance sheet side of the banks, formal banking system. Credit costs are going to remain contained. So there should be gradual recovery in coming quarters, and we continue to favor banks for the FY27. So I think this is an opportunity. Last few days, the stocks have not performed as per the market. So this is an opportunity to accumulate these large banks. I think banks should do well from here.
Okay. Devarshi, your wonderful call on small finance banks worked really well over the last 12 months or so. Utkarsh that you suggested, I think it was sub 30, 35, is now 72, fresh record high there. What are the sub-micro calls that a particular sector might have performed phenomenally well in Q1 have been generated by HDFC Securities?
So, Shailji, we will discuss individual stocks as and when we come out with new picks. I think it is the result season is going on, so we haven't come out with new picks recently. Some of the stocks which we have recommended as a part of our picks, Tech Mahindra we have discussed. We have gone bullish on some companies from IT sector which are beneficiary of this AI, using AI to improve their efficiencies in stocks like MPS and Sagility small cap stocks we have recommended. Jana Small Finance Bank we discussed last time. That was one of the picks which we discussed and did quite well, as you mentioned. Among the individual stocks or the sectors, we have taken a fresh view, positive view on paper and sugar. So we have come up with small individual ideas there also. It's not fair to discuss those names, but I think paper, sugar, we are waiting for this earnings season to get over, and once the appropriate prices are there, we will turn bullish on cement also. Cement is looking great to us. So these are some of the individual niche ideas which we can recommend to our investors.
Okay, fair point. So that's the broader structure of Dalal Street. One major event, Devarshi, that happened overnight was this FOMC decision to keep rates steady in the United States. There was a bit of a disconnect as well. Some members are actually looking for a rate hike. How do you explain this conundrum, and how is it likely to impact the risk on trade for equities globally?
Right. So, though we don't, as an equity investors, pay too much attention to this side, but I think it is very important, and there the transition is happening. Earlier, before the new chairman, Kevin Walsh, was appointed, there were expectations that he will come to the office and then he will talk about reducing the rates. What he has done is that he has stopped giving explicit guidance to the market that what is the likely course of the FOMC. So that's a complete departure from the earlier governors. And now we are seeing that rather than cutting rates, see, the expectation was that the US markets have done tremendously well based on the liquidity, based on the flows which was coming into the US markets. Now, for that to survive, we will need lower rates. Now, if there are murmurs of higher interest rates, that would create a lot of problem for US market, which in turn create problems for global markets. So there, out of 12 governors, I think 9 has voted for the keeping the interest rates same compared to the consensus earlier, but 3 have asked for higher rates. So that is a bit of a worry if eventually, and the reason being, see, Fed has an inflation target of 2%. Now, market is always expecting them to keep this target, but do not take action on it because the inflation has been running around 4% for the last 5 years. So this time, what he has said that there is no softer, higher target of 4%. They will try to bring the inflation back into the 2% range, which is that means that they will have to eventually raise rates, and if they increase the rates in September, that means the bond yields will also impact, and a lot of global funds borrow against US Treasury and create liquidity to invest in global markets. So by September, this could be a major thing. Global markets should start will also need to pay attention. Right now, it is not of a worry, but this trend from consensus, people are governors asking for a steady interest rate. Now, 3 has decided, and that number we need to keep an eye on.
Fair point. Devarshi, one broader view of the market which you see against this backdrop of renewed conflict in the Middle East, a rupee that's strengthening, a Nifty that refuses to fall, and the mean reversion working very ably in large parts of Asia. What does this broad structure of the market tell you about the next 3 months?
So, as you said, the last 24 months, Indian markets have had a lot of volatility, prolonged consolidation, and almost time-wise correction has happened because of the lot of uncertainties. Earlier, we had US trade-related uncertainty, energy prices have gone through the roof, and that has created a lot of disruptions in supply chain. So, and we know all these factors. Now, incrementally, I think these factors are receding, and that means we will see better earnings growth opportunity. Now, as this West Asian conflict has again restarted, so that may lead to again earning growth estimates being cut. But generally, we expect better earning growth in FY27 compared to FY26, and the remaining quarters should see that coming in. If that doesn't coming in, then the projections for Nifty earning growth will come under stress. I feel that we have seen the worst. Opportunities are now there as the volatility will start receding, the headwinds will start receding, and as we have seen, the flows from the MSCI side, flows from the global investor side should start improving as these conflict starts de-escalating. Those markets come back to their mean reversion, and Indian market should start attracting better capital. So better days are ahead, I think, unless obviously these things are dynamic, and if something new which is not on our horizon props up, I think better days are ahead for our market, especially the large cap and Nifty stocks.
Fine. On that very optimistic hope, Devarshi, will call it time. Large caps have, by and large, underperformed a very, very buoyant and outperforming mid and small cap space. Let's hope that this thought of yours, as also deep research, works out very well over the next 3, 6, 9, and 12 months. Thank you for your time. We look forward to catching up again.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our personal finance show, Money Today. And today we're going to be discussing on Tax Hack Simplified, our special edition where we focus on everything tax and ensure that that is simplified for you to, of course, deal with it much better. The tax season, of course, has come up with a flood of jargons for you. And Form 16, Form 26AS, AIS, TDS, TCS, standard deduction. There are so many jargons that are, of course, occupying your mind space right now, right ahead of filing your ITRs as well. And many taxpayers are hearing these terms for the first time, while those who hear every year also get confused, but do not fully understand what they mean, why they matter, and why missing these basics can actually lead to some ITR filing errors as well. Maybe attract some tax notices which we do not want you to attract as well, and even lead to paying more tax or fines than necessary too. So we are going to be decoding the top 10 taxation terms that every taxpayer must know, what they mean, why are they important, and how can they help you file your tax returns correctly and maximize your savings as well. We are going to be inviting Alok Agarwal, the partner at Deloitte India, to share with us more insights on that. Alok, good morning to you. Good to have you with us. I'm sure so many people always would come up to you and ask, why the tax terms are so complicated to understand. Before we decode individual terms for all our viewers, give us an understanding on why is it important for every taxpayer to at least understand these basic tax jargons instead of simply relying on a tax consultant or a filing portal before they go ahead and file their ITRs this season.
Good morning, Sakshi, and thanks for having me here. Yes, you're absolutely right. It's critical for taxpayers to be familiar with these terms in today's day and age, where it is the responsibility of every individual to ensure that the tax return that he or she is filing is accurate and complete. So rather than relying on, let's say, the Form 16 provided by the employer, and I will talk about what the Form 16 is, or the tax return prepared by his chartered accountant, some level of self-review is required to ensure that the person, the taxpayer, is fulfilling the compliance obligations accurately.
Absolutely. So let's go and understand about Form 16, since you mentioned that. To start off with, why is it, who issues it, and why is it considered the most important document for salaried taxpayers when they look at filing their taxes?
Sure. So for every salaried taxpayer, the Form 16 is the most important document at the year end to enable the employee to prepare the tax return. It basically summarizes the taxable salary paid during the relevant financial year. So let's say for the year ended March 31st, 2026, the employee would have got the Form 16 from the employer providing the details of the taxable salary. That would indicate the taxes deducted at source from that salary by the employer. It would indicate the exemptions considered by the employer to calculate the taxable salary. It would also indicate the deductions considered, and I will explain some of these in a moment. It will also provide the tax liability based on the taxable salary by the employer, which was considered for the purpose of doing the TDS, and we will talk about TDS as well. So the Form 16 is, you could say, a subset of the individual's tax return, but only to the extent of the salary paid by the employer to the employee.
Okay.
It may include other income, but that is a separate scenario. To avoid complicating the discussion, we will leave that scenario out.
Sure.
But assuming that the individual has nothing other than salary, all details were provided to the employer for the purpose of TDS, then you could say the Form 16 would be very close to the final tax return of the employee.
Fantastic. So in case you are a salaried employee and you do not have any other income source, it would suffice as the major document that you need to file your income tax return every year. So this is the major document that your CA will ask you, or if you're filing your taxes on your own, returns on your own on the ITR filing portal, then this is the document that you need to truly look at in detail. For all the exemptions, the employment, the employer's income that you have received, the deductions, all of that will be mentioned in this document, and that's what you need to start off with. Now, you did mention about TDS. So let's start off by understanding TDS and even TCS for that matter. Usually, this is where maximum confusion occurs for investors, that what is TDS, what is TCS, in what cases should one look at TDS, in what cases should one look at TCS. As a salaried employee, is the tax deducted at source different from TCS, and how would you advise investors to look at both?
Sure. So starting with TDS, which is the fundamental pillar of the Indian tax system, that stands for tax deducted at source. Now, as we discussed in the context of a salaried taxpayer, the employer would be deducting taxes on a monthly basis from the salary payments made to the employee. And that tax deducted at source from the employer is reflected on the Form 16 as we discussed. and the employee takes a credit of that TDS, the tax deducted at source, against the final tax liability. So the fundamental point to note is the tax deducted at source is not the final tax liability of the individual. It may be the same. It may be the same as we discussed, assuming the proper details were provided by the employee to the employer. The employer has actually calculated the tax liability properly. We cannot assume that is always the case. There may be errors. But assuming it is everything is perfect, then it may represent the final tax liability. But in principle, it is only the amount which is credited against the final tax liability at the time of filing the tax return. So there may be a delta or a difference or a balance which the employee will need to pay as self-assessment tax or as advance tax before the tax return is filed, and that would complete the full process in terms of discharging the annual tax liability.
Very important part here before we go on to TCS, just to clarify to all the viewers, there may be a lot of times that cases happen that people usually think that while the TDS has already been deducted from their own salaries, is there still a need to file the ITR? That's where a lot of confusion also happens for investors, that they believe that I have already paid the taxes right at the beginning and therefore I do not need to file the ITRs. How would you clarify that for our viewers?
Sure. So absolutely, the TDS deducted is only fulfilling the obligation under the law of the employer, or let's say the bank who's paying the interest on your fixed deposit. The TDS is not fulfilling the obligation that the taxpayer has under the Indian tax law. That obligation is to ensure that your tax liability is fully discharged and the tax return is filed by the deadline. Let's say for individuals, it is 31st of July, which is just around the corner. So the obligation of TDS does not extinguish the obligation of the taxpayer.
So let's now discuss the difference between TDS and TCS, and what are the instances where one has to look at TCS as well?
Sure. So TCS, or tax collected at source, is a relatively recent phenomena. You could say a few years as compared to TDS, which has been there for decades under the Indian tax laws. Tax collection at source, or TCS, let's say, can apply if you remit foreign exchange outside India, let's say for the purpose of education of your children, or you can buy a tour package at and you will be subject to TCS on that. So just to clarify the concept is that in order to track certain kinds of expenditure, the government has introduced the concept of TCS. That amount is not a cost to the individual, to the payer or the person who incurs this expenditure. That amount again represents a credit. Now, what happens is, let's say you have remitted 100 for the purpose of an overseas tour package. Let's assume that the TCS collected by the travel agent is 2, which means you are actually paying 102. 100 goes to the travel agent, 2 is the tax collected at source, and that 2 will represent a credit again against your tax liability. So under the Indian tax law, it is possible to actually provide details of this 2 rupees of TCS to your employer in order for the employer to consider that 2 of TCS as a credit again, and perhaps even reduce the amount of TDS which the employer is applying on the salary. So this is again a good system introduced by the government to ensure that you are not suffering a cash flow as an employee where the TCS amount is stuck till the time you get your tax refund after the year end, after filing the tax return. You can actually get a credit for the purpose of TDS as well. So I don't mean to make this very complicated, but to come back to the concept of TCS, it is you could say a system of advance tax from the individual's perspective. It is different from advance tax. It is applicable only on certain types of expenditure, as I mentioned. but it is a credit which will be applied against your final tax liability. So it is not a sunk cost.
Okay. Now let's come to two other forms that are often talked about when the ITR filing season starts. Yet at the same time, there's been a lot of confusion around them, and the taxpayers usually do not understand what is the importance of these forms, and why should one be aware of these forms as well. These two forms are 26AS and AIS as well. Often people know that it's said that you may not be aware of your own other income sources, but the government might know that better, and that's by way of some of these forms like AIS and 26AS. Give us an understanding of what are these forms all about.
Sure, Sakshi. So the government first had come up with the concept of 26AS, many years ago, where the idea was to have sort of an official communication between the tax authorities, the tax department, and the taxpayer to reflect the amount of taxes that are credited against that particular taxpayer, against that, to introduce another terminology, against that PAN number, the permanent account number of that taxpayer. So the idea is that at any point of time, the taxpayer should know what is the amount of taxes paid by him through various mechanisms, right? We spoke about TDS, we spoke about TCS. We will talk about advance tax in a moment. So all these amounts are then reflected on the 26AS. And this enables a taxpayer to know whether he or she still has a shortfall to fulfill the annual tax liability, so that that amount can be paid on a timely basis. And if, let's say, there is an overpayment already because you have more than adequate TDS amounts, TCS amounts to your credit, then you would have a tax refund, and therefore you don't need to pay any additional taxes, let's say by way of advance tax or self-assessment tax. So that is the objective of the Form 26AS, which was introduced by the government many years ago. Now that is slightly different from the annual information statement, the AIS, and there is another statement called the TIS, and I'll come to that as well. But the AIS is meant to be a summary of all the transactions relating to different types of income amounts of the taxpayer. Again, the idea is to communicate to the taxpayer that these are the amounts reported by your employer as far as salary payments are concerned. These are the amounts of bank interest reported by the bank as interest credited to the taxpayer. And similarly, let's say purchase of financial securities reported by the mutual funds to the tax department. So the idea is the individual can ensure that he or she does not miss out any of these transactions while filing the tax return. And at the same time, if there are some errors, then the individual should be correcting those errors on the AIS, which appear on the AIS on the tax portal, so that the government is aware that those are errors in the reporting by the different employers or banks, and the correct information is captured by the government to reconcile once the individual files his or her tax return. So that is what the AIS is, Sakshi.
Right. Talk to us about TIS and advance tax also that you've been talking about, and help us understand why should taxpayers also know about these aspects as well. With respect to advance tax, usually the confusion is whether salary taxpayers are liable to pay advance tax at all.
Yes, that's a good question. So advance tax is basically a mechanism of, again, collecting taxes by the government through the course of the financial year, so that the government's objectives in terms of revenue and cash flows are achieved, and the employees' tax obligations are also discharged through the year. So as far as salary is concerned, the employer has the obligation to deduct TDS on the entire salary. So if the employer has calculated the correct amount of TDS on the salary, then there will be no additional tax liability on the salary. But let's take an example of interest paid by banks on fixed deposits. So generally the norm is the bank would apply a 10% TDS on the interest paid on the fixed deposit. Of course, there are some thresholds up to which these TDS do not apply, but assuming the amounts of interest cross that threshold, then the bank would apply 10% TDS. Now, that does not mean that the individual's tax liability is fulfilled by that 10%. As we know, our tax liability may be as high as 30% depending on our income levels. And therefore, that balance amount between the tax liability, let's say at 30%, and the TDS at 10%, the balance, the difference of 20% in this example, very simplistically put, is required to be paid by the taxpayer through advance tax. Now, again, there are thresholds to ensure that very small amounts are not required to be paid through advance tax. But assuming the taxpayer's obligation is more than 10,000 rupees as far as this difference is concerned. So let's say my liability is coming to 1,50,000 rupees of tax, and my TDS done by the bank is only 50,000 rupees, right? Just to take an example. So there is a difference of 1 lakh rupees that I have to pay, and that 1 lakh should be paid by way of advance tax in 4 installments through the course of the year. So that is what advance tax is, and it is an independent obligation of the taxpayers apart from the TDS which may have been applied by the employer or by the bank.
And if you could explain both TIS and also standard deduction that confuses investors as well, how would you advise that?
Sure. So TIS is again a relatively new, report that the government has introduced for the benefit of the taxpayers. The idea of TIS is to kind of summarize the income amounts which are appearing in the AIS, the annual information statement, for the benefit of the taxpayers to prepare their tax return. So it kind of pulls everything together to kind of serve as a summary of, because one could have, let's say hundreds of transactions, let's say when it comes to sale of securities and mutual fund transactions. Now that is kind of summarized in the TIS, and depending on the option the individual chooses, this information would actually be auto-populated even in the tax return. So the TIS then becomes a very important source or the base on which the tax return is filed. Of course, the individual is required to review whether those amounts are correct and edit those amounts before filing the tax return. But in that sense, you could say that TIS is a summary, which is one step before the tax return is filed by the taxpayer, to serve as the easy, user-friendly summary of income amounts for the taxpayer to consider before he or she files a tax return.
Okay. Let's also talk about, usually people, the spaces that people are interested in and afraid of as well. One is tax notice or a tax demand, and the second one is a tax rebate. How do you advise on both these? One is a positive and one may not be.
Sure. So the rebate is a kind of a deduction from the tax liability. So let's say that my income from my employer, let's say the salary is 10 lakh rupees. Now, as we know, the government had introduced a big, had relaxed the tax slabs quite significantly recently, where up to 12 lakh rupees, I have no tax. And of course, you have a standard deduction as well on top of that. So in a case where my salary is 10 lakhs, now strictly speaking, as per the tax slabs, my basic exemption limit is, let's say, 4 lakhs. Now my salary is 10 lakhs, and therefore I'm not exempt as per the basic exemption limit. But the reason I do not have to pay tax is because of the rebate. So the rebate basically is a deduction from our tax liability, which is allowed only when I file the tax return. So just because I have let's say salary which is less than 12 lakhs, that does not mean I do not need to file a tax return. I do need to file a tax return. I need to calculate my tax liability and I need to claim the rebate. So the idea is the government still has visibility of the taxpayers and their income amounts. But in this situation, by claiming the rebate, I do not have any tax liability. I only need to file the tax return to report my income and tax amounts, my tax liability amount. But after claiming the rebate, the tax payable will be zero. So that is the important concept of rebate, where it is something which the taxpayer will be getting at the time of filing the tax return and should not assume that it is automatically allowed and therefore there is no need to file a tax return.
Absolutely. All right. The time is up. We could have gone on to discuss many more terms right here, but thank you so much, Alok, for breaking down a lot of these terminologies for our viewers, where investors usually get confused, taxpayers usually get confused as well. I hope that all of these jargons are somehow simplified for you after this conversation, and ensure that if you are leaving out on some, do go and check with your own chartered accountants, your financial advisors, in case you need to pay attention to any of the terms that we've talked about today. Thank you so much, Alok. Good to have you with us. And thanks a lot for sharing all these insights with our viewers. Viewers, we'll continue to get you more understanding on the taxation front. So stay tuned with us on to Money Today, which we come up with every weekday at 10:30 p.m. with a new topic on personal finance, so that all of your financial planning is done well in advance and properly. But stay tuned. Up next, coming up, more market coverage. Hello and welcome. You're watching our new show, Money Today, a personal finance show where we're going to be discussing today mutual funds ka funda. For decades, active mutual funds have been preferred choice for Indian investors. But over the last couple of years, we have actually seen a lot of passive investing through index funds and ETFs also gain significant traction thanks to lower costs and consistent benchmark linked returns that we've been seeing. So in case you are still confused about whether you should be looking at active funds or passive way of investing in the markets, we're going to be decoding everything that you need to know about active and passive funds, and how do fund managers decide their strategies in both of them, what are the expense ratios and the differences there, and how should you as an average investor be looking at the entire scenario. We have Pooja Binde, our certified financial planner, as an expert from PP Investments, joining in on the platform to decode the entire scenario for us. Pooja, warm welcome. Good morning to you. We'll start off with the basics. A lot of people keep asking you, I'm sure, that what exactly are active and passive mutual funds? What is the key difference there? And, the differences in the ways that these active and passive funds invest investors' money. So give us a broad sense, a simpler sense that a lot of our viewers can understand if they're just starting off with their mutual fund journey.
For having me on the show, and the mutual fund ka funda, as you said, active versus passive. I think the moment any investor or a viewer decides that okay, I want to start investing in mutual funds, there are many questions. Okay, first of all, which route, regular or direct? Then in active funds or passive mutual funds. So we're just simplifying it here.
Sure.
When we are investing in a mutual fund, we are investing in a bunch of stocks. That stocks are actually listed on a stock exchange, right? So that stock exchange is an index or a benchmark. We use these words to simplify that it's a benchmark or an index. So passive, as the name suggests, that it is passive in terms of the reaction or the strategy or the investment funda, you can say. Basically just replicating the index, whether it is a Nifty 50 or a BSE Sensex or
Okay.
Nifty 100, Nifty next 50. So whatever indexes or indices are there, it is just replicating that index as it is. The same proportion of stocks as in that index is replicated in an index fund. But when we are talking about active, as the name suggests, active. So, and when we know we've chosen a fund like a mutual fund which has a fund manager. So the fund manager role is actually, you can say active in active mutual funds, meaning it is their job to generate alpha or to generate more returns, beating the benchmark, meaning beating the index. So these are two clear differences between an active mutual fund and a passive mutual fund.
Fantastic. So active funds are those where you give your money to the fund manager, trust his instincts to select the stocks, on his own research, and maybe beat the benchmark or the index in which you are investing. Say for instance, if you can invest in an index fund like a Nifty index fund, which will only replicate the returns of the Nifty for you in your portfolio, but when you invest in top 200 stocks or top 50 stocks of the Nifty, then you in fact ask the fund manager to go by his instincts, select the stocks that he believes can also beat the Nifty returns. That in simple words is active versus passive. Is there a massive difference, Pooja, between the expense ratio and the kind of expenses investors have to incur in between both of these kind of funds, and should it be a factor to decide which one should one choose?
Yeah, so I would say in terms of expense ratio, because obviously in passive funds it is just the replica. Okay, so the expense ratio might be in the range of 0.05 to 0.5, something like that.
Okay.
But we are talking about active mutual funds because obviously the fund management cost and the expertise and everything is you can say also a part of the expense. So the expense that you can see in an active mutual fund can range from 1 to 2 to 2.5%, depending on the fund size, the AUM size, and everything. But when we are talking about deciding on the basis of expense ratio, I would not say that should be the only reason to decide कि चलो इसमें the expense is less, so let's go for this. Because you need to understand that if a fund manager is charging an X fee, okay, it is his job to generate alpha. So we need to see whether the fund manager is able to beat the benchmark returns in any active mutual fund while making selection. So again, when it boils down to the question, okay, then which should I invest? Then I would not say there is one direct answer that, okay, go for an active or go for a passive. I would say you should have a combination of both. When you are a first time investor, obviously there is some, even if when we do a risk analysis, there is still some doubts about investing in stock markets because, when you're seeing the value on daily basis, it's actually a very stressful.
The risk appetite is low.
Exactly. So a passive fund can bring that kind of the stability in an investor's mind that, okay, I'm following the index and whatever index, companies are there in the index are all big short companies. And, you don't have much of a difference there in terms of any kind of a, good selection of stock or a bad selection of stock. The only difference in the return of an index could be a tracking error, which word we use as tracking error, meaning it should actually replicate the index.
Index in terms of return.
Sometimes it might have a little tracking error. Maybe the fund manager might decide to hold a little bit in cash, so that could be the only tracking error. But when it comes to active fund management, there has to be a massive difference in terms of return generation, because if you're paying an additional fee to invest in an active mutual fund, it has to generate that returns. And we have seen there are funds, there are categories wherein time and again, whenever we do a selection of which mutual fund to invest, it is always the first thing we see is whether it is beating the benchmark. So definitely, I think a combination of two, Sakshi, would work.
Absolutely. Let's talk about the big debate that comes around returns. Do active funds consistently outperform passive funds, or does the data tell a different story? Or are there particular markets where each of these funds perform better? Give us an understanding there, Pooja.
Yeah. So when I'm talking about returns, now I'm just giving you an example. Say, for example, Nifty 50 is, generating, this is an example, generating a 12%. Okay. Now, when we are investing in a passive, Nifty 50 index fund, the same 50 companies, everything same. But as I told you, there is a little bit of tracking error. So the return expectation would be in the range of 11.8 or, 11.6 or something like that. But when we are talking about an active large cap fund, which is in comparison to a Nifty 50, then the fund manager might go, overweight on stocks like banking or, defense or IT, manufacturing, and underweight on others, depending on what he thinks is, the momentum, or, whatever is the current trend, or whatever is the valuation of the company, everything, the P ratio, everything comes into consideration while making a stock selection. So if the calls go right, the fund can generate maybe 14, 15% return. But if the calls don't work, it might go down to 9 to 10%. So this is the risk of 2% plus or 2% minus that we can expect in an active mutual fund, according to me. And to conclude this particular answer, I would say, when we talk about categories, Sakshi, like large cap, mid cap, and small cap, major so happens that passive funds have outperformed large cap category, because there's not much scope in large cap in terms of stock selection. You see,
okay,
when it comes to mid cap and small cap, there is a lot of playground, you can say. There is a lot of stock pick, the have to have an overweight in particular stock, and to actually display the expertise of the fund manager in these categories. So we see, if you see a ratio, more than 85% active small caps or mid caps have outperformed their benchmark. If you see in 5 year or 7 year rolling periods, this is I'm talking about SIP. And in passive, when we are talking about large cap category, only 19% has beaten the benchmark in 5 year rolling SIP period. So this data clearly states that when we are making a 4 or 5 fund portfolio, instead of an active large cap, we can have a index, a Nifty 50, or a Sensex, or Nifty 100 kind of a indice in that particular area. And when we're talking about mid cap and small cap, you can opt for an active fund management style over there. Is what I feel we should be ideally doing.
Okay. Are there, like I was asking, are there any specific market conditions where active funds have a clear advantage and where passive funds tend to do better? If you could help us understand, say for instance, last 2 years, we are talking about constantly how the Nifty has given just near zero returns to investors. So in this kind of a market, when external environment has been overpowering, when foreign investors have stayed away, in this kind of a market, do you think active funds perform better?
I think so, because the fund manager can clearly make a decision in terms of which sector would perform in this kind of a market. When you're talking about 2 years, wherein Nifty has hardly given any returns, but we do have certain active funds. Now, in this active fund, maybe not a small cap kind of a category, but you can also opt for a multi-asset category, or you can maybe opt for a multi-cap category where the fund manager has option to have large cap, mid cap, small cap, and the proportion selection. Like for say, in multi asset, the proportion in terms of a commodity in that particular portfolio, or in when you're talking about multi cap, more proportion to mid cap. So I would say a flexi cap, multi cap, multi asset, these categories would work well in an active fund, as I mentioned before. But when you're talking about market cycle, there's one more thing I would also want to highlight here, Sakshi, is when we are talking about cycles and the fund styles, there are few fund styles also which needs to be considered, wherein we are talking about whether momentum style or quality style, or for that matter value style, or maybe low volatility kind of strategy. So these kind of options we have in the index funds, wherein the investor can decide in terms of what market cycle am I right now. Say for example, if it's a growing market, it's clearly momentum style, which we all know, or a growth style,
Right.
wherein even if in that kind of a market, a passive might definitely give returns because it's a growing market, a bull market, correct?
Correct.
When we are talking about a bear market, or the funds are not performing well, a value kind of strategy works here to pick which kind of stocks or which is a good valuation right now in this kind of a market. I think
Sure.
active will perform
Tend to
better.
outperform.
Yes, because the fund manager has the expertise at this point, wherein which is the stock or which is the particular sector that he is more positive on, which will perform in this kind of a market. And when it is a volatile market, obviously a mix of portfolio works. So I think there's a clear discrimination here when we are talking about active, passive, and the cycles here. It's just that for an investor, to make it a little simple, I think, 5 funds that you are having in your portfolio, you can have 2 passive and
Okay.
3 active. And at the same time, it should cover a broader base market, which we always talk about, which is, mid cap, small cap, large cap.
Fantastic. This is
Yeah.
what I was actually coming to, Pooja, that when you said initially that there should be a combination of both active and passive for every investor to be able to have both kinds of benefits in their portfolios. And when you say have 2 passive and 3 active, how should one be going about deciding what kind of categories of passive funds and what kind of categories of active funds should one have in their portfolio? So if you could break it down for say young investors who are starting off their investments, or maybe who have just started off in last couple of years, how should they be deciding that whether their entire portfolio is well diversified in terms of both active and passive funds?
Very nice. So Sakshi, this is a very common question when young investors start investing, and there is a lot of confusion, because if you see why this is important, or why to have this understanding is important.
आप इतना मेरे को टाइम दे रहे, धन्यवाद करने के बाद इंटरफियर कर रहे उनको। सर, आप भी सुनने लायक है, आपको भी सुनना जरूरी है, क्योंकि आप
I can give you more time also, but you don't like late night speeches. That's why I want to curtail you.
सर 1 मिनट सर, अरे उस विधायक की बात ही कर रहा हूँ, हर चीज आपको बताया, नंबर बताया, टीचर्स के नंबर बताया, सिलेबस बताया, और एक बात बता दो, आप शिक्षा में सुधार लाना चाहिए, सबको समान और न्यायपूर्ण शिक्षा देंगे, और आपका ये भी कहना है कि जो विश्वविद्यालय है उसमें अच्छे अच्छे टीचर्स डालना है, अच्छे वाइस चांसलर आना है, लेकिन उसमें ये भी आ रहा है, सिलेबस जो बदल रहे हैं आप, उसमें ये भी आ रहा है, ये क्या है, शूद्र के वेद पाठ सुनने पर शीशे और जस्ते से उनके कान भर दिए जाए, वेद के अक्षर का उच्चारण करने से, सर, वेद के अक्षर का उच्चारण करने पर उसकी जीभ काट ली जाए तथा वेद मंत्र धारण करने पर उसका शरीर काट डालना चाहिए। ये इसमें लिखा हुआ है, इसमें लिखा हुआ है, इसमें लिखा हुआ है।
Mallikarjun Kharge ji, Manusmriti has to do with this bill anything? No, whether this Manusmriti is having anything to do with this bill?
RSS syllabus. This is coming in the university. High school. All good. Sir,
please conclude your speech, please.
मैं आपसे
Please take your seat. I'm going to call. Please take your seat. Please. Yes, I understand. You please take your seat. Madam, please take your seat.
हटाया जाए और
Please conclude.
सर मैं आपसे हाँ
Please conclude your speech, please. I'm coming to him. Please. You take your seat. I am coming to him. No, I am coming to him. You please take. No. You please take your seat. I am going to call. This is not correct. I am going to call the leader of the house. You please take your seat. I am going to call the leader of the house. You please take your seat. I am going to call him.
आज के आधुनिक युग में रखने वाले भी हमें दिखते हैं उनके पैरों का दुनिया क्या सोचती होगी सभापति जी यूपीए सरकार ने हर
leader of the house. You please take your seat. I am going to call him now. You please take your seat.
ले रहे हैं
Please conclude.
सोनिया गांधी जी के
जी प्लीज
तो यूपीए सरकार ने कंपलसरी एजुकेशन के लिए और राइट टू एजुकेशन के लिए
you are a minister. You please take your seat. I am going to call you. I am going to call the leader of the house. You please take your seat. Kharge ji, please conclude. Please conclude.
आप ऐसे सोच वालों को निकालना चाहिए सभापति जी यूपीए सरकार ने हर नागरिक को शिक्षा का अधिकार दिया लेकिन ये लोग अधिकार छीन ले रहे हैं और मैं
Please conclude. Kharge ji, please conclude. Now already 15 minutes.
तुम्हारे वजह से खराब हो रहा बच्चों को सीखने के बजाय पास होने
मल्लिकार्जुन खड़गे जी ने दिया है। You should go back to your seat. नहीं, माननीय विपक्ष के नेता ने I control them why you are not I asked them to sit. I asked them to sit. You all go back. No, you all go back. You all go back to your seat. I asked them to sit. I asked them to sit. Why you are shouting? When your leader is speaking also you are shouting.
सभापति जी
जो अभी वक्तव्य लीडर ऑफ द ऑपोजिशन माननीय मल्लिकार्जुन खड़गे जी ने दिया है, उस वक्तव्य से समाज में एक विद्वेष की भावना पैदा होती है और अशांति का भी वातावरण प्रतिपादित होता है। जयराम जी, you please listen to him. अशांति का again, why you are worried? No, this is not correct. अशांति का no, Jayram ji, this is not correct. When the LOP was speaking, I asked them to sit. When the leader of the house is speaking, you should listen to him. अशांति का वातावरण पैदा होता है। हम सब लोग जिम्मेवार सदस्य हैं। मेरा निवेदन है कि जो उन्होंने कहा है, जहां तक मेरी पूरी जानकारी है, ये तथ्यों से परे है और मनुस्मृति का ओरिजिनल टेक्स्ट उसको ऑथेंटिकेट करे। ये ओरिजिनल नहीं है। ये मैं निवेदन करूंगा इस पर प्रकाश डालने के लिए सुधांशु जी 2 मिनट बोले। सर, माननीय नेता प्रतिपक्ष ने जो विषय रखा है, मैं यहाँ एकदम ऑब्जेक्टिव। सर सुनिए, आप सुधांशु जी, we will look into it. No, sir. One minute. Listen to me. 1 minute. Listen to me. If he is not authenticating that book, whatever he said about Manusmriti.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, with me Shell Bhatnagar, and we are here to share with you all the action on the closing space as far as the D Street is concerned. We're holding up comfortably above 24,312 mark, although the gains are just limited to 63 odd points, but it's panned out to be a decent trading session. Look at the last 15 minutes or so. We've seen further sectors also contributing to the gains. Shell, beyond IT now, I'm seeing even auto sector, oil and gas contributing to the gains as well. We're looking at infrastructure. Metals also shine bright at this point in time. The going has been strong.
Well, absolutely right, Sakshi. And this is the mean reversion trade that is working in favor of India. You see carnage, bloodletting, and virtually, a setting up of anti-suicide calls in South Korean markets, where a massive fall has happened over the last 1 week, only 18% lower on Kospi. Similar falls, if not more, being seen in Taiwan and South Korea. So all that is benefiting Indian markets. Yesterday's FII number was 2,931 crores. Today it should be better. And this is the 4th day of gains. And Sakshi, more importantly, we are now negotiating the 200-day moving average. Remember, it was 2nd of March 2026 when the Nifty fell below 200-day moving average, and it is almost 2nd of August, which is 8 minus 3, 5 months where we've spent below 200-day moving average. So let's see what happens.
And foreign investors Also, last 4-5 months or they have sold about 2.5 lakh crore rupees worth in Indian stock markets, and they are now returning to this street. It's domestic IT names, or India, which has so far been ignored because of lack of AI tech names, is now being looked at because of the sort of bubble being talked about in the markets that you are talking about already, with the vertical rally that we've seen in some of these markets already. Let's look at the fundamentals that are powering the move today. We have a lot of earnings-led names. M&M to start off with 2% rally. It's the top mover on the Nifty today. Strong earnings that have come in, strong volumes that have aided a 23% revenue growth, and this is despite the margin contraction that the stock is also up even now. Both overall and automotive volumes, however, have been also seen some kind of a pressure at this point in time. But what is really pulled up the stock in terms of is of top line. As far as the bottom line is also concerned, that's also improved. We've seen EBITDA during the quarter also 4.5% higher, although we've seen commodity headwinds and the higher mix of electric vehicles turning out to be a drag on the margins this time around. Remains to be seen how the stock is going to be panning out. Auto sector is now pulling up to the day's high point as well. Shell.
Yes, Sakshi, absolutely right. The top three gainers on the F&O space are futures from Sona Comstar. This is a very well-known EV auto ancillary play. Hero Motors 3.5% higher, and TVS Motors. Apart from that, if you drill down, you have M&M, something that you've already marked, and of course the all-time highs. I'll very quickly mark them. Nestle, Marico, Apollo Hospitals, Sun Pharma, Divi's, Loris, and Radico.
Absolutely. We'll take a breaking news coming in on your screens, viewers. This is with respect to ethanol, and Union Minister Nitin Gadkari has informed the Lok Sabha today that without ethanol blending, the petrol prices in India could have touched 125 rupees per litre during the recent West Asia crisis. That's the centre's claim in Parliament while defending the E20 fuel program. The government has also said that over 23 vehicles are already running on higher ethanol blends without any verified evidence of widespread engine failures, adding that the program has also helped save 1.98 lakh crores in foreign exchange, is what Nitin Gadkari has said. He's defended the ethanol blending. He's talked about how without this blending, the prices for common citizens would have been as high as 125 rupees per litre there as well. But sugar space for you, Michelle, how are you looking at this entire space? Because ethanol blending is being defended by the government. More and more higher ethanol blends is what do we expect going forward from here. E85, E100 is being talked about as well. That is being in the tested phase and will come in soon as well. Will it truly meaningfully impact the sugar companies at large?
Well, Sakshi, let's just say that sugar, which was a very cyclical structure, because of the underlying ethanol story, has become a little more predictable. Apart from that, you see the government possibly clamping down on sugar exports for whatever domestic reasons that we may have to curb inflation to keep domestic supplies afloat. So definitely ethanol has added a layer of predictability to what was a very, very temperamental kind of a sector. But even then, I would just limit myself to the top two players, which is Balrampur Chini and Triveni Engineering. Apart from that, not really much.
Let's shift focus to a lot of stocks that are buzzing on the back of results that are being posted right now. Vedanta Aluminium Q1 results have come in, viewers. Net profit is 3 times basis, now coming in at 5,629 crores. There's also an 8 rupee per share dividend that has been declared as well. The company posted this jump as far as Q1 profit is concerned. Revenue has jumped by 46%. Look at the stock, it's up by 4% at 457 rupees at this point in time. The revenue has come in at 21,393 crores in the first quarterly earnings. Remember, this is right after the demerger has happened and the company has been listed as a separate entity, and the maiden quarter that has come in is pretty strong for the company. Also, a maiden interim dividend right in the first quarter earnings of 8 rupees per share is being also talked about. Strong earnings there for Vedanta Aluminium, and these stocks have not disappointed since the time the demerger has happened. All of the companies have actually been on an uptrend since the time they have been listed, Shell.
Absolutely. Sakshi, one important thing that's happening in favor of Vedanta Aluminium is this renewed hostility in the Mid East, plus this threat of shutting down the other Red Sea corridor. That is a very, very big plus for Vedanta and for aluminium in general.
Absolutely. Let's take another breaking news that's coming in, and this is with respect to the telecom space. We are hearing that the big booster is coming in for Madhya Pradesh's telecom manufacturing zone. Top firms are likely to invest in Madhya Pradesh. TMZ is what we are given to understand, including Dixon, HFCL, Sirma SGS are among the first phase investors. Sources are also telling Business Today Television that the telecom firms are likely to invest nearly 2,000 crores in Gwalior, is what these reports are indicating to us. Aishwarya Patil is joining in with more details on the same. Aishwarya, give us an understanding on what does it mean for, of course, the telecom space at large, and some of these companies have already talked about Dixon, HFCL, Sirma SGS, they are all in focus of late because of strong numbers also some of them have posted. How are you looking at what's going forward?
Well, as you rightly mentioned, we are hearing from our sources that a telecom manufacturing zone will be set up in Gwalior. About 2,000 crore to 2,100 crore will be invested by some of these, top names in the manufacturing space. HFCL, which is predominantly a telecom player. We also have Dixon Technologies, which usually does the white goods and electronics manufacturing, but here's a little bit of a expansion, you could say, to their portfolio. This would be a B2B space telecom as far as telecom manufacturing is concerned. A little bit of a change there for Dixon Technologies. Apart from that, there are some MSMEs also involved, which include Sirma SGS, Enware, and few other companies who will be investing in this project in Madhya Pradesh. Minister Jyotiraditya Scindia, who holds the portfolio for telecommunication, had said yesterday that this is just a phase one, and he will be making in just a couple of hours from now an announcement related to an MOU between the Department of Telecommunications as well as the government of Madhya Pradesh, and all of these key players will be setting up the phase one of the manufacturing, telecom manufacturing and equipment manufacturing for the telcos as well in the phase one in Madhya Pradesh. Back to you.
Thanks, Aishwarya, for getting us those details. Booster shot for Madhya Pradesh as a state getting in more manufacturing units from some of these major telecom and telecom ancillary related companies that have vouched to invest somewhere around 2,000 crores in Gwalior to set up their manufacturing units in the phase one itself. We'll shift focus now to the FMCG space, particularly why? Because the Food Safety and Standards Authority of India has, cracked down on the use of energy drink label. That has sparked fresh concerns across the beverage industry, viewers. Distributors are reportedly refusing to lift the existing stock right now, leading to shortages of several popular brands at retail outlets. Companies are seeking more time to comply, but the regulator has so far declined. Let's go across to my colleague Mustafa Sheikh, who's joining in with more details on the same. First up, Mustafa, give us an understanding of which are these brands that are facing the shortages, on which the crackdown has happened from the FSSAI. What is the crackdown really about, and why have the companies asked for more timeline to comply? All right, okay. I think we couldn't go across to Mustafa because of the line getting cut there, but that's an important update coming in from the FMCG space. We'll wait by and see if he joins back again, and we'll get you more details on the same. Meanwhile, viewers, 3 minutes to go. Let me go back to Shell. Shell, what are you spotting in the markets? What else is interesting towards the end of the session?
Well, Sakshi, it's the day's high on the Nifty, which essentially means that tomorrow you will have pent-up buying as well. Now, two important things. Tomorrow is the 31st of the month, which essentially means that a lot of NAV work will also be done by mutual funds. If we are by chance able to cross this very important hurdle of, almost 24, let's just say 24,400, then we'll have a very nice weekly close above 200 DMA, monthly close, and of course daily close above 200 DMA. That's something to be looked forward to tomorrow. But as they say, good times are rolling, and it's quite a while since they came in. It's the rupee, 5th day of gains as far as the dollar rate is concerned, and it's also the FCNRB deposits which are working their magic, Sakshi.
Absolutely. Last 1 minute to go before the markets shut shop for the day. But we are looking at across the board strong gains that are coming in onto the markets. You're looking at, of course, the auto space leading the pack with 1.7% gains on the Nifty. Oil and gas follows, 0.3% of a rally here. Infrastructure, IT, PSU banks and metals are the ones that have gained in the session today. On the losing side, real estate now 2% lower in the session. Mid and small caps have also lost some further ground. You can see almost a 0.5% decline there. The pharma index and the FMCG index also closed with just about minor losses in the session today. M&M tops the charts on the Nifty. Coal India follows. You have Tata Motors, passenger vehicles, Wipro, Eicher Motors, Maruti, so many of the stocks from the auto pack that are among the top 5-7 movers on the Nifty. On the declining side, Adani Ports. Remember, the earnings had come in, and thereafter we have seen 3.5% of a decline. HDFC Life, Shriram Finance, Jio Financial Services and Indigo are yet again on the losing ground. You can see about a 1% loss there. But let's also focus on the debut stock today, Indo MIM, clearly the star of the show. 53% of a rally coming in after that 45% of a premium listing today. Very smart gains, and of course very few viewers and investors, lucky investors, get to rejoice that listing gain there. SML Mahindra, that is SML Isuzu, that was taken up by Mahindra, also up by 20% in the session today. Another debut stock, Lohia Corp, also up by 16%. Again, a strong debut stock performance in the session today. You're also looking at Balkrishna Industries, again post earnings, 11% higher. That's another stock that has gone up today. A to Z Infra, another one that is pulled up. Reddington has pulled up after the earnings, almost 8% higher. Sona BLW Precision Forgings, about 6.5% higher. Those are some of the big movers in the broader market shell.
Yes, actually, on SML Mahindra, I think this is the transfer of a couple of divisions from parent Mahindra that's worked up really well. So it's a 20% circuit. SML Mahindra buys Mahindra's truck and bus division. That's a very, very big plus for parent Mahindra as well, which you pointed out early was rising. Remember, the all-time high on Mahindra and Mahindra is fairly a long distance away, and the drag that was the bus and truck business has now disappeared. This will ensure that parent M&M is now more or less a SUV kind of a company, including tractors, and that's a very, very big plus for retail shareholders. We've seen a high of 3847 somewhere in early part of Jan, and now this July close is a positive 7%. Sakshi.
Absolutely. So the markets have shut shop, viewers. Very strong close, 24,317, 67 points higher. Remains to be seen. We've been in this range, remember, for a long time, 24,300 on the higher side to about 23,800 on the lower side. Let's see whether we can sustainably now come up. As Shell pointed out, good times are ahead, and we are looking at both foreign flow and domestic earnings also improve for the better. That's attracting a lot of investor sentiment. And of course, the second half of the calendar year, which brings in more festivities. So maybe all of that cheer will align well for the market sentiments ahead. Thank you so much, viewers, for joining us on this special broadcast. But stay tuned on to Business Today as we continue to get you more insights from the world of business and finance right after the markets coverage.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
आराम से आराम से। हाँ। सामान देना भैया।
अब आगे क्या करना है? वो पिट्टू की पर्ची में देखो ना।
पर्ची?
देखो कहाँ गई पर्ची?
मैंने।
नमस्ते
जी।
हाँ, मुझे पता है वो पर्ची में क्या लिखा होता है। आप चलिए मेरे साथ। व्हील चेयर। पर्ची में ये तो लिखा ही होगा कि सीधे फ्लाइट में नहीं चढ़ना है, थोड़ा घूम के जाना है। अब पर्ची में शॉपिंग की बात तो जरूर लिखी होती है। थोड़ी पेट पूजा की बात कोई पर्ची में ना लिखे, ऐसा हो सकता है? टिफिन लाए।
थैंक यू।
अरे पर्ची मिल गई।
पर्ची में तो ये सब लिखा ही नहीं था।
हम है ना आपकी पर्ची।
भीड़ में जो थाम ले।
सिर्फ वर्ल्ड क्लास एयरपोर्ट्स नहीं चलाते हैं, आपके सफर में हम सफर बन जाते हैं। अदानी, हम करके दिखाते हैं।
India is a land of dreams. A land that gives you hope and wings to turn your dreams into reality. Our dreams define us, what we are, and what we want to be. They make us phenomenal. We are KPT Piping Systems, and we dream with a vision. A vision to make our people more healthy and prosperous. Our vision gives us a purpose, a direction, and passion to operate to outer limits of our potential. We don't make just pipes. We make 100% food grade certified PPR pipes. Our diversified range of products are making this world a better and healthier place to live. Our pipes transfer water and fluids safely at all extreme temperatures to your hospitals, schools, and all other important businesses. And we love doing this every day, every minute, every second. This is what makes KPT an exceptional. We are builders of a new future. A future that is bright and promising for everyone. We are proud members of prestigious organizations like FIIs, CII, and EEPC India. We have bagged some of the eminent business awards, and we are the ones that inspire ourselves. Our partnership is focused to improve the future of real estate, energy, railways, aviation, and healthcare. Our research teams are creating the products that no one saw coming. Our meticulously designed plumbing solutions are changing the world. Our products have cut down the maintenance costs of our clients by millions. Today we have a long list of corporate giants who have joined hands with us and are using our products. We have delivered more than 6,000 projects worldwide.
I call my grandfather Bauji, and he is a role model to me. He is always advised that if you are making the life of people healthy and convenient, then you are successful. We as a company and as a family believe in the same value system. The products that we make reflect our values. Humanity is our priority.
We are working with Indian government to achieve their vision and mission. We are executing massive projects like Jal Jeevan Mission, Assam, Rajasthan, and Karnataka. Our products are building a better and stronger Indian railways. And we are proudly associated with Indian Military Engineering Services, a business that is focused on welfare of humanity. Our motive is to uplift the quality of life for people, communities, and planet. We simplify. We perfect. We are KPT Piping Systems, a new generation pipes. Smart pipes for a smart future.
India today is a 346 lakh crore rupee economy, the fourth largest in the world, the fastest growing major economy. 10 years ago, 125. By 2028, the third largest, 12.2 lakh crore rupees of public capital expenditure this year, 6 times what we spent a decade ago. Highways at 34 kilometers a day, 1,46,000 kilometers and counting. Airports doubled. Port capacity doubled. And a 111 lakh crore rupee national infrastructure pipeline. But here is the truth every builder knows. Infrastructure and law are not two industries. They are one system. A port is a concession agreement before it is a berth. A highway is a land title before it is tarmac. A power plant is a purchase agreement before it is a megawatt. Nearly 70% of the national pipeline, energy, roads, rail, urban, sits in the most contract-intensive sectors of the economy. Investors do not simply fund projects. They fund enforceable contracts. In the road sector alone, 88,000 crore rupees of claims in 5 years. How fast the law resolves them decides how cheap the next kilometer is built. This is the work we do at White and Brief every day. Before a project breaks ground, land acquisition, title diligence, right of way. We de-risk the ground itself through construction, concession agreements, EPC contracts, power purchase agreements, financing. And when disputes come, tender challenges, bank guarantees, delay claims, arbitration, enforcement, and full service beyond litigation, corporate, finance, real estate, tax, regulatory. One firm, the entire life of a project. Practical, timely, aligned to your business. And the opportunity is only widening. A legal market past 30,000 crore, with arbitrations once bound for Singapore, now seated in Mumbai. India's law firms are ready. We are already there. As legal partner to the Adani Business Today Infrastructure Leadership Summit, we stand with the largest private builder of Indian infrastructure, a group we have had the privilege of working with these past several years. 1.53 lakh crore rupees of capital expenditure last year, the largest by any Indian corporate group, and a 9 lakh crore rupee program for the years ahead. Infrastructure builds the future. Law gives it a backbone. Governance, certainty, trust. Thank you.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our special edition where we are going to be focusing on the upcoming IPO. Manipal Health is among India's largest private hospital operators and its IPO is now going to be launching next week for all the subscribers. It will definitely rank among the country's biggest healthcare listings in recent years that we've also seen. It's a 9,200 crore rupees, a little over that kind of an IPO that is coming in.